Very good morning to each and everyone. So hope all of you are absolutely fine and ready for this class. So right from morning till evening, of course it's very hard to listen, and of course it's for you to listen. No? Fine. So totally we are having around 9 to 10 chapters. I mean to tell, if partnership is divided into 1 and 2, then we will be having 10 chapters. So let's try to revise each and every chapter, and let's try to cover the different adjustments and difficult adjustments of some problems. So first of all, our class will be in such a style like we'll be explaining the overall concept to you, and after explaining the overall concept, some things to solve the problems, and after that we are going to the problems, like some sort of different aspects will be there in each and every problem, right? 1 or 2 different adjustments or something like that. So we are going to cover those adjustments wherein each chapter will be completed. So in the first session, that is from 8:30 to 10:30, let's cover the chapters of internal reconstruction, which is one of the easiest chapter, right? Internal reconstruction and liquidation. Of course, 2 chapters are very easy, but let's try to cover these 2 chapters in the first session. I mean to tell you something like, let's boost up our results with some easier topics. Fine. So let me start with the first one. That's all about your internal reconstruction. Sir, it's recommended to write any points that you have encountered with which are helpful to you to solve the problems. Take care. Here we are explaining the overall view of the chapter. Of course, it's impossible to explain each and every point in the chapter or something like that. So we are just going with the view of the chapter, and we are just going with some typical sort of the things. So the first thing is all about internal reconstruction. So whenever you observe the word something like internal reconstruction, the first word is all about internal and the second word is all about reconstruction. Sir, what do you mean by reconstruction? For your kind information, my dear children, in a very layman language, reconstruction is nothing but rebuilding. Reconstruction is nothing but rebuilding. And one more thing that I would like to tell, if you speak technically, reconstruction is nothing but reorganizing. So reconstruction is nothing but, technically speaking, reorganizing. On a common sense, as a layman language, if you speak, it is something like rebuilding. Then what should be rebuilded out, sir? Or what should be reorganized? For your kind information, let's think about a common building first of all. Normal oka building teeskondi. You just wanted to renovate the building. How is it possible to renovate the building? Of course, you are having 2 options. Option number 1, dismantle the old building and construct a new building. That is option number 1. And coming to option number 2, you just hold the existing building and you just do some magics to the existing building. I mean to tell something like, take an existing building and just renovate the existing building. So if you observe the first one, 2 things were involved. Number 1 is demolishing the old building. Number 2 is like constructing a new building. Wherein I would try to tell it in a different way, something like, existing old company will be closed and new company will be formed. Whereas if you come to the second thing, you're just taking the existing building and you're just remodeling it out. You're just renovating it out. Something like, I would like to tell it in another way, take the existing company and just modify or reorganize the existing company itself. If you observe the first thing, old company closed and new company formed, which is literally nothing but external reconstruction. If you come to the second slot, you're just taking the existing building, that is like existing company, and you're just doing some sort of adjustments and reorganizing to the existing company itself, which is nothing but your internal reconstruction. So external reconstruction is purely similar to your amalgamation, and we are going to discuss then. That is like at the time of telling amalgamation, we are going to deal with this external reconstruction. But now we are going with the concept of internal reconstruction. So now, internal reconstruction. Reorganizing existing company internally, in the sense no external person will be involved, no new company will be involved, no new management will be involved. Everything is directly done by the existing old company itself, which is literally called as your internal reconstruction. Then first of all, sir, like why this internal reconstruction has to be done? If you observe, say for example, let's take a balance sheet, something like wherein we are having share capital, reserves and surplus, outside liabilities, fixed assets, current assets, miscellaneous assets, or in our literal language, fictitious assets. See, like, I would like to tell this fictitious asset is something like some sort of huge loss, which is nothing but fictitious assets. Share capital, as you all people know, reserves and surplus is nothing but profits. Outside liabilities, to whom we have to settle, fixed assets and current assets, something like the assets that were being in the business concern. First and foremost reason, as like all we people generally know, that internal reconstruction will be done in order to wipe off the losses. That is what the common thing that everybody's mind will be striked out. Just balance. If you, if you have taken the questions that were being given in our material or even an ICAI material, you will be observing in each and every question P&L loss. Thereby, even when the theory is being told by the teacher, but while doing the problem, you'll forget every theory, right? So while doing the problem, you will be having only one sort of thing, that in each and every problem you're having P&L loss. Huge loss will be incurred. Miscellaneous assets were there, due to which we will be coming to a conclusion that internal reconstruction has to be done whenever there is huge loss. But remember, my dear children, it is just one of the reasons. It is just one of the reasons, like to do internal reconstruction, if a company is having huge loss, it will do internal reconstruction. But remember, my dear children, I have a point here, something like, if you take a large scale company, initially, if you take any large scale company, it will be incurring losses itself. It will not be having profits at any cost. If you take something like company like Visakhapatnam steel plant, or something like BHPV, or petroleum companies, hard companies, large scale economies companies. If you observe all those companies, my dear children, all those companies initially will be incurring losses itself. And for your kind information, Visakhapatnam steel plant, around for the first 7 to 10 years, it had incurred with heavy losses itself. Because if it is a large scale company, we will be investing crores and crores of rupees. How is it possible to get the profits in the immediate first year? It's highly impossible. So, will we go for reconstruction immediately, even for the new company also? No, it's not like that. On an initial stage, a large scale company gets the losses. It's not the major point. Then what is a major point that we need to understand here, sir? Take care, my dear children. If it is an existing company, runs for a better thing up to some stage, and after that, due to market competition, or due to some inherent disadvantages, or due to management problems, or due to supplier problems, or even due to customer problems, for whatsoever the reason is, if a company is incurring with continuous losses, then it is recommended the company to reorganize or to reconstruct. So one of the reasons is something like to wipe out the losses if there are huge losses in the company. That is one of the reasons. And moving on to the next reason, say for example, fixed assets and current assets were shown in the books of accounts, something like rupees 10 lakhs. So now we have gone to the market and we are just inquiring, how much assets do my fixed assets will be, how much amount do my fixed assets will be fetching? We have gone to the market, we are having a plant and machinery like a big oil rig or a big plant and machinery we are having. So we have gone to the market for inquiry so as to know the realizable value, and hardly it is been around 1.5 lakh. And hardly it is been around 1.5 lakh. Just answer, my dear children, if it is 1.5 lakh, wherein we are showing in our books of accounts at rupees 10 lakhs. Is it a good thing? Obviously not. We are showing in our books of accounts that it will be having around rupees 10 lakhs. But if you have gone to the market, it is just fetching rupees 1.5 lakh to you. What sort of benefit do you have now? Absolutely nothing. Because around here 8.5 lakh is the loss. Around here 8.5 lakh is the loss. So what sort is there to show it at 10 lakh in my books of accounts, which is absolutely wrong. So what to do now, sir? Again simple, reconstruct. Because in my books I am showing it 10 lakhs, but market value is just 1.5 lakh. If you are showing it rupees 10 lakhs, it is something that your valuation will be more, just by looking at books of accounts. But if you come to the real market, either for amalgamation or either for valuation of shares or either for valuation of goodwill, then the real problem starts. In your books of accounts, you are showing it 10 lakhs, but hardly it is fetching rupees 1.5 lakh. What point is there in that? So another reason is all about over capitalization of assets. One of the reasons is incurring of use losses, and another reason is all about over capitalization. And next one, sir, I'll just ask you a question, answer. Say for example, you need 100 rupees. You're having 1000 rupees in your hand. You want just 100, but every day you are having 1000 rupees in your hand. Will you have a proper reason of spending that rupees 1000? Did you get my question? You just participate. It's not something like, not a regular class to deter you. Listen, nothing like that. Just chill out, participate, enjoy the class, over. Morning to evening, wonder relation, over. Fine. So just tell me, my dear children. Sir, you want 100 rupees. You're having 1000 rupees in your hand. How will you spend that? With full care, with carefully or careless? Obviously careless. 100 kavali ante 70 unte, we will be with extra care how to get that 30 rupees. But if you are having 120 or 200 or 500 for 100, then the real worth in you will start. What is that called? Real Gajani will wake up. So the same will happen to company also. Say for example, company's maximum requirement amount is rupees 10 lakh itself, but its capital is something like 1 crore, wherein it has invested so share capital 1 crore. How much is our business size? 10 lakhs. So I have invested 10 lakhs in my fixed assets. I have invested 10 lakhs in my fixed assets. What about remaining 90 lakhs? It will be in the form of cash. It will be in the form of cash. Now the real Gajani in board of directors also will wake up. So how to manipulate that? See, it's all common. వాళ్ళని కూడా స్పెసిఫిక్ గా అనాల్సిన అవసరం లేదు. ఎదురుగుండా నీకు ఒక మూట కనిపిస్తుంటే why will you wait for that? Am I correct or wrong, sir? The same thing also happens with board of directors. There's nothing wrong. It's human nature. Nobody can do anything in that. Fine. So 90 lakhs is the cash that is being appeared to board of directors. Now how to do with that cash, or how to utilize that cash? See, if board of directors are absolutely cool and good enough, they will be thinking likewise how to expand the business, where to invest this 90 lakhs, how to get benefits from that. But who is more genuine in today's world? Absolutely no one, right? So it is one of the reasons wherein over capitalization has been happened, or over valuation of assets, over capitalization has been happened, due to which the company will be again has to do some sort of reconstruction. So 3 reasons, something like number 1, incurring of huge losses, number 2, over valuation of assets, number 3, over capitalization. Even the second one, it will also be called as over capitalization, because assets or capital items itself. If I am showing it at rupees 10 lakh, if market value is only 1.5 lakh, it will also be called as over cap, but literally it is called as over valuation of assets. Technical things. So technically, to tell you, internal reconstruction will be done in 3 stages. Number 1, if the, I mean not in stages, because of three reasons. Number one, when the company is incurring huge losses. Number two, overvaluation of assets. Number three, over capitalization. And wherever over capitalization comes, automatically dividend may not be properly declared to equity shareholders. Dividend may not be properly declared to equity shareholders. Why? Because, say for example, I told you already, share capital 1 crore. I'm just modifying that. Share capital 60 lakhs. Debentures or long-term liabilities is something like 40 lakhs. I have invested fixed assets of rupees 10 lakhs. And I'm having a cash of rupees 90 lakhs. Sir, if you are having some amount in your hand, what generally you have to do, Amma? Either you have to invest or you have to duplicate your investment. Accretion ravali, apprehend undali kachitanga. Ala kakunda 90 lakhs. Board of directors are very good. They don't manipulate. In turn, they don't invest also. So they will be holding that 90 lakhs in the business concern. Whenever time comes, they are repaying interest and principal out of this 90 lakhs itself. Hope you have got my point. They are holding 90 lakhs cash. They are repaying everything out of this 90 lakhs itself. Mottam anta ee original amount nunde pay chestunnaru. Then what point will be there in that? Obviously nothing, right? Because you have taken 90 lakhs, that amount itself you are paying, which is absolutely not good at all. So that is what your overcapitalization or something like that. Whenever it is there, they don't know how to utilize the money. They don't know when to declare the dividend. They don't know how to declare the dividend, or they don't know how to expand. They don't know how to invest. So all these are the general problems for internal reconstruction. So literally to tell you, if a company is incurring huge losses, if company's assets are overvalued, if companies is having overcapitalization, then that company will be generally called as a sick company. Then that company will be generally called as a sick company. Then you have to reconstruct that sick company. But remember, my dear children, all the time, because of these three reasons, a company has to do internal reconstruction. Nothing is there like that. If there are three reasons, something like if the company has incurred with any of these problems, there's no reason that company has to always to do internal reconstruction. There's nothing like that. If company is having other plans, if company is having other schemes so that it can come out of these vicious circles, then there is no need to do internal reconstruction. But if the company's plans are not working out, if the company's schemes are not working out, then it has to do internal reconstruction. Fine. Sir, how to do internal reconstruction? Your problematic related part discussion will be being started, so please be careful. Balance sheet, share capital, reserves and surplus, outside liabilities, fixed assets, current assets, miscellaneous assets. So what is your main aim? Eliminate this loss. Am I correct or wrong? What is the next one? If any assets are overvalued, you have to get the things properly valued. Eliminate. And next one, proper valuation is very much important. Now, biggest drawback, you're not having cash. You're not having cash. I'm not speaking about overcapitalization. I'm speaking about overvaluation and elimination. You're not having enough cash. Clear, everybody? Fine. So now, how the problem is like? Say for example, your outside liabilities are 10 lakhs. Your fixed assets and current assets are 20 lakhs. But market value of these assets are just 2 lakhs. So if you're selling, you're going to get how much amount? 2 lakhs. But how much amount you have to repay just to the outside liabilities? Where itself you will get the remaining cash? Don't tell dirty answer. Sir, miscellaneous asset is also an asset. Get the cash from that. No. For your kind information, asset ni free ga istanante asset, say for example 10 lakhs. If you're giving it for 50,000, a person may take. But if you're telling, I will give my miscellaneous assets freely to you, take that. Who will come forward? Obviously, it's loss, right? Something like, it's an asset, but not an asset. It is just to be treated as an asset, but absolutely not an asset at all. Anyways, so let's move on further, my dear children. Please be careful and just have a look. Now, what is your aim? Decrease assets. Ultimately, to tell you, your assets should be properly valued. So loss should be eliminated, in the sense your assets should decrease, and also your assets must be properly valued at 2 lakhs, in the sense around 18 lakhs has to be decreased. Am I correct or wrong? Sir, why you are worrying too much? Our assets is having value of rupees 2 lakhs. In books we are showing it at rupees 20 lakhs. Chalo, let's do it. What sort of entry you are going to write? It's very simple, sir. Asset value is getting decreased. So to asset, how much will I write, sir? 18 lakhs. Then what is to be debited, sir? I'm having all time either. If I don't know what to write, I will be debiting it to P&L account all the time, sir. Did you get my point? Some sort of revaluation concept lo alochiste. If you have thought in the form of revaluation, the entry will be something like P&L account debtor to asset account. P&L account debtor to asset account. But it is a concept of internal reconstruction where the company is worrying a lot that my company is sick. It needs to be hospitalized so as to do a proper treatment. Now again you are telling that in MRI scan you have found another problem, that is your P&L loss. How problem is that then? So now best medicine to this is not P&L account but reconstruction account or capital reduction account. So it's all about very simple now. Ultimately your assets should decrease. You need some amount. So how much amount is to be reconstructed? As per this example, something like rupees 18 lakhs is needed, right? Fine. From whom you will start bargaining? You need 18 lakhs to reconstruct, but you are not having a single penny. Now what to do? Of course, you have to start negotiations, you have to start bargaining. Literally to tell you, Kurala market lo etla bargain chestaro atlane jargiddi. I mean, like, practically it is called as professional board of directors meeting, general meeting, something like that. But in our layman language, it's absolutely that thing itself. Well, make all the shareholders to attend. First of all, I have to start the negotiations with equity shareholders. I'm telling to all my equity shareholders, you all equity shareholders, face value of an equity share is rupees 10. But company is very, very sick. Company is in deep problems. All you people have to put your hands together in order to make the company better. So proposal is something like, I would like to make the new face value of a share at rupees 2. I'll make the new face value for a new share of rupees 2. Then obviously, first of all, shareholders will hurt a lot. Arey yaar, you have to give me 10 rupees at the time of liquidation. But now the company is not being liquidated, still it is being run, and you're telling that you don't give me 8 rupees and you will just give me 2 rupees. It's too bad. This is what told by the shareholders. Now company will be telling one single dialogue. If you accept this, you will get that at least 2 rupees. If you don't accept this, you will not get a single penny. Think. Not a big deal. Let's leave the proposal, but think and answer, okay? So now what do the shareholders will do? Obviously they have to accept. They are not having any other option. Because the company is sick, right? If it is sick, obviously it has to be treated somehow. So first of all, I will be starting with the shareholders. So that is how happens. So now your journal entry. All the time journal entry something like equity share capital to equity share capital, right? So let's start the entry. You're cancelling rupees 10 face value share. So what could be the journal entry? Equity share capital account debtor rupees 10 to equity share capital account rupees 2 to reconstruction or capital reduction account rupees 8. You may be asking me, sir, what to do in the examination? Shall I write it like reconstruction account or capital reduction account? That's your wish. There's nothing great in that. But literally, capital reduction name will be used when the reconstruction is truly carried on with respect to the provisions of Companies Act 2013. You have to use capital reduction account name when the reconstruction is totally carried on as per Companies Act 2013 provisions. Otherwise, you can use the word reconstruction account also. Now, what to do in the examination? Number 1, that's your wish. Number 2, if you're such a student who wants to attempt the entire paper, 100 marks or 80 marks ki aim chese laga unta, it's my personal suggestion whether to take or not, that's your wish. Write CR in every account. And after the completion of the problem, write CR is equal to capital reduction. Just to manage the time, right? Because all the time writing capital reduction will take too much of time. Instead, for your kind information, if you have written like this, I don't tell that, sir, marks deduct chayara ante, I don't tell that they will not deduct. If he is a evaluator or valuationer who is having some sensibility, due to just time management, he has written like that. Otherwise, he will be knowing that, right? So even at the end of the problem also, he has given CR is equal to capital reduction. So not a big deal. Let's allot the full marks. If he is such a kind of evaluationer who is having another kind of mindset, you know, something like, why this fellow is having too much of laziness. And even at the end, he mentioned to me that whether I know or don't know, he is testing me. And then he will deduct, his ego will hurt and he will deduct 1 or half mark. But be ready, even though half or 1 mark is deducted in the question, this much time can be managed in another question. Take care, once again I'm not telling to that people who is attempting only internal reconstruction question in the entire paper. So take care, that's what my point is, something like capital reduction. You can use the word, nothing great at all. Anyways, let's move on further. So equity share capital account debtor 10 rupees is cancelled and hence debited. And new equity share capital of rupees 2 is being credited, and ultimately capital reduction or reconstruction has been credited. So please take care, my dear children. My aim, you know what is my aim? Here, I have to make 20 lakhs asset to 2 lakhs, where I need an amount of rupees. Say for example, I am also having a miscellaneous assets of 2 lakhs or miscellaneous assets of rupees 7 lakhs. Even this has to be eliminated. Am I correct or wrong? So how much is existing loss totally to me? 18 plus 7, 25 lakhs. Now I have to pull up 25 lakhs from all the shareholders. But let's talk practically. Is it possible? Like shareholders only has to sacrifice. Is it possible? Obviously no. First equity shareholders turn ayipayindi. So one of the things or one of the negotiations with equity shareholder is something like this. And the next negotiation with the equity shareholder, sir, I will not cancel any of the rupee of your share, but I will just split it off. I'll split it. So the journal entry is something like equity share capital account rupees 10 into 1 share to equity share capital account rupees 2 into 5 shares. So while writing the entries, write the denomination properly, okay? Otherwise, he will not allot the marks. Kachitanga half mark or 1 mark will be deducted. So please take care. Denomination is very much important. So equity share capital account at rupees 10 to equity share capital account rupees 2 into 5. The top one is like 1 share is cancelled. Instead of that, we are giving 5 shares of rupees 2. This is one sort of thing. And another sort, I'm just negotiating something like, what is it called? I will consolidate your shares. 10 shares were consolidated into 1 share. Then the journal entry will be equity share capital account debtor rupees 10 into 10 shares to equity share capital account 100 into 1 share. So these are some sort of negotiations. Or else if company so feels that it will become overcapitalized in future. If the company so feels that it will become overcapitalized in future, say for example, there are 10,000 equity shares in the company at the rate rupees 8 paid up, and the total face value is equal to rupees 10. Total face value is equal to rupees 10, but 8 is paid up. Still, how much is uncalled and unpaid? So company is having right to call at any time of at any point of time to call that 2 rupees, and it may ask the shareholders to pay. But now company has decided, let's not do this. Company is sick or company is been overcapitalized right now itself. So we are paying back all the things. So let's not call this again, and company may stand to cancel this uncalled capital. I'll be just cancelling this uncalled capital, or whatever the shareholders had paid, company may also decide to pay back the shareholders again. All these things we are not having problematic part. Manaki problematic lo unnavi consolidation, split off, and next cancellation. I mean to tell for 10 rupees 8 is cancelled and 2 rupees is the new share. These are the 3 things that we are having. So concentrated more with these 3 things. And next unnai, I'm just telling you, either cancellation of paid up capital or paying back the paid up capital or cancellation of uncalled capital. Even those things will also be possible. completed with equity shareholders. Now I'll ask the preference shareholders to gather the meeting and I'll start negotiating with the preference shareholders again. How to negotiate with the preference shareholders, sir? Nothing great. Again, how I have negotiated with equity the same way. Then preference will be asking me, why we when equity are there? Then company will be answering, that part is already over. You don't know that one. So now preference ni kuchobedtam, even it's the same way. Cancellation. Generally split and consolidation will not be there, but cancellation will be there. You know where the more bargaining will be there with preference shareholders? Arrears of dividend. Company is sick, it's not having enough money to declare the dividend or enough profits first of all to declare the dividend. So from the past 2 years, from the past 5 years, from the past 4 years, company is hard. Company's position is very hard to declare the dividend. So automatically what happens now? Company has not declared the dividend and 5 years arrears were there. Preference shareholders ni first kurchobetti, I will not bargain with the share capital. I'll just start the bargaining with the arrears. 5 years arrears are there. Let's come to one deal. I will give 2 years, you sacrifice 3 years. They will start. I will sacrifice 1 year, you give 4 years. Everything will start like that. And finally company will come to a deal. Fine. For 1 year's arrears, I will give you equity shares. I'll make you owners in my company, in that sick company. That's first one. And second one, for 1 year's arrears, I will give you cash. For another year's arrears, I will give you debentures. Finally, let's close the negotiation. So somehow, trigger aitundi oka point lo, they will be accepting. The preference is nothing great, but be careful with arrears of dividend. Sir, arrears of preference dividend. What is arrears of preference dividend, amma? Liability, asset, contingent liability, contingent asset. So now you are paying a contingent liability. What is the journal entry for contingent liability? Something like you are paying, right? So to cash or bank, or to, if you are issuing equity shares, or if you are issuing preference shares, debentures, etc. And what is to be debited? Sir, if you don't know what is to be debited, generally you will debit P&L account. Now if you don't know what is to be debited, debit one and only one astra. What is that? A question reconstruction account ayi neekem debit cheyalo teliyakapothe reconstruction ni debit chesai. Sir, tappu aitundemo 99% correct avutundi. Sir, mara 1%, how can I tell that one? Oh, that's what your arrears of preference dividend. And now moving on to the next thing. So we have seen with share capital negotiations, number 1 is split, consolidation, cancellation. Number 2 is preference shares, wherein we have seen with the things of cancellation, same entry will come, but in the place of EP will come. I mean preference share capital to preference share capital. And the next one, negotiations with respect to arrears of dividend. Okay. And moving on to the next thing, outside liabilities. I will start bargaining with the outside liabilities like anything. Preference shareholders over, outside liabilities seated. So for your kind information, they are creditors to the company. They have expected something from the company like interest expect chestaru, principal expect chestaru, repayments expect chestaru, and then they will be coming forward to the company. But what ultimately happened? Company, adiyam chaptaru, hands up. So ultimately it is in that position and started negotiation with all the outsiders. Why will they accept? Outsiders are telling, we are outsiders. We are creditors to the company. You are having responsibility to repay. We are liability holders. It's your obligation to repay, not future obligation, present obligation. Company ki telidu outside liability holders are telling. And now company is telling, I know everything. Stay calm. The problem is all about, again same, equity shareholders ki cheppindiga, creditors ki kuda cheptundi. Your liability is 10 lakhs. I am just asking you to sacrifice 60%. Just 60%. I will give you 40% immediately. No, we are not accepting. Sorry. One final deal. I will cancel 50%. I will pay 40% immediately. And still 10% will be continued as liability. In future, let's set off. I mean, let's pay. So company has told this one. So now we outsiders are telling, no, we don't accept. Same logic. If you accept, you will get at least that 40% immediately. Otherwise, you will not get a single penny. Later on, it's your wish. అయిపోయింది, ఏమంటారు అది, ఫిదా. So company's dialogues, everything is over. Now all the outsiders were absolutely tempted to the offer that was given by the company. Hey, you're just cancelling 50%. Not a big deal. If you want to cancel, cancel 60% also. It will start telling all those things, and ultimately there ends with the matter, even with the outside liabilities. So ఎక్కువ tempting outside liabilities కి ఎక్కడ చూపిస్తారు అంటే, I will make you owners in my company, in that sick company. So that is what generally I mean, like, now debenture holders will be thinking, at least company is cancelling 50%, for 10% somehow I have become owner of this company. Oh, okay, let it feel like that. Let them feel like that. So now journal entry for outside liabilities reconstruction. Listen carefully. Say in our example 10 lakhs is there. నేను మొత్తం అన్ని స్టైల్ ఆఫ్ ఎగ్జాంపుల్స్ని కవర్ చేయడానికి ట్రై చేస్తున్నా, సో దట్ ప్రాబ్లమ్ చేసేటప్పుడు యూ కెన్ డూ ఇట్ కంఫర్టబుల్లీ. అఫ్ కోర్స్ ఇట్స్ ఇంపాసిబుల్ టు డిస్కస్ ఈచ్ అండ్ ఎవ్రీ question or each and every point. I know, like, some of, you see, every teacher is having his unique style. Some teacher will be concentrating theory koncham cheppi problematic lo ఉన్న different adjustments ఎక్కువ చెప్పేస్తారు. But what my point, if you're discussing the theory part, and while in theory part if you discuss all the different adjustments, now you can solve any kind of problem. Of course 1 or 2 will be there, that we will discuss for sure. Anyways, so now out of 10 lakhs 50% cancelled. So creditors account at all 50% is cancelled, right? So that is like 5 lakhs. To reconstruction account 5 lakhs. 40% is immediately paid. So to cash or bank, and plus another 4 lakhs. This is something like 4 lakhs. If company is giving equity shares, 2 equity shares, preference shares, whatever company has given, all those things, there ends with the entry. Look carefully what I have written. For 10 lakhs, 10% is carried forward in future, and it is still a liability of the company. So out of 10 lakhs, 1 lakh is still liability, and hence I did not touch that 1 lakh. I had cancelled this 9 lakhs. Clear? So creditors account debtor 9 lakh, to reconstruction 5 lakh. What sort of negotiation or settlement you are having with the creditor, just credit with that thing. And ultimately 1 lakh is still being carried forward by the company. Clear everybody? So that is what your point with outside liabilities. So now ultimately my aim is to pool, in our example, totally 20 lakhs. Because fixed assets 20 lakhs or 2 lakhs. So there I want 18 lakhs. And miscellaneous assets 7 lakhs anukunnam kada. So ultimately I want how much amma? 25 lakhs. Now listen, very, 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 very important. In some problems you are having this kind of adjustment. After doing all these adjustments or all these negotiations, I mean, like, after going with reconstruction account, literally to tell you, meeku koncham problematic style kavali ante reconstruction account. Okay, so if asset value is cancelled, reconstruction account debtor to asset account. If asset value is increased, by asset account. And if liability is increased, liability increase aithe to liability. If liability is decreased, by liability. If you're paying any liability, contingent liability, reconstruction account debtor to cash or bank account. If any contingent asset has been got to you, something like cash or bank account debtor to reconstruction account, something like this. Okay, fine. Last, what is your aim, sir? My loss should be eliminated. My assets should be properly valued. Reconstruction to asset 18 lakhs. Your assets are properly valued. Now no problem. What is your final problem? To eliminate loss. So problem anta chesesin tarvata, in some questions he will not tell eliminate or write off the loss. Also there will be some intangible assets to the company. Fixed assets also includes intangible. So intangible assets to the company. Arre yaar, company is sick. Malla company ko ka intangible asset. So obviously intangible asset is also a worthless asset. Likewise, how miscellaneous assets will be treated, in the same way intangible will be treated in this situation. Hey, I'm not speaking about in every situation, okay? TCS lo no intangible asset ante nannu vachi kodaru. So I'm not telling in every situation. At the time of reconstruction, or especially at the time of internal reconstruction, intangible assets shall also be treated at par with miscellaneous assets. In the sense, you have to write off. Now in the question, sometimes he will tell all the adjustments, but at last he will not tell loss has to be written off. Sir, అది వాడు చెప్పేది ఏముంది సార్, నేను చేయగలను, నాకు తెలుసు అని అనొచ్చు. But you know what happens in the examination with lots of tension or with lots of pressure or with some other avocations, you will be, I mean, like, you lost your sense, you will be generally losing your sense of doing some minute things. You know, after coming out of the examination, question lo not untundi, naku not kanpichadu. Exam lo unna prati nimisham not kanpichadu naku. But once after submitting the paper, just the question paper random ga teeste not kanipistundi. Ayipoyindante. So, see, we can't blame anyone. This often happens to any student in the examination. Mari em cheyali sir? Being more careful. Literally to tell you. So that is what you have to do generally. Anyways, so let's move on. So sometimes he will not give P&L account has to be written off or miscellaneous has to be written off, but you have to take chance and you have to write off the miscellaneous asset. Remember that one, very important. So reconstruction account debtor to P&L account, you have written off. Say for example, after writing off, even after writing off also, you were left with another 2 lakhs in reconstruction account. Even after writing off the losses, you are still left with 2 lakhs in your reconstruction account, which is your capital profit. And hence it has to be transferred to capital reserve. So your journal entry will be something like reconstruction account debtor to capital reserve account. Clear everybody? A shortcut రాయమన్నా అని చెప్పి CR to CR and rasi. Last lo CR is capital deduction in rasi. Don't take that kind of chance, okay? I mean to tell reconstruction or capital deduction account debtor to capital reserve account. This is fine. But what happens, you know, sometimes, say for example, reconstruction nundi నీకు వచ్చిన amount is just 24.5 lakhs. But you have to write a loss of rupees 25 lakhs. Still shortage, how much is there? 50,000. 50,000 kada? 0.5 lakh is nothing but 50,000. I don't know, it is called as 5 lakhs. Amma, sorry amma. ఇది చెప్తారు చదువు ఎక్కువ అయిపోతే కాకరకాయ కీకరకాయ టైప్లో 24.5 25 difference is 5 lakhs. Okay, sorry to my teachers who taught mathematics to me. Anyways, let's come back. So something like, yes, it's exactly 24.5 lakh, my dear children, but I have to write off a loss of rupees 25 lakhs. Or yes, so out of this 24.5 lakhs, I have written off 18 lakhs, which is relating to assets. So how much is still the balance that I am having? 6.5 lakhs. But how much is the loss I have to write off? 7 lakhs. Now, option number 1, 6.5 lakh rasesi, still 50,000 loss ni balance sheet lo carry on cheyadam. Just carry on the remaining 50,000 loss in the balance sheet while preparing your balance sheet. But think carefully or think with common sense. You are doing internal reconstruction since your company is sick. You are hospitalized. Will you come out of the company without, will you come out of the hospital without getting properly treated? So you have to be eliminated. I mean to tell, loss has to be eliminated. So now what to do if loss has to be eliminated? Still 50,000 is shortage. This is the point where you have to check out the question carefully. Kachitanga 99.999% in your balance sheet you will be having reserves and surplus 50,000. Kachitanga untundi. Either securities premium or capital reserve, you will be left with that 50,000 in your balance sheet. He will not give that adjustment. Utilize capital reserve for this scheme or utilize securities premium for the scheme. He will not tell that one. He don't tell that one, but you have to utilize that one if the existing amount is not sufficient for you. Clear everybody? If the existing amount is not sufficient to you to write off, then you have to utilize reserves and surplus for the purpose of scheme. Listen the last and final tagline, my dear children. You may be asking me, sir, securities premium has to be utilized only as per section 52 of Companies Act 2013. I know that there are 5 purposes. Even I know that one. Capital reserve has to be utilized only for the purpose of writing off of capital losses. You know everything, children. But remember, you don't know one more thing. That reserves and surplus can be utilized for the scheme. That is, every act or every provision will be or can be overridden with the scheme of reconstruction. So in a single tagline, scheme of reconstruction overrides. Scheme of reconstruction overrides each and every provision or each and every law. Don't cry for utilizing purposes or something like that. That's absolutely not needed. You can just go with the things that you're having. I mean to tell, scheme of reconstruction overrides each and every provision or each and every act. So this is the thing where you have to be more careful. Okay, everybody. So utilizing reserves and surplus for this scheme is all about reserves and surplus account debtor to capital reduction or reconstruction account. Okay, fine. So this is what your style of doing the problems. So once I'll be summarizing, and immediately let's start with the different adjustment of the problems. Share capital, that is like equity share capital. What are the things that we have learned, Amma? Cancellation, split off, consolidation, preference share capital, cancellation, arrears of dividend, and outside liabilities, either settlement or carrying forward or cancellation. And fixed assets or current assets must be properly valued, and if you want, you can sell also. Sale of some of the assets is also possible. At the time of selling, you will get some profit or loss. Am I correct or wrong? Where that profit or loss has to be transferred? Reconstruction account. There is no P&L account, remember. Everything has to be transferred only to. So if you are selling an asset, cash or bank account debtor to asset account. If you are having profit, to reconstruction account. If you are having loss, reconstruction account debtor. I mean to tell, reconstruction account has to be debited. Clear, everybody? Fine. So that is what your fixed assets, current assets, proper valuation, or you can also sell some of the assets. Profit or loss shall has to be transferred to reconstruction account. And ultimately, intangible assets generally are to be eliminated, and miscellaneous assets, of course, mandatorily you have to eliminate. Even if the reconstruction pooled amount is not sufficient, be careful. Reserves and surplus has to be utilized for the scheme. Understood? So reserves and surplus utilized for the scheme. If it is given in the question, no problem. If it is not given in the question, first you ignore that, do the problem. If at last it is not sufficient to write off the P&L account, then utilize the reserves and surplus for the scheme. Okay. So this is what your overall internal reconstruction. So let's go with some problematic part. So I'll be just showing you the main things of the problem. I mean, like manam discuss chesinu enta varaku solve cheyyagalam, the things that we have discussed, to how much extent we can solve, or what are the new points that we are having. Sir, if you see point number A, authorized capital has to be refixed. That's obviously there will be nothing to do with the journal entries here. It all falls in the presentation, notes to accounts. And one more thing, my dear children, while going with your, what is it called, drafting a new balance sheet. While drafting a new balance sheet, very important, unreduced or as reduced. If you did not write that one, automatically one of your marks will be deducted for sure. Something like balance sheet of so-and-so company on so-and-so date within brackets, unreduced or as reduced. So you have to tell that, because users must understand that our company is internally reconstructed, or else they may be getting a doubt. Till last year it is too sick, but now if you are observing current year balance sheet, it is too healthy. But what happens to all the remaining items? And hence you have to make the users aware that unreduced or as reduced. See, sometimes you will be encountering with these kind of adjustment. He will not give the amount. Trade investments are to be liquidated in the open market. Then if you observe the balance sheet, you will be having marked to market 64,000. Marked to market in the sense it was already recorded at market value. So you just sell that in the market and you're going to get 64,000. See, sometimes we will be giving here 64,000 within brackets market value is equal to 60,000 or market value is equal to 75,000. So now at the time of selling your investment, you're going to get the market value which is mentioned in the brackets. So please be careful, even that kind of thing is also absolutely possible. And I told you like arrears of dividends, he will be giving equity shares. Generally that is quite possible. So what is the entry we will write? For preference dividend, for arrears of preference dividend. What is arrears of preference dividend? Contingent liability. For contingent liability, you are settling by way of issuing equity shares. What is the journal entry? Reconstruction account debtor to equity share capital account. So please take care with that one. So expenses of reconstruction. Reconstruction account debtor to cash or bank account. That's quite common. Yes. Some things will be something like this. Jagrataga chudande. Debentures took over a freehold property for at rupees 2.1 lakh and settle the balance after adjusting their dues. How much is the freehold land we are having in the question? 1,20,000 and it was revalued or taken at 2,10,000. And if you observe the debentures dues, it's just 125,400. Did you get my point? First thing what you have to do, if you have encountered with these kind of questions, the first everything that you have to do is all about existing asset must be revalued first. Existing asset must be revalued. How much is the book value given? 1,20,000. What is the agreed value given here? 2,10,000. So how much is to be increased now? 90,000 is to be increased. Antena? So now what is the entry for that? Asset account debtor to reconstruction account. How much you are writing? 90,000. Now what happened? This entire 2,10,000 was taken by the debenture holders and the due to the debenture holders is just 125,400. So literally it implies, literally, em jaruguntundante, this asset might have been sold. 2,10,000. How much is to be taken by debenture holders? 125,400. Still you will be having some balance, right? That will be again taken over by the company itself. Because out of 2,10,000, their dues are just 1,25,400. So how much is the remaining amount? 84,600 will be with company itself. Clear everybody? So your entry, remember for all these kind of things, in the sense existing asset is taken over by one person at this much value. In that, first of all, you have to revalue the asset. After revaluing the asset, second one, you have to settle to the debenture holders if any balance is there. That will be with the company itself. So something like asset account debtor to reconstruction 90,000. Debenture holders account debtor. Something how much you have to give? 125. Strictly speaking, debenture holders ani kuda kadu. Percentage debentures account debtor and accrued interest account debtor. 125,400 to asset account. Okay. How much asset is the total value you are having? 2,01,000, right? 2,10,000. Now what to do, sir? Balancing figure, how much is there? People will be writing something like reconstruction account debtor, which is absolutely wrong. Difference అర్థమైందా? అంటే ఇందాక చెప్పా కదా ఏం పెట్టాలో తెలియకపోతే తీసుకొచ్చి రికన్స్ట్రక్షన్ పెట్టని. In these cases it will become wrong and also students do generally confuse for these kind of things. So what to do, sir? Something like literally it means that asset has been sold out. So instead of writing reconstruction, you are supposed to write cash or bank. If it is part of a land that can be settled, sometimes you know how he will give 2,10,000 and some part of the land is taken over by the debenture holders. This statement will be given in the question. If it is a part of the land, then you are not supposed to credit with 2.1 lakh. You have to credit just with 125,400 and this will be not there in the entry. And freehold land remaining 84,600 will be continued in the books of accounts. Is the logic clear? If nothing is mentioned, you can assume however you want. Asset is sold and you have got cash. If he has told part of a land is sold and still part of a land is with the company itself, for that part of a land, you are being continuing just with the part of a land itself. Clear, everybody? So this is one of the things. So remaining are absolutely easy. Unprovided contingent liability is settled. Contingent asset has been received, where we have seen reconstruction to cash or bank or cash or bank to reconstruction, and all the remaining things are absolutely simple. If you observe this one, existing cash has been utilized to pay the bank overdraft. Cash has been utilized to pay the bank overdraft, or bank amount has been utilized to pay the bank overdraft. Something like, strictly speaking, journal entry is not needed. Why? Because if it is the bank account, positive balance will be at debit side, negative balance will be at credit side. Whenever you are depositing into your bank account, automatically your overdraft will be settled. So specifically no need to write the entry, but if you want to write the entry, you can write something like bank overdraft account debtor to bank account, but it is not recommended. If it is different bank accounts, then write the entry. Something like Axis Bank overdraft to HDFC Bank payment. Then Axis Bank overdraft account debtor to HDFC Bank account. But if it is the same bank, generally no entry is absolutely required. So that's it. So at last, if any cash is remained, now company is asking the equity shareholders to bring the necessary cash so as to pay the overdraft balance, and company is telling that it will be issuing equity shares. Likewise, you have done all the things, still bank overdraft 10,000 is pending. Now company is asking, you shareholders give 10,000 that to company. I will be giving equity shares for this purpose to you. That's it, nothing to it. So in this question, some sort of workman compensation fund is there. It's an RTP question. It's an RTP question. It will not be available in study material. Just have a look here. Sir, investment in workman's compensation fund is 15,000, and connected to this, you are having a workman compensation fund. We have to speak about Chennai Works itself, 5,000. Because if you observe in the question, he will be very clearly giving Chennai's workman compensation fund. Chennai's workman compensation fund disclosed with an actual liability of 1,000. Actual liability of 1,000. As a consequence, the investments of the fund were utilized to the extent balance. Entire investment was sold at a profit of 10% on book value, and the proceeds were utilized for the part payment of the creditors. So what you have to do for this purpose, sir? Just look here. Point number 1. He told entire investment shall has to be sold at 10% profit. So sell this entire investment at 10% profit. How much ever. Okay. And next, you will be observing this 5,000. Right. And if you observe that 5,000, 1,000 is liability and 4,000 is not a liability. 4,000 hence is absolutely not needed. Cancel and transfer it to reconstruction or capital deduction account. Pakka, everybody? This is what the general style of approach by the students. But what ICAI has done for this purpose? Simply I'm telling you, just look here. Take here workman compensation fund. How much is that? 5,000. Investment in workman compensation fund, 15,000. Don't touch the liability. Don't touch the liability. In the sense, minus 1,000 is the liability. Even here also, 1,000 is the liability. How much balance you are having? 4,000, 14,000. Sell this. Did you get my point? Sell this 14,000. So how much will be the profit? Profit is 1,400 and total amount is 15,400. Sir, out of 5,000, since 1,000 is a liability, profits, workman compensation fund law, out of 5,000, since only 1,000 is the liability, balance 4,000 whatever is there, that's absolutely cancel and it will be transferred to reconstruction account. And here 15,400 cash or bank account 15,400 to investment in workman compensation fund 14,000 and to reconstruction account 1,400. Sir, what about remaining 1,000, sir? It was just a liability and hence it has to be settled. Clear, everybody? So it's a liability and it has to be settled. That's it. something like workman compensation fund account debtor to investment in workman compensation fund 1000, there ends with the matter. So now the questioning, the answering style of ICAI is all about deduct the investment or the liability value from both liabilities and assets, and you do with the remaining things itself. That is what all the thing. So this is a new point in this problem. Apart from that, nothing great. It's remaining are absolutely easy. And moving on to the next thing. Yeah, if you look questions something like this, these are raw balance sheets, Amma. Even in some questions, some raw balance sheets will be given for you. In the sense, those are not original balance sheets at all. Balance sheets in the question itself will be given in wrong style. Balance sheets in the question will be given in the wrong style. Of course, this is in the correct style itself. But there will be another problem. Assignment 3 or something that. Yes, CRD number 5. Look here. Not assignment 3. CRD 5 chudandi. Sir, normally asset in the books of accounts will be shown at which price? Cost price or market price? So it has to show 3,90,000, but it is giving 1,50,000 in the amount column. You are having some cash, you just have added to that, and the total assets were charged under debentures antadu, and hence he has given something like total amount that was charged to debenture. You know the surprising thing here, uncalled capital will be given at asset side, and after giving that at asset side, he will be giving it's the total deficiency you are having. So for your kind information, my dear children, in the question itself, this deficiency is wrong. So first of all, what we have to do, sir? You have to draft a balance sheet first. You will be encountering with this kind of problems also. I mean to tell something like entire balance sheet itself is wrong. So you're not supposed to go with such kind of things directly. First of all, you study the question, draft a new balance sheet. Chala mandi ee question lo chese tappu entante question ni direct ga teeskuni answer cheyadam. But first of all, for this kind of questions, you have to draft the new balance sheet. Ala vestene you are going to get the correct answer. So be careful. Even this is also raw balance sheet, but first check out whether this raw balance sheet is correct or wrong. I don't think there's nothing wrong here. Everything is very, very clear. But the question that I have told you, CRD number 5, uncalled capital is given. Property, plant and equipment is not given at cost, and it was totally wrong. So please don't be in such a wrong notion. Be careful, some sort of raw balance sheets will be given, and wherein you have to make it correct things first of all. And yes, another thing, see, if you observe this thing, Mr. A is liability holder for 8% debentures, 12% debentures, also with some creditors. Mr. B also is a liability holder for 8% debentures, 12% debentures, and some creditors. Sir, I told you the compromise and settlement with respect to outside liabilities. Did you remember? I will be asking all the outside liability holders to sit, and they will be starting the negotiations. Now you know how the negotiation will be done in this style of things. A is the liability holder. I will start negotiating only with A, but not with all the debenture holders. Because A is liability holder for many things in my books. So I will be negotiating with A personally. So, mari entries ela rayali, sir. All the things are common. Meeru cheyalsina oke oka thing enti ante, first of all, you put the liability to Mr. A. What to do, sir? 8% debentures is given in our books of accounts. 12% is also given in our books of accounts. You first cancel 8% debentures and 12% debentures and attribute the same to Mr. A and Mr. B. 8% debentures account debtor, 12% debentures account debtor to Mr. A account. 8% debentures account debtor, 12% debentures account to Mr. B. Now, while settling, A ki settle chestunattu. A account debtor to remaining are common. Cancellation aithe cancellation, carrying forward aithe carrying forward, settlement aithe settlement. Clear? So this is another kind of thing. And last and final case, share surrendered. Chala mandi chese thing entante share surrendered ni odileyadam. Because if you observe, share surrendered was nowhere tested till now. So what do generally people feel? Let's leave share surrendered. But sometimes, manavi iron legs aitayi. Manaku kuda teliyavu. So directly, question itself 15 marks share surrendered. Ayyo. Anta easy aina internal reconstruction lo kuda nuvu oka model choice tiskunte it's not wise. So my suggestion, even do prepare share surrendered. What is a hard difference between normal thing and share surrendered? Just I'll be closing in 5 minutes with this chapter and we are going to start the next chapter. Liquidation will not take too much of time because it's just format based. Chala mandi confuse ayye area enti ante overriding preferential payments. So I'll be just concluding that. Just have a look here. Yes, share surrendered. Sir, the difference between normal problems and share surrendered problems are only a very small thing. That is, in normal problems, there is no concept of surrendering of shares. In share surrender, I will be asking the existing equity shareholders to surrender the shares. And after surrendering, I will be having some count with share surrendered account. Then I will be deciding how much has to be given equity shares or preference shares out of share surrendered. Literally to tell you whether you have done under normal method or share surrendered method, the effect is absolutely one and the same. Sir, then why the company is choosing share surrendered method, sir? Say for example, there is no share surrendered method, Anukundam. I am asking the equity shareholders to surrender 10,000 equity shares. So 10,000 shares were surrendered. Now next, company had forgotten about this thing or company is not bothering about the surrendering of shares. Now company is promising that it will issue shares to the equity holders, that it will issue shares to the preference holders, it will issue shares also to the outsiders. Promise anta chesestundi. Ultimately it had become 25,000 equity shares. Did you get my point? But existing equity shareholders may oppose with one thing. Sir, if you want to cancel, cancel. But remember, don't give additional shares to anyone more than the share surrendered. If this kind of condition is being kept by equity shareholders, or company is thinking, if I have given more share cap, if I have issued more equity shares again, it may lead to dilution of control, where the existing shareholders may not satisfy, due to which my market value might decrease, because everybody wants to sell, but nobody is ready to purchase. So if company has taught all of these things, company will be maintaining a separate account called share surrendered account. It's nothing but just a count. It's nothing but just a count. So out of this 10,000 shares surrendered, it may issue either equity shares or even preference shares also. Don't be in a wrong notion that after surrendering the shares, the same share is issued to some other person. That is not correct. It is just for a count, amma. It's only for a count. I will take the shares. I will be counting something like 10,000 shares or with the company. So now company is issuing these to the other people. So it might issue either equity or preference. So how to write the journal entries? Sir, just look here. Say for example, creditor is 1 lakh and 10% is carried forward, 90% is settled. So normally what is the entry that we will write, amma? Creditors account debtor 90,000 to, say for example, cancellation, reconstruction account 50,000 to cash or bank or equity share capital, whatever is that, 40,000. We will write like this. But you know what you have to do under share surrendered method? Remember, rule. Total settlement portion shall has to be transferred to capital reduction account. This is the rule. Total settlement portion has to be transferred to capital reduction account. ఇది గుర్తు పెట్టుకోండి, షేర్ సరెండర్డ్ మీకు వచ్చేస్తుంది. What is the total settled portion here? 90,000. Initially it has to be transferred to capital reduction account. So creditors account debtor to reconstruction or capital reduction account 90,000. Sir, then you are issuing equity shares to the creditor, right? Under share surrendered method, you are having a count of share surrendered. So you have to start with share surrendered itself. So it is something like share surrendered account debtor to equity share capital account 40,000. Did you get my point? And if any balance of shares surrendered will be there, right? Because initially I will be asking equity shareholders to surrender the shares. How I will be asking equity shareholders to surrender the shares? Equity shareholders rupees 10 to equity share capital rupees 2. Remaining shares I am not cancelling. I am just asking them to surrender the shares. Clear everybody? So if you want to write, you can write 2 entries also. Equity shares 10, equity shares 2. All the shares are converted to 2 rupees. Next I am asking my equity shareholders to surrender some shares. How many shares were surrendered? It will be credited to share surrendered account. If you are issuing out of shares surrendered, it will be debited. So ultimately, if you are issuing equity, equity will be credited. If you are issuing preference, preference will be credited. Say if your shares surrendered are 10 lakhs, out of which you have used only 40,000, remaining 9.6 lakhs is there, right? It will be transferred to reconstruction account. Thereby, the effect either under normal method or under share surrendered method will be absolutely same. Share surrendered lo cheyalsina 2 rules amma. In addition to the normal rules, 2 rules. Rule number 1, total settlement portion has to be transferred to reconstruction account. Rule number 2, balance of share surrendered account, if any is there, it has to be transferred to reconstruction account. These are the 2 things, and finally that is the end of your internal reconstruction. So for 5 minutes, if you are having any doubts, you can please ask, and then I am proceeding with liquidation. Shall I proceed? Because it's a very basic chapter, right? Next, liquidation. Like first, I don't know why in group 2 people generally fear even with this chapter also. But it's a very, very easy chapter, just format based. Sir, in this chapter, the entire things that you have to take care are only 2 elements. Number 1, just liquidators remuneration. Number 2, how the equity shareholders finally will be called up. Only these are the 2 areas where you have to be more careful. అంటే ప్రతి ప్రాబ్లంలో ఇవి రెండు చూసుకుంటే చాలు. One problem, do everything. In each and every problem, only these 2 things. And coming to statement of affairs, by heart cheyalsinde. There is no other option for that. But it is least tested in the examination. Statement of affairs. Least enti, till now it is not tested. So don't be in a wrong notion that it will not be tested, okay? I already told you. ఒక అటెంప్ట్ కి మనవి ఐరన్ లెగ్ అవుతుంది, ఒక అటెంప్ట్ కి గోల్డెన్ లెగ్ అవుతుంది. యు నో ద ప్రాబ్లం, వేర్ అవర్ లెగ్ ఇస్ గోల్డెన్ లెగ్, బై లుకింగ్ ద పేపర్ రిజల్ట్ ఇస్ ఐరన్ లెగ్. సో బీ కేర్ఫుల్. అంటే లైక్ ఫస్ట్ ఆప్షన్ డోంట్ లీవ్. సెకండ్ ఆప్షన్, ఇఫ్ యూఆర్ నాట్ హ్యావింగ్ టైమ్ టు స్టడీ, అంటే చాలా మంది కంప్లైంట్ చేసేది సార్ నాట్ హ్యావింగ్ ఇనఫ్ టైమ్. Even by the end of today, if I am unable to cover some topics, I will complain the same thing, sir, time constraint. So it's common to everyone, but try not to leave any model. Ante, ఇప్పుడు statement of affairs that was not tested in the exam, right, till now. But sometimes in the examination, even though the topics that you have prepared hardly, the question might be typical. There are certain students who prepare amalgamation right from starting till ending. Each and every page, each and every point, each and every full stop, comma. But before last attempt, the question, Jaitus, something like it was given, company has started today, year is started today, after 3 months it has been amalgamated. After 3 months amalgamation process starts. Ante akkada first of all things that should strike to you is all about, you have to adjust all the 3 months adjustments and then you have to start the amalgamating procedures. But generally, see, classroom lo kurchunnappudu all we people are having exponential knowledge, undoubtedly. But coming to examination, we will be having extra knowledge, wherein some things which are not required also will be answered there. That is the biggest problem. So, you have to prepare each and every model. If not that, another thing will save you. And moreover, coming to this group 2 accounts, consolidation, amalgamation, partnership, accounting standards, together will cater 80 to 90 marks. But problem, partnership choice. Some people 2 chapters choice. Why? వాడు ఒకటి చాయిస్ ఇస్తాడు సార్, నేను ఒకటి చాయిస్ తీసుకుంటాను సార్. మై ఎయిమ్ ఈజ్ టు అటెంప్ట్ ఓన్లీ 80 మార్క్స్. నేను ఎంత ప్రిపేర్ అయినా ఐ కెనాట్ అటెంప్ట్ 100 మార్క్స్ పేపర్. సో వై టు ప్రిపేర్ దోస్ 2 టాపిక్స్? నీలాంటి వాళ్ళ కోసమే ఈవెన్ ద క్వశ్చన్ పేపర్ హీ ఈజ్ మెర్జింగ్ 2 క్వశ్చన్స్ అండ్ హీ ఈజ్ గివింగ్. In one Roman, consolidation question, partnership question. In another Roman, consolidation, partnership, liquidation. In another Roman, consolidation, partnership. అయిపోయింది పేపర్ మొత్తం అక్కడికి. So be careful, okay? Fine. So having a very small introduction about liquidation, either compulsory winding up or voluntary winding up. Compulsory winding up due to insolvency or any other things that are other than insolvency. Due to insolvency, IBC is applicable. Other than insolvency, say for example, company is doing some sort of illegal business, or company is trading with allied enemies, or company is following code of conduct things properly. So like this, some problems are there where the company is supposed to liquidate. For that, it has to follow Companies Act 2013. If it is due to insolvency, it has to follow IBC code, Insolvency and Bankruptcy Code. And if it is voluntary winding up to 31st March 2017, Companies Act is there. But from 1st April 2017, again IBC is being applied. So now, coming to examination, this is absolutely not needed, because what is applicable is not needed for us. How to solve the problems are highly needed for us. So let us start the thing, something like a statement of affairs. Sir, undoubtedly you have to by heart these lists. No doubt at all in that. Sir, listen everybody. Last is always to equity shareholders. Last but one is always to preference shareholders. And first thing is all about assets. Next thing is all about liabilities. Now coming to assets, again I will separate into 2 parts. Number 1, free from charge, and number 2, specifically pledged or which are charged. Liabilities, even I will divide the liabilities. Liabilities for which you are having charged or specifically pledged, and liabilities which are free. So now to tell you, assets. For assets you are having 2 lists, list A, list B. For liabilities you are having 4 lists, list B, again B will come, list C, list D, list E. And for preference shareholders, list F. For equity shareholders, list G. What is list A, sir? Assets which are not specifically pledged. What is list B, sir? Assets which are specifically pledged. Coming to liabilities, sir, list B is something which is serving for both assets and liabilities. Literally to tell you, you might have come across with the word secured creditors. On what the security is provided, sir? On some asset, right? That is why list B is interlinked. List B is serving for both assets which are specifically pledged and also the liabilities which are having charge. Secured creditors, all will come there. Clear everybody? Fine. So list B is serving for 2 purposes. And coming to liabilities, hardly if you divide the liabilities, secured, unsecured, right? Secured are again of two types, fixed, floating. Unsecured, it is supposed to give to some people preference. To some people, preference is not required, non-preferential. So liabilities, secured fixed, secured floating, unsecured preferential, unsecured non-preferential. So now what are the lists we are having, sir? List B, list C, list D, list E. Secured fixed B. Unsecured preferential has to be given preference when compared to secured floating. So unsecured preferential will C, secured floating will be D, and unsecured non-preferential will be given E. And of course, preference shareholders, list F, equity shareholders, list G. If you observe, just look here, my dear children, all this comes under statement of affairs. Statement of affairs has to be prepared by the board of directors and it has to be submitted to the NCLT or High Court. High Court will be judging or High Court will be revising the whole statement of affairs. It will be inquiring the statement of affairs and ultimately it will take a decision whether the company has to be liquidated or has to be continued. In India, the first and foremost option is to continue the company, either with the same company or with the other company in the form of external reconstruction. Late sir, inka asalu revival ki scope ledu antava. Liquidation. Hindustan Antibiotics, first penicillin invented company. So what do you know happened with Hindustan Antibiotics? Up to some years it has performed extremely well, but due to some heavy market competition, after some years it has been not performing well, where it has taken a permission for internal reconstruction, reconstructed, but later on it was been not able to revive and ultimately it was been liquidated. So this is what happened with Hindustan Antibiotics. Anyways, let's come back to our topic, preparation of statement of affairs. Before that, if you observe the balance sheet, again the same style of balance sheet, share capital, reserves and surplus, outside liabilities, fixed assets, current assets, miscellaneous assets. Fixed assets, current assets, sir, these were available in statement of affairs. A list lo unnayandi, list A, list B. Outside liabilities, list B, C, D, E. Share capital, F and G. అక్కడికి ఇంకా పాపం చేసినవి ఇవే. మీరు వాటికి ఏం లిస్ట్ లేదు కదా. So this will not be appearing directly in statement of affairs. For this thing you are having another list called list G. I'm sorry, list H. That is deficiency account. List H is of deficiency account. In deficiency account you have to show the results of the past 3 years. You have to show the results of the past 3 years. Even in list H you are having two parts. Part 1, items that are contributing to deficiency. List H, part 1, items that are contributing to deficiency. Part 2, items that are reducing deficiency. Sir, what do you mean by contributing deficiency, sir? Losses or decrease in profits. What do you mean by reducing in deficiency, sir? Decrease in losses or increasing in profits. Okay, everybody? Fine. So this is what your all balance sheet and statement of affairs. So for the last and final time, I'm just telling you the overlook, and many of the people will be feeling second problem as very, very difficult. Gurtunda? I mean to tell you, trail balance will be given, reserves and surplus will be drafted, reserves and surplus account will be drafted. I'll be just explaining the overall look, how to solve the problem, so that it will become very, very easy. Fine, just have a look first here. List A, assets which are not specifically pledged. List B, assets which are specifically pledged. Coming to liabilities, list B, secured, fixed. List C, D, E. What are the three things, Amma? Unsecured, preferential, secured, floating, unsecured, non-preferential. And finally, list F, list G for shareholders. preference shareholders, equity shareholders. And reserves and surplus and miscellaneous assets will not come from list A to list G. For that there is a separate list called list H. List H is what is that thing, amma? Deficiency account having two parts. Part 1, items contributing to deficiency. Part 2, items reducing deficiency. Contributing deficiency in the sense increasing in losses or decreasing in profits. Reducing deficiency in the sense increasing in profits or decreasing in losses. For deficiency account, if the data is available, you have to put 3 years data here. You have to present it by giving the 3 years data very clearly in deficiency account. Pakka everybody? Fine. So this is what your overall format. Now remember, now listen very carefully. If there is a contingent asset that is to be settled, if there is a contingent asset that is to be settled, asset might become under either list A or list B. Am I correct or wrong? Even contingent asset, at the time of liquidation, you will be coming to know whether is it your asset or not. Am I correct or wrong? So if it is your asset, it has to be converted to asset either under list A or list B. It's a contingent asset which was still not there in the books of accounts. So it is obviously your profit. Hey, I told you internal reconstruction. No, contingent asset sold. Contingent asset had become your asset and it was sold now. What is the entry? Cash or bank account debtor to reconstruction. Total is your profit. Even here also, you are not having the same item in the balance sheet, but the same item is something like contingent asset or unrecorded asset. Ankondi. It will be more clear. Unrecorded asset. That asset was not recorded now, and now you are having that asset with you. It's an asset either under list A or list B. Till now it is not recorded. The total is profit for you. So list H low, reducing deficiency, you have to write even there also. Clear everybody? Even a contingent liability or unrecorded liability paid, sir. If unrecorded liability has paid now, unrecorded liability has paid, then what to do, sir? If it is liability B, C, D, E, somewhere it will come. And after that you are paying that, right, which is not there in the books of accounts. Obviously your loss. Since it is loss, it has to come under contributing deficiency. And format. So assets which are not specifically pledged as per list A, particulars and estimated realizable value. Remember, it is always estimated itself because you are not selling anything. Board of directors are preparing and board of directors are just giving the same to the High Court or NCLT, afterwards which it will take the decision. So remember, statement of affairs is always estimation, not the reality. Absolutely. It is just an estimation but not the reality. Take care. And remember one more thing, including calls in arrears. People generally forget that one. List A low, we will get even calls in arrears also. What do you mean by calls in arrears? Company called, but the shareholders did not pay. But at the time of liquidation, they are supposed to pay. Of course, if they did not pay, we will be asking bill list contributors. That's a secondary part. But initially, first of all, it's something like calls in arrears. I have to ask the shareholders to pay, which is coming under list A itself. And next one, assets which are specifically pledged as per list B, particulars, estimated realizable value, liability, that is like amount of liability. Now very, very important. Sir, say for example, plant and machinery. Estimated realizable value is 2 lakhs. And your liability for which plant and machinery was pledged is something like 2.5 lakh. How much you have to pay? 2.5 lakh. But how much it is fetching? 2 lakhs. Shortage or excess? Surplus or deficiency? So deficiency 50,000, now it will become unsecured. Did you get my point? Deficiency will become unsecured. Why? Because you are not having that, right? So it will be obviously unsecured. Now moving on to the next thing. Sir, estimated realizable value is 2 lakhs, but say for example your liability is just 1,90,000. How much you have to pay? 1,90,000. But how much it is being fetched for you? 2 lakhs. How much is still you are having? 10,000, which can be utilized for any purpose. And hence it will be carried on to the surplus, which will be again carried on to the outer column. Clear everybody? Amma ardhamainda, which will be again carried on to the outer column. So you have to be a bit more careful while writing list B. That is like how much amount that is being fetched by the assets per you and how much amount is being payment to the liability. Is it surplus or deficiency? If it is surplus, carried on to the outer column. If it is deficiency, unsecured అయిపోతుంది. Now, list A, the total amount whatever you got plus in list B, the surplus amount if any you are having. This can be utilized for the purpose of settlement to the liability holders. Am I correct or wrong, sir? This can be utilized for the purpose of settlement of liability holders. So let's proceed something like in our second example, 2 lakhs of 1.9 lakh. How much is the surplus you are having? 10,000. Say from list A you have got 10 lakhs. Ultimately 10 lakhs plus 10,000. 10 lakh 10,000 can be utilized for the purpose of liability holders. And before starting with your liability holders, you have to present summary of gross assets. Summary of gross assets is gross assets, not net, okay? In the sense, list A total plus list B total. Not surplus or deficiency. List B total will be carried forward and the total will be booked here. And next one, liabilities. So the gross liabilities will be at the left side, particulars and amount. So alternatively, you can also write here ESV, something like estimated settlement value. Gross liabilities, that is what your book value, and this is your settlement value. Sir, one thing, no need to write all these things, Amma. What we can write, sir? Balance, balance, balance. I mean to tell, we can write something like this. Amount available to pay for liabilities. What is the total amount available? List A plus list B, surplus will come, right? Minus, sir, this is very important, listen carefully. Minus, so now you have started liabilities, am I correct or wrong? Liability starts with list B minus secured fixed as per list B. Remember, my dear children, in gross liabilities you have to fill that. But at the settlement thing, you should not fill that. Why, sir? Because it was already settled, it was already been shown in list B, and here you have taken only the surplus. List B, here you have taken only the surplus, which implies that already 2 lakhs 1,90,000, 2 lakhs minus 1,90,000 settled, and you have brought forward 10,000 only here. So you are not supposed to write secured fixed at the settlement value because it was already provided in list B above along with the assets. After that you are having one amount, right? For that, no need to write balance available for preferential creditors and like that. It's not required. Simply you can write like balance. Enough. Next, minus. I mean to tell what is that? Unsecured preferential. List C. Again you have to deduct, and even you have to deduct the gross liability also. You will get some amount which can be called again as a balance. So like that you can proceed. So gross liabilities will be done here, but take care. Coming to equity shareholders and preference shareholders, we will not put the gross liabilities. We have to put only the settlement values. So overall, where you have to be careful. Number one, if surplus is there, it has to be carried forward. List A, nothing great. List B, if any deficiency is there, it has to be carried forward to unsecured. These are the two areas where you have to be careful. Next area, summary of gross assets, you have to present that. List A total plus list B total also. And moving on to the next thing, gross liabilities. Sir, left side, every liability will come except equity share, preference share. Because don't deem that equity and preference as liability. They are internal things. If anything is remained, I will pay to you. So don't concentrate on equity and preference at left side. And right side, you will not get secured creditors. Why? Because it was already been presented along with assets at list B itself. Clear, everybody? So these are the things again where you have to be careful. Now coming to items contributing to deficiency and items reducing deficiency. Sir, no need to by heart these things at all, Amma. You just read the question. If in the question you have come across with dividend paid or dividend declared, answer my question, what is dividend declared? Contributing deficiency or reducing deficiency? Directly at contributing deficiency, you put that amount. You are having P&L account profit balance, credit balance. Contributing or reducing? Directly put at reducing. And also, my dear children, you may have general reserve debit balance. General reserve debit balance. Put at contributing deficiency. In our question, some things will be set off. And after that, he will be putting. But that was absolutely not required. Read the question. Individual items, you can happily write that one. Of course, you will be awarded with full marks. No doubt at all in that. Fine. And yeah, I'll be telling you overriding preferential payments also. What includes in preferential creditors, sir? As you all people know what includes in preferential creditors, but you have to be careful with three things. Number one, taxes which becomes payable within 12 months, immediately preceding the date of liquidation. Whatever kind of taxes, income tax or what is it called, indirect tax or direct tax, whatever the taxes, if anything that has to be payable within 12 months immediately preceding the date of liquidation will become preferential. More than that, if any taxes are there, it will become non-preferential. And next one, please be careful, all wages or salaries. That is like employee related expenses with respect to wages or salaries immediately preceding the 12 months, maximum 4 months, maximum 20,000. To a single person, you have to consider maximum 4 months immediately preceding the 12 months of liquidation. Say for example, if your date of liquidation is something like 1/8/2022, immediately preceding 12 months, which comes to 31/7/2021, in these 12 months, any of the maximum 4 months of the non-repayment will be considered, and that should be a maximum of 20,000 to a single person. And monthly it will be 500 again. Am I correct? No, such kind of thing is not there. Adi oka problem lo meeku vastundi, kani kontamandi idi kuda confuse aitaru. So that's the reason I told. Okay. Immediately preceding 12 months, maximum 4 months, maximum 20,000. And other things are quite common, amma. I mean to tell Employee State Insurance Act, leave salary, gratuity or EPF, a workman compensation fund, all these things. And last but not least, investigation expenses. Investigation expenses. Sir, why investigation expenses will come here, sir? Because I told you, board of directors will be preparing statement of affairs and it will be given to the court of law. So court of law will be investigating, inquiring whether your company is seriously in the trouble, that whether you need literally liquidation or not. That literally your company will has to be closed. If closed, how many people are going to affect? How you are going to compensate them? All the things will be considered. So for that, court will be incurring some investigation expenses. Even that also will be considered as a preferential creditor. Literally to tell you, all the things which are relating to employees, EPF, PF, ESI, workman compensation fund, gratuity fund, leave salary, holiday remuneration, etc. Wages and salaries, maximum 4 months, preceding immediately 12 months and maximum 20,000. Additionally, 2 more things will come. Taxes within the period of 12 days immediately, 12 months immediately preceding the liquidation. And the next one is all about investigation expenses. Please be careful. This is what your preferential creditors. Okay, fine. That's it. So let's go with some problematic part. After that, I'll be explaining you workman compensation fund. Not workman compensation fund, overriding preferential payments, wherein we will get that. Just look here, CRD number 2. I will be highlighting some areas. You just answer that one. Call scenarios list. Don't forget that one. List A. And next, if you observe, here the balance sheet is given on 31st December 2015. But interest is paid only up to June 30, 2015. So still 6 months is not paid, right? So still 6 months is, still 6 months is outstanding. Accrued but not paid. Outstanding interest. So even this has to be considered. Where this has to be considered, sir? Debenture holders, everything is one list itself. So debenture holders, what is being given here? Floating charge. Floating charge in the sense list D. So outstanding interest will also be in list D. Clear everybody? So, ante people will confuse in this problem or in this style of problems. Interest paid up to June 30, 2015. But your original date of liquidation is December 31st, 2015. For another 6 months interest, you have to provide that. Okay? Be careful. And next one, if you observe, mortgage on land and building. People in the examination, they don't know whether is it asset or liability. But be careful, it's mortgage on land and building, not land and building. So it's a liability. And of course, land and building will be somewhere given here. So this will be like a liability which is being pledged on a specific asset which will be coming in list B. And trade creditors owing for wages student, the total amount is 20,000. Nothing information is given. So directly it will be taken to list C. That is like preferential creditors. And trade creditors, since no other information is given, it has to be taken to list E, something like unsecured. Sometimes he will be giving a question like creditors 265,500, out of which 5,500 is preferential. You will be having these kind of questions. So out of 265,500, you have to separate 5,500 as preferential. Remaining 2,60,000 will become unsecured, non-preferential. So please be careful. And now look here, everybody. Secretary. Is he an employee or a person relating directly to the management? He is an employee. He is not, what is it called? Company secretary kadamma. He is not a company secretary or who is directly relating to management. Secretary is an employee. Remember that one. People will confuse at this stage itself. Aithe, they will consider these two things. Or else they will be considering, they will not be considering two things. But managing director is a person who is directly relating to the management. So he is not an employee. Whereas secretary is an employee. If any dues to the employees are there, wages or salaries outstanding, preceding 12 months, maximum 4 months, maximum 20,000. So let's observe. Maximum amount is 3,000, but our maximum limit is 20,000. So amount is safe. Let's check out for the months. How much is per month, amma? 500. So 3,000 divided by 500. 3,000 divided by 500. How many months? But maximum how many months you have to consider? 4 months. So 4 months into 500. 2,000 will become unsecured, preferential. Remaining 1,000 will become unsecured, non-preferential. Clear everybody? So this is another area. MD salary total is unsecured, preferential or non-preferential? Non-preferential. Why? Because managing director is not an employee. Remember that one. So all the remaining things are absolutely easy. Yes. You know the biggest thing in this question? If you observe, date of liquidation is 31st December 2015. In some problems, he will be giving you the balance sheets directly. But in this problem, he did not give the balance sheet. Again, he has just given some raw information to you. From this raw information, either you have to get all the amounts. Strictly speaking, you have to prepare final accounts on 31st December 2015. Will you accept or not? Year ending is 31st December 2015. Am I correct or wrong, sir? So year ending you have to prepare financial statements. Am I correct or wrong? But if you observe, for 2015 accounts were not made. So strictly speaking, you have to prepare P&L account. You have to prepare balance sheet. Ivi rendu prepare cheyali. But if you observe the data, we are having the data of liabilities and we are having the data of assets. How can I prepare P&L account? It's not possible. Then what is possible, sir? Balance sheet is absolutely possible. So if you prepare balance sheet, you will be having each and everything for sure. All the assets are there, all the liabilities are there. But reserves and surplus is missing. Am I correct or wrong? So if you prepare your balance sheet, you will be having all the assets, you will be having all the liabilities, and the balancing figure, whatever you got, is exactly your reserves and surplus. If it is at liability side, it is obviously profit. If it is at debit side, it will become obviously loss. Clear everybody? Sir, one more thing. This reserves and surplus balancing figure including the total profits or losses right from the beginning of the year. Correct or wrong? Right from the beginning of the year. But what is needed for us? If you are having data, you have to separate it for 3 years. Am I correct or wrong? So, what is being adopted in the question is all about, first of all, he will be preparing reserves and surplus account. How to prepare reserves and surplus account, sir? Just look here, Amma. Reserves and surplus account, debit balance, credit balance. So, reserves and surplus, profit will be at which side? Debit or credit? Credit side. Loss will be at which side? So, reserves and surplus account lo, if profits are there, profits increase aithe, it will be at credit side, or losses decreased, credit side. If profits decreased or losses increased, it will be at which side, Amma? Debit side. Okay. So now you just tell me the side where I have to write. Nothing more than that is required. I'll be putting the question now. Yes. So this is the data. Sir, on one day, 31st March 2010, balance sheet showed a general reserve 40,000 accompanied by a debit balance of P&L account. Tell me, general reserve 40,000, which side? Credit side. 25,000 debit balance, debit side. Why? Because it is loss and general reserve is profit. And next, in 2011, company made a profit of 40,000, credit side. Declare a dividend. If you're declaring dividend, your profits are decreased and hence it has to be at which side, Amma? Debit side. One more thing you have to be careful. 10% dividend on equity is declared, but if you observe in the question, you are also having preference. So you have to be very careful. Without declaring the dividend to preference shareholders, it is highly impossible to declare the dividend to equity shareholders. So 10% dividend to equity shareholders is declared, which implies that you also have already declared the dividend to preference shareholders. So automatically you have to debit not only with the dividend of equity but also with the dividend of preference. Here equity directly appearing, preference indirectly appearing. So even it has to be taken to debit side. Debit side, two dividends will come: equity dividend, preference dividend. Company suffered a total loss, which side? Debit side. And also loss of stock due to fire, which side? That's it. Now reserves and surplus is absolutely completed. After this, after preparing reserves and surplus, you will be getting one balancing figure, which is nothing but closing balance. 2014 December 31st ki closing balance. What is our current year, Amma? 2015, and hence it will become opening balance. So now I already asked you to prepare the balance sheet, correct or wrong? Put the assets, put the liabilities, put the opening balance of reserves and surplus, and you are going to get a balancing figure which is relating to current year. Pakka everybody? So if you want, you can prepare balance sheet, or if you want, you can also prepare trail balance. That is what adopted in our materials. Even study material has adopted to prepare trail balance. So very simple. All the assets will be having some debit side and all the liabilities will be having at credit side. And look here, P&L account on 1/1/2015. How did you get that? Reserves and surplus balancing figure. That will be somewhere either at debit side or at credit side. Balance vachedani batti either profit or loss, and then the total balancing figure for the year. Okay, everybody? Sir, in this problem, fill the statement of affairs normally. Since 2015 books of accounts were not yet prepared, you have to prepare 2015 books of accounts by drafting P&L account to balance sheet. Point number 1, you cannot prepare P&L account. Why? Because no data. Then what can I prepare, sir? Balance sheet can be prepared. If balance sheet is prepared, my dear children, please be careful. If balance sheet is prepared, you are going to get one balancing figure, which is nothing but reserves and surplus. But that reserves and surplus is the total year's reserves and surplus with the available data. First you prepare reserves and surplus account, where you are going to get the balancing figure, which is opening balance, and after that in balance sheet or in trail balance you are going to get current year profit or loss. Clear everybody? That's it with the problem. మీరు అడగచ్చు, సార్ రిజర్వ్స్ అండ్ సర్ప్లస్ వేయడం మర్చిపోతే, let it happen, then the total amount will be available to you in the trail balance. Take that as deficiency and put it in deficiency account. మరి మార్క్స్ తీయడా, మర్చిపోతే మార్కులు తీయకుండా ఎందుకుంటాడు? But ultimately my point is something that your answer will come, but 2 or 3 marks will be deducted for sure. Okay everybody? Fine. So whatever you people told here, debit and credit, నేను మళ్ళీ చెప్తున్నా, గుర్తు పెట్టుకోండి. In this problem, while doing the problem, please don't look at your solution, printed solution with respect to your list H. You do it, you will get for sure. Debit in the sense contributing deficiency, credit in the sense reducing deficiency. You directly put that thing, you will get for sure. And last but not least, in list H you will get one more thing. Sir, book value estimated to produce 1,20,000 is estimated to be 1,30,000. Surplus or deficiency? So it will be coming in items reducing deficiency. 2,00,000 to 1,30,000. Items contributing to deficiency. 20 to 4 contributing to deficiency. 50 to 30. 87 to 74. 1,80,000 to 1,70,000 contributing. Only one thing, 120 to 130 items reducing deficiency. This is the additional thing that you have to be careful. Understood everybody? So this is the problem. I don't know literally why people will confuse a lot, but that is obviously very easy. So only one thing I'm telling you, remember for the last and final time, take care, prepare statement of affairs, it will be over. And next, prepare reserves and surplus account. If you forget, not a big deal, but rule gurtu petteskondi for this problem, prepare reserves and surplus account. You are going to get one balancing figure, which is opening balance. Prepare trail balance, put this one, you are going to get current year balancing figure. After that, put everything in your statement of deficiency, wherein you are having 2 parts, contributing to deficiency and reducing the deficiency. Clear everybody? Fine. And next one, overriding. Yes, sir, if any cost of winding up expenses are there, those things will not be appearing in statement of affairs. It will be kept just in the part of note. Sir, why cost of winding up expenses will be kept in form of note? Sir, cost of winding up expenses in the sense company is being closed. When the company is being liquidated or winding up, then we are going to pay some amount at the time of liquidation or winding up. But now the company is not liquidated, now the company is not winding up, then what you have to do, sir? You are just preparing a statement of affairs and submitting to the board of, board of directors are preparing the statement of affairs and submitting to NCLT or High Court. So now in that, board of directors also has to mention, if our company is being liquidated, how much amount will be given to the liquidator as a remuneration, and also how much amount that I am going to incur as a cost of winding up, and also how much amount is uncalled capital and will be called from the shareholders now. Did you get my point? 3 things should be mentioned separately. Number 1 is cost of winding up. Number 2, what is the next one? Liquidation expenses or cost of winding up expenses. Number 3, adi okate kada. Liquidators remuneration. And what is number 3, amma? Uncalled capital. Hey, take care, I'm not telling calls in arrears. Uncalled capital. As per the requirement, liquidator may call the uncalled capital from the existing shareholders, and hence these 3 can be mentioned after the statement of affairs just as a note, amma. After statement of affairs, it can be just mentioned as note. The above statement of affairs is subjected to cost of winding up. The above statement of affairs is subjected to uncalled capital, which is to be called up. Also, if they can estimate, the above statement of affairs is subjected to liquidators remuneration. Even we can call this one also. Clear everybody? Yes, this is what absolutely with your statement of affairs. We are having still two more things to discuss with liquidation. Number one is overriding preferential payment. Number two is liquidator's final statement of account. So I'll be just giving you some introduction about overriding preferential payments. See, overriding preferential payments is actually very easy. Overriding preferential payments. Before learning this one, you have to learn rule number 1. If any workman compensation fund is there, it has to be treated at pari passu, equally ranked with the due to secured creditors. Please be very careful. This is rule number 1. If any workman compensation fund is there, it has to be treated pari passu, equally ranked with the due to secured creditors. In the sense, say for example, secured creditors are 1,50,000 and assets realized, secured assets realized are something like just 1 lakh. Workmen compensation fund is something like 50,000. So just answer my question. How much is the due to secured creditors? 1,50,000. Due to workmen compensation fund 50,000. How much is secured assets realized, Amma? 1 lakh. So now you have to distribute 1 lakh to both secured creditors and workmen compensation fund. In the ratio 1,50,000 is to 50,000. Okay. That is like in the ratio of their outstanding balances. How much it comes to? 3:1. How much is the final amounts? Rupees 1 lakh has to be distributed to creditors. 75,000, 25,000. Up to this clear, everybody? That is rule number 1. What is rule number 1, Amma? Workmen compensation fund should be treated pari passu with secured creditors, that is equally ranked. This is point number 1 or rule number 1. And rule number 2, let's start after the break. Okay, fine. You can go for break. So let's continue. But before that, I would like to address some of the doubts that were asked online students. With regards to internal reconstruction, if intangible assets to be written off if it was not given in the question, whether to write off or not, better not to write off. Intangible assets gurinchi question lo emi iyakapothe better not to write off. Only if it was mentioned, write it off. Otherwise, don't write it off. Is it required to do all the problems in liquidation or go with other than statement of affairs? I already told for that one. Just prepare at least to a minimum extent. I mean to tell at least go ahead with list A, B, C, D, something like that, and then go and solve the problems. I mean to tell, don't you, if time is permissible to you, prepare hard. If enough time is not there for you, you just at least ante attempt cheselaga chuskondi. That's what my point. Is it sufficient to revise Reconstruction chapter in 44 ebook? I don't think it's recommended, because to everyone I'm telling, 46th edition of our materials were totally devastated. I mean totally reconstructed anmata. So better to go only from 46th edition. Antakana mundu versions unte, those were not recommended now. It's only from 46th editions are highly recommended. Fine. So let's continue with overriding preferential payments, and immediately after completion of this one, hardly within half an hour we are going to start with consolidation, and in the last half an hour let's continue with ESOPs. So at any cost in this session, let's try to complete these 3 chapters. ESOPs, nothing great to discuss. It's very, very small chapter. Hardly even 15 to 20 minutes is highly enough. Anyways, let's continue. So rule number 1, workmen compensation fund has to be treated pari passu or equally ranked with secured creditors. So the total amount realized is 1 lakh. Fine, the total amount realized is 1 lakh. It has to be distributed between both secured creditors in workmen compensation fund in their outstanding balance ratio, where it comes to 75,000 and 25,000. This is first rule. Now, the second rule, overriding preferential payments includes 2 things, amma. Number 1, listen very carefully everybody, balance of workmen compensation fund, and next, amount of secured creditors that is sacrificed due to payments made for workmen compensation fund. Hope you might have understood. So overriding preferential payments includes 2 things. Number 1, balance of workmen compensation fund. Number 2, such amount of secured creditors, how much portion ever they have sacrificed for the payment of workmen compensation fund. Just if you look here, the first one, what is the balance of workmen compensation fund we are having, amma? Out of 50, 25 is paid. So balance how much is there, amma? 50,000. Sorry? 25,000. That is what your balance of workmen compensation fund on a first note. Second one, sir, strictly speaking, this 1 lakh should belong to whom? Secured creditors. But because of the rule of Companies Act 2013 that workmen compensation fund has to be treated pari passu, we have given how much amount to workmen compensation fund, amma? 25,000. So secured creditors has sacrificed how much amount? 25,000. Even this 25,000 will also become preferential payment. That is overriding preferential payment. Is the logic clear? So that is what your overriding preferential payments is all about. Okay. Now, say for example, if the amount realized is 2 lakhs, if the amount realized is 2 lakhs, then is there any problem? No, because total amount to secured creditors was already been given, and also workmen compensation fund is also there. So there's nothing great at all. And say for example, if the amount realized is 4 lakhs, say for example, amount realized is 4 lakhs. So it has to be given to secured creditors and workmen compensation fund. Is there any problem in that, in such a case? No. Still we are having additional amount where we can take that and set off the other liabilities also. Okay. So rule 1 gurtu pettukondi, workmen compensation fund has to be treated at par with secured creditors. Rule 2, overriding preferential payments is balance of workmen compensation fund, and the next one, amount that is sacrificed by secured creditors for the purpose of workmen compensation fund. Prudvi, this is being a continued topic before the break. Break mundu continue topic, break mundu topic ni continue chestuna. Just go back, check that and come, then you will understand. Fine. So here we are having an example for that. So let's continue with that example. It will be better for you. Secured creditors 1.25 lakhs, workmen compensation fund 2.5 lakh. How much is amount realized? 2 lakhs. So let's start. So amount realized is 2 lakhs. Rule number 1, you have to treat workmen compensation fund along with secured creditors kadamma. So secured creditors is to workmen compensation fund. How much amount is there amma? 1.25 and 2.5. So 1,25,000 is to 2,50,000. How much it comes to? 2 lakh in this ratio amma? 66,000, 667, 1,33,333. So this is rule number 1. And rule number 2. Now let us start overriding preferential payments. What is the first one, amma? Balance of workmen compensation fund. What is the balance of workmen compensation fund? You are having 2,50,000 minus 133,333, which comes to 116. 116,667. So this is including in overriding preferential payments. Next one, amount sacrificed by secured creditors. Am I correct or wrong? How much is the total payment that we have to make to secured creditors? 1,25,000. Because of this workmen compensation fund, we have paid only 66,667. Still, how much is sacrificed by secured creditors? 58,333. Something like out of 1.25 lakhs, we have given only 66,667. So this amount was sacrificed. Now even this also has to be considered as preferential payment. That's it. Clear? Now say for example, if the security realized is only 1 lakh, let's go with even that one also. If the security realized is only 1 lakh, then again secured creditors and workmen compensation fund. So tell me, 1.25 is to 2,50,000. How much? 33,333, 66,667. Now let's start with rule 2. What is rule 2? Workmen compensation fund balance. How much is there, amma? Out of 2,50,000, 66,667 is settled. Balance is. So this is what the first point. And next one, amount sacrificed by secured creditors. How much is sacrificed by secured creditors now? Strictly speaking, we have to pay 1,25,000 to them, but we are paying only 33,333. So how much I have to sacrifice? But if you observe, the realized amount is only 1 lakh. Correct or wrong? So how much is paid to workmen compensation fund now? 166,667. Strictly speaking, this amount has to be taken by whom? Secured creditors. So sacrifice portion is only this one. In the sense, 1 lakh minus 33,333, which comes to 66,667. Did you get my point? So strictly speaking, okati cheppi aapeyochu, but two things were deducted from different amounts. Have a look over to that. In case 1, total amount realized is 2 lakhs. If I have given 1,25,000 to secured creditors, then it could be fine. But what I have done as per rules, workmen and secured creditors has to be taken in equal proportion. So strictly speaking, I have realized 1,25,000 which can be given entirely to the secured creditors. But since I have given only 66,667 out of 1,25,000, balance 58,333 was sacrificed by the creditors in example number 1. In example number 2, strictly speaking, balance sacrifice should be 91,667, but the available amount is only 66,667. How is possible to them to sacrifice 91,000? Hey, is the logic clear? Amount realized is only 1 lakh amma. ఎంత కష్టపడి ఇచ్చినా, how much ever you try, you cannot finally give the total amount to the secured creditors. Maximum amount you can give is only 1 lakh. But how much you are giving? 33,333. So 66 is sacrificed. In case 1, how much amount you can give to secured creditors? 1,25,000. But how much you are giving? 66,000. So how much is sacrificed? 58,000. Did you get my link? Did you get my link, everybody? How much amount that I can give to secured creditors? Have that, you will get the answer. Case 1, how much is amount realized? How much amount I am supposed to give to secured creditors? But how much I am giving? So ultimately, how much is the balance sacrifice? 58,000. Clear with case 1? Now come to case 2. How much is the maximum amount that I have to give to creditors? 1.25. But how much is realized? So how much is the maximum amount now I can give to creditors? 1 lakh. But how much is given? 33,000. So how much is sacrificed? 66,000. Is the logic clear? So you have to check out with only one thing. How much amount that I can give to my creditors. So how much is being sacrificed? If you have seen these two things, it will become very easy. So overriding preferential payments ante namma. First one, rule 1. Workmen compensation fund has to be treated at par with secured creditors. Rule 2, balance of workmen compensation fund, secured creditors sacrificing. So while checking out sacrificing, always don't take the amount due to secured creditors. Amount that can be payable to secured creditors. If you take that, it will get easy for you. Okay na amma? So now order lo ఏమవుతుందంటే రీపేమెంట్ ఆర్డర్ ఉంది కదమ్మా. సో now let's move on to the next thing. What is our next thing is all about liquidators final statement of account. So initially, who has submitted to whom for the order of liquidation amma? First of all, somebody might have requested by the High Court, and High Court is requesting the Board of Directors to submit statement of affairs either to High Court or NCLT. Then this body will be checking out with the statement of affairs, and then it will be checking whether it can be liquidated or not, and finally it will be appointing a liquidator if that company is about to liquidate. Now the real work and real progress process will start. Liquidator will be handing over all the assets and all the liabilities. What is the work of liquidator? Sale of assets and settlement of liabilities. What is the work of liquidator, amma? Sale of assets and settlement of liabilities of a liquidator, for which liquidator is preparing statement of affairs or liquidator statement of account. Liquidator's final statement of account అనొచ్చు, liquidator statement of affairs అనొచ్చు, liquidator's final statement of account అనొచ్చు, which is literally tell you cash book. Strict terminology as per our materials కావాలి అంటే liquidator's final statement of account. This is what your strict terminology. It is nothing but a cash book amma. So debit side, you will be booking with the sale of assets, whatever are there you will be having. Credit side, settlement of liabilities. Remember, sale of assets can be done in any order. Sale of assets can be done absolutely in any order. But coming to settlement of liabilities, it is having a particular order. Coming to settlement of liabilities, you are having a particular order. So now what is the particular order that we are having? Please listen very, very carefully. Statement of liabilities lo, what is the order? Sir, who is ordering for the liquidation? Who is ordering for the liquidation? Of course, court, right? So court will take its expenses first, which is nothing but legal expenses. Clear, everybody? Who will take the first expenses, amma? Court will take the legal expenses. Order number 1. And in the order number 2, please listen carefully. Ultimately, my dear children, please listen carefully, everybody, who is being appointed by the court now? Liquidator. So give the benefit to liquidator itself. So liquidator's remuneration. And next one, ultimately you are liquidating your business, right? Liquidation expenses. In some problems, these two things will be interchanged, but it's not a big deal. You can do it in any style. Sometimes expenses mundochi, remuneration afterwards he will be writing, but nothing great in that. It's like absolutely fine. So please take care. First one, who is ordering for the liquidation? So it will take legal expenses. Next one, liquidator personal benefit, that is liquidator's remuneration. Now the company's benefits, company's works will start. Who is being ultimately liquidated? Company. So company's liquidation expenses is on the third rank. Inka maniki telisinde. Ultimately you have to settle to the creditors. Creditors are totally in 4 style we have discussed. What are those 4 style? Secured, fixed, unsecured preferential, secured floating, unsecured non-preferential. Hey, I am speaking about the ranking order. Likewise, how we have written list B, C, D, E in the same order itself. So now 4, 5, 6, 7. Secured. Tell me. Secured, fixed, unsecured, preferential, secured, floating, unsecured, non-preferential. Pakka everybody? Fine. Only one more thing that you have to be careful. Here, if any things are there, then overriding preferential payments will come at this stage. But luckily, in any of the problems, right from the old IPCC till now, you are not having a combined problem with overriding preferential payments and liquidator's final statement of account. Hope my point is clear. Overriding preferential payment, separate question is there, but combined question is not at all there. So it is almost relieved for you. Okay. This is the order. But while presenting, remember, while presenting, all secured shall has to be at one place and all unsecured shall has to be at one place. While presenting, I am telling, while presenting in liquidator's final statement of account, secured shall be at one place, unsecured shall be at another place. Okay, now, amma? So it is something like liquidator's final statement of account, sale of assets in any order. First one, legal expenses, liquidator's remuneration, liquidation expenses, secured, fixed. Next, unsecured, preferential, secured, floating, unsecured. Hope you have seen how I have written. In the sense, all the secured is at one place, all the unsecured is at another place. Am I correct or wrong, sir? But take care, my dear children. One thing that you have to be careful here is that this is presentation order, not the live, what is it called? Not the repayment order. Repayment 1, 2, 3, 4, 5, 6, 7. Pakka? Last but not least, you have to repay to preference shareholders. Now the real problem starts. What is that real problem, sir? One equity shareholder is of one class. Another equity shareholder is of another class. From some equity shareholders you have to take some things. To some equity shareholders you have to pay some things. So how much is to be paid to one equity shareholder and how much has to be contributed from another equity shareholders? So that is what our final step. Two things you have to be careful in this entire concept. Number one is liquidator's remuneration. Number two is equity shareholders. From some equity shareholders you have to call some amount. To some equity shareholders you have to pay some amount. So what is that? How is that? First let's discuss about equity shareholders by taking one example and then let's proceed for liquidator's remuneration. So let me go with the question. Liquidator's final statement of account. Yes, CRD number 6. Fine. So you'll be having some deficiency, right? See, I'm just not concentrating on all the things because it's just filling it out. I'm just concentrating only on the area where you will be feeling difficulty. That's it. Just if you observe here, from the sale of assets, you have totally got 75,000 plus 12,25,000. And out of this total cash, you have to pay the items like liquidators remuneration, liquidation expenses, debenture holders like order gurtundi kadamma, secured fixed, unsecured preferential, secured floating, unsecured non-preferential. But while presenting, all the secured has to be at one place and all the unsecured has to be at another place. Okay. So, after getting this 1225 plus 75,000, something you have got 13 lakhs and you have to repay out of 13 lakhs, 36,750, 27,250, 306,250, 38,287.50. After completion of all this thing, you will be left with some amount, right? And also you have to pay to the preference shareholder, that is 6 lakhs. So, ultimately, you are having a deficiency of 11,000 in cash after payment to the preference shareholders. Did you get my point? So, preference shareholders ki payment kuda chesina tarvata, if you are repaying 6 lakhs, then you will be left with a negative 11,000. So, literally, if I was not wrong, 6 lakh minus 11,000, how much? 5 lakhs? 89,000. It is something that up to here, you might have left with a cash of 5,89,000. Now you have to repay to both equity shareholders, preference shareholders. Did you get my point? So how much is to be repaid to preference shareholders? 6 lakhs. And also you have to repay to the equity shareholders some amount. What is the total amount that is to be repaid to equity shareholders? Just it will be here. Take the total amount. 1,87,500 plus 4,50,000. What is the total amount? 6 lakhs? 37,500. So, out of 6 lakhs 37,500, still you will be left with a cash of 11,000 and then the total deficiency is 626,500. Amma just naku ee computation cheppara. 13 lakhs minus 36,750 minus 27,250. How much is that? 6 lakhs? 11,000, no? Right? Fine. So just look here. I'm getting it to you in a better way. Please look here. Amount available 6 lakhs 11,000 minus preference shareholders. How much you have to pay? 6 lakhs. So balance how much is there? 11,000 minus equity shareholders. How much is the total payment to equity shareholders we have to do, Amma? 6 lakhs 36,500. This is the total amount you have to pay. Ultimately, you were left with deficiency. How much is the deficiency? 6,26,500, which is what your absolute deficiency is. Now listen. How much amount is to be called and how much amount is to be paid? For that, how many number of equity shares you are having? How many number of equity shares? 10,000. So, total deficiency is 626,500. How many number of shares we are having, Amma? 10,000. So, deficiency per share 62.65. Now you are having two classes. What are those two classes? 2,575 paid, 7,560 paid. So up to this understood everybody? Get the total cash, repay the liabilities till end varaku minus cheseyandi. That is even minus preference shareholders, minus equity shareholders also. After deducting all the things, you will be left with one figure, which is called as deficiency. Now number of shares. How many number of shares you are having? 10,000. So 6,500 divided by 10,000 is nothing but 62.65. Now you are having 2,500 shares of rupees 75 paid. 7,500 shares of rupees 60 paid. Now look here. How much a share has to be borne? 62.65. But how much each and every share has been paid? 75. Enough of bearing 62.65, but you had already paid 75. So now company is having additional amount. So company has to give to equity shareholders. How much, amma? 75 minus 62.65, which is 12.35 multiplied by 2500 shares. Clear, everybody? Now come to the second slot. How much you have to bear deficiency per share? 60. But how much you are absolutely bearing now? 60. But your deficiency should be 62.65. Give me another 2 rupees. So that is 2.65 multiplied by 7,500 shares. This 19,875 shall has to be collected from the shareholders. Pakka, everybody? So just look here. After repaying to preference shareholders, you have left with how much amount, amma? 11,000 plus how much you are collecting now? 19,875. How much it had become? That is what I have to pay to the shareholders. Clear, everybody? So simple ga chaptunna. Remember how to solve this one. Find out the amount available minus preference shareholders minus equity shareholders. Then you will be left with deficiency. And now deficiency divided by number of shares. You are going to get deficiency per share. Now observe. 80 rupees paid, 55 rupees paid, 2 classes ankundam. Total deficiency is 60 rupees per share. How much he has paid, amma? 80. How much he has to bear, amma? 60. But already paid 80. So now company has to give 20. And next coming to 55. You have to bear 60. But you have paid only 55. So you have to pay me another 5 rupees. Pakka, everybody? That's it. And now for this payments, I will be asking the existing shareholders who are called as A-list contributors. If any of the existing shareholders denies to pay, then I will be asking the previous shareholders or previous contributors who are called as B-list contributors. All the present shareholders are called as A-list. All the past shareholders are called as B-list. How many months past shareholders has to be considered, sir? Less than or equal to 12 months immediately preceding the date of liquidation. Pakka, everybody? Remember, my dear children, you have to consider only the accretion, not the total amount. I mean to tell, say for example, A has transferred his share to B. When A is a shareholder, his liability is 10,000. I mean to tell, when A is a shareholder, company's liability is 10,000. But when he has transferred the share to B, then the liability had become 12,000. So to the extent of 10,000, both A and B are liable. But to the extent of this additional 2,000, A is not having any relation. So who is liable for this one? Only B. Clear, everybody? So this is another point that has to be considered in B-list contributors. And moving on to the next thing, please be careful. One more point. If there are more than one equity shareholder in the B-list contributories, I mean to tell, say for example, X and Y are the present shareholder, D needs to pay. A transfer to X, B transfer to Y. Since X and Y are not paying, I have gone for Mr. A and B. So now A and B are jointly liable for the dues that are having in the company. In which ratio, sir? In proportion to their shareholding. Clear, everybody? In proportion to their shareholding, they are absolutely liable. So this is all about B-list contributors. Nothing great. You are having only 2 problems. Solve the 2 problems. You're going to get, you may get a question in examination. The surprise thing is that he will be asking the same question for 10 marks. B-list contributors question, 10 marks ki adugutunnadu. Nothing great in that. It's very, very simple. So only thing you have to take care is all about how much amount a person is liable. How much amount a person is liable. Sir, shareholders is having limited liability or unlimited liability? Limited or unlimited? Limited liability. In the example that I have told, in this example, A and B are liable. For how much amount, amma? 10,000. In one specific ratio. That ratio is shareholding. And B is exclusively liable for how much amount, amma? 2,000. Clear, everybody? Say, for example, after dividing the liability between A and B, you got something like 5,000, 5,000. And of course, B will be having some additional liability like another 2,000. Anukundam. How much is A's liability, amma? 5,000. But his uncalled portion is only 2,000. Did you get my point? His uncalled portion is only 2,000. But his liability is around 5,000. Now ultimately, how much is to be fixed his liability? 5,000 or 2,000? Only uncalled portion. Shareholders' liability is limited only to uncalled portion. Last and final point with respect to B's contributors. Say for example, B is a shareholder. Face value of the share is 10 rupees. When B is transferring to Mr. C, B had paid 8 rupees to the company. And now after C is becoming the shareholder, C has paid another 1 rupee. Did you get my point? So when B is shareholder, he paid rupees 8. When the share is transferred to C, and C had paid 1 rupee to the company. And ultimately, now answer my question, my dear children. How much is the liability to B? 2 1 if C has cleared. Did you listen my question? If C has cleared. If C has cleared, how much is the liability to B? 0. If C has cleared, he is a present shareholder. Liquidator first will ask C. If he has cleared, no liability to B. Say for example, how much is due to C strictly? 1 rupee. Ante kada? Because 8 rupees paid is transferred to Mr. C. Paid 1 rupee. Total 9 rupees is paid. On this share, how much is unpaid, amma? 1 rupee. Company is asking. Give 1 rupee. C is not paying. Liquidator is asking, C is not paying. So liquidator can ask past shareholder, who is Mr. B. How much amount? Only 1 rupee. Am I correct or wrong? 2 rupees cannot be asked. Why? Because on that share now the liability is only 1 rupee. So take care with this one. So in some questions he will be telling at the end. X transferred his share to A, where A had paid the total amount. Or where A had paid the uncalled portion. Like this he will be telling. So for those questions you have to be careful. And to that person there will be no liability at all. Okay, Namma? So that's another area where you have to be a bit careful. Look here. X was a transferee of shares held by Mr. S. So S transferred his shares to X. And X paid 30 rupees calls in advance immediately on becoming a member. X paid total amount immediately after becoming a member. So now what is the liability of S? 0. So S column has to be deleted now. Asrika, yes and a concept ki there is no liability. So you have to delete this column and check out. Clear, everybody? Something like 25, 42, 57, 85, 95. This is how you have to check out. Clear, Amma? So respond, understood or not? And one more thing, చాలా మంది చేసే తప్పు ఏంటంటే మనకి ఇప్పటి వరకు చెప్పుకుంది ఏంటి? Example I told you, 10,000, 12,000. So how much increase is there? 2,000. This is how we have discussed. But immediately by looking this one, in the examination, you will feel drastic. Because increase we have discussed, but decrease we did not. But observe the dates here. Did you get my point? His point is all about 25 is the date as per chronological order. 25 is the liability when P is having. When who acquired the share? Now the total liability had become 42,000. Clear, everybody? So 25 to 42, 42 to 57, 57 to 85, 85 to this has to be deleted. Now for 25,000, all the people P, O, Q, R, T are liable. Correct or wrong, sir? Of course, yes. How much is increased now? 17,000. For that 17,000, P is not at all liable. Now who are liable, sir? O, Q, R, T. Clear everybody? And next 42 to 57. Again you will get one difference. For that difference, who is liable, sir? Q or P? For the last difference, 85 to 95, 10,000. Who is exclusively liable? P is the exclusively liable person. Clear everybody? Sir, don't deter and don't fear. Decrease అన్న కాన్సెప్ట్ వస్తే నీకు ఎగ్జామ్లో అసలు క్వశ్చనే రాదు. Because if it is decreased, then the previous shareholder liabilities also should be decreased, right? So he will not test in that area. Only increase sort of questions are there. He will be testing in that one. But only one of the greatest advantage is something like he will be asking it for 10 marks in all the recent times. Same question is asked for 5 marks also. Similar line question. But nowadays, in the past 2 attempts, whenever he has asked this B list contributors, asked for 10 marks. And last but not least, liquidators remuneration. How to deal with liquidators remuneration? Only one thing, amma. Check out whether the amount is sufficient or insufficient. If it is sufficient, directly into rate by 100. If the amount is insufficient, into rate by 100 plus rate. Did you get my point? How to check out whether the amount is sufficient or insufficient? Just look at CRD number 4. Sir, liquidators is about to receive remuneration 2% on assets realized. I'm not concentrating on that one because directly amount realized from assets multiplied by 2%. How much is the total amount realized from the assets? 50,000. So, I'm sorry, 50 lakhs. This amount has to be paid to the liability holders. Am I correct or wrong? Let's go with the order. Sir, first you have to pay to liquidators remuneration. Am I correct or wrong? So, just have a look. 2% on assets realized. How much is initially liquidators remuneration? 50 lakhs into? Yes. Amount realized 50 lakhs. Minus, start with the order, okay? Liquidators remuneration. 50 lakhs into 2%, which comes to 1 lakh. What is the balance? Okay, that is fine. Next, liquidation expenses, right? How much is liquidation expense? So, minus expenses of liquidation, 50,000. Balance, 48 lakh, 50,000. Now look here. Sir, you have to pay 3% amount distributed to preferential creditors. How much is the preferential creditors you are having? 1,50,000. On that you have to pay a remuneration of 3%. Check out, my dear children. How much amount is with me? How much amount you have to pay? 1,50,000. Sufficient or insufficient? And hence there is no problem at all. So once again, minus liquidators remuneration. 1,50,000 into 3%. How much amount? 4,500. And also minus, you have to pay the amount to preferential creditors to the extent of rupees 1 lakh. So tell me the balance. 1,50,000, 1,50,000. Are you sure? Okay, tell me. 46, 95, 500. And moving on to the next thing. And also you have to pay. Liquidation expense is over, preferential is over. Secured creditors is also there. Am I correct or wrong? So 1 second, I'm sorry. Here you have to pay first to the secured creditors. Let me change the order properly. Fine. Minus secured creditors. Even in the examination, you will read the entire question, right? You can just put the rankings, like to whom we have to pay or something like that. And so now secured creditors. How much, Amma? 20 lakhs. Balance. So even then the amount is highly sufficient to pay to the preferential creditors. So minus liquidators remuneration on preferential creditors 4,500 minus preferential creditors 1,50,000. Balance 26,95, 500. Up to this okay everybody? Fine. This is over. Preferential creditors is over. secured creditors is also over. Now look carefully. Amount due to unsecured creditors is 30 lakhs. But how much is the available amount to you? 26, 55, 95, 500. Sufficient or insufficient? Now the problem starts. If it is insufficient, remember my dear children, not rate by 100, rate by 100 plus rate. Because this is the amount has to be served for two purposes. One purpose is for remuneration, one purpose is for distribution. It has to serve for all the two purposes, and hence we have to proceed something like minus liquidators remuneration. 26,95,500 multiplied by how much is the percentage, amma? 3%, 3 by 103. 70,510. And what is the balance you are having? $26,16,990. This is the amount that is distributed to unsecured creditors. Directly multiplied by 3%. Check it out. That is what the logic actually. Since we don't know that amount initially, you have to consider rate by 100 plus rate. So, sincere note and straight note. If the amount is sufficient, rate by 100. If the amount is insufficient, rate by 100 plus rate. Pakka everybody? And there ends with the concept of liquidation. So, if you are having any doubts, just for 5 minutes, you can check out and you can ask. And then we are going to proceed for consolidation. So, straight models in the liquidation in the sense, first liquidators final statements of account. Final statement of account lo deficiency model okati cheppam kada. Be careful with deficiency. In another problem, it is having another model. Just if you have looked, it will be understandable to you, no doubt at all. It's very simple. And after that one, bill is contributors. And next, liquidators remuneration, he will be asking for 5 marks in last question. Or in any question, combination law is asking it for 5 marks. And statement of affairs rarely being tested. Of course, till now it was not also being tested, but take care. So let's start with the next chapter then. That's all about consolidated financial statements. Remember, disclaimer I am giving. The greatest difficulty of this chapter is all about నువ్వు ఏ మోడల్లో అయితే విన్నావో అదే మోడల్లో వింటే ఈజీ. Some people will be telling 4C approach or something like that. And some people will be telling step 1, step 2 to step 8 or something like that. So, listen. Disclaimer, in whatever model you have listened, follow that model. Otherwise, eradicate the total thing. Now I will tell you some steps. Just listen in that model. You can solve any kind of problem without any difficulty. Of course, no doubt, you can solve any kind of problem without any difficulty. But the biggest problem in this style, who have listened under 4C approach, అప్పుడు మీరు sums చూసుకుంటే అవ్వదు, చేస్తే అవుతుంది. So please be careful. Consolidated financial statements. Yes. So let's go with steps approach. Step number 1. What is step number 1, Amma? What is step number 1? We are having basic data. Whereas under basic data, we are going to get 4 things. Date of acquisition, date of consolidation, percentage of holding interest, percentage of minority. In some cases, percentage of holding interest will not be directly given, wherein you have to compute. Say for example, he told 1600 shares of subsidiary company were held, wherein the subsidiary we are having 2000 shares. Then 1600 divided by 2000 multiplied by 100, which comes to 80%. And then minority comes to 20%. And moving on to step number 2, one is very easy, but take care step number 2, which is like heart of consolidation, that is like analysis of reserves and surplus. Whose reserves are to be analyzed, Amma? Subsidiary company reserves are to be analyzed, and this is to be analyzed by whom, Amma? Holding company. So while analyzing the reserves and surplus of subsidiary company, remember each and every reserve has to be considered. Whether it is general reserve, P&L account, capital redemption reserve, securities premium, even employee stock option fund, or even any other gratuity fund, whatever, if it is called as reserve, it has to be analyzed. So you have to consider a reserve and you have to consider closing balance. And now this closing balance has to be separated into 2 parts, like opening balance and current year. Coming to opening balance, it is always pre, which is nothing but capital profit. Coming to current, you have to check out till date of acquisition, after date of acquisition. Till date of acquisition, it will become pre, which is like capital profit. After date of acquisition, it will become post, which will become, sir, if it is P&L account, revenue, profit. If it is any other reserve, it will become revenue reserve. In some questions, he will not be giving opening and closing balances. Only we will be available with closing. In such a case, you need to consider that opening is exactly equal to closing. Clear, everybody? Opening is exactly is equal to closing. When dash is not given. When opening is not given, you have to assume that closing is exactly equal to opening. So take care, my dear children. What are all the items that we are going to get in step number 2? Number 1, P&L account. Number 2, general reserve. Number 3, revaluation plus depreciation. And finally, number 4, unrealized profits. So let's discuss. Wherein P&L account, general reserve, absolutely no problem. In one and only one problem, we are having pre-incorporation profits. Pre-incorporation profits is nothing but capital reserve. Don't confuse for pre-acquisition profit, okay? It's pre-incorporation profits. Even it also has to be considered. So pre-incorporation profits is nothing but capital reserve. It also has to be analyzed between pre and post. I mean to tell opening and current year, then into pre and post. Now moving on to the next thing, revaluation. So let's have an example with the revaluation. Same example. So on 1/1/2011, say for example, there is an asset which is been showing at a book value of rupees 1 lakh and was revalued on 1/7/2011 at 1,20,000, and rate of depreciation is equal to 10% per annum. I know. Rate of depreciation is equal to 10% per annum. Now look carefully, everybody. Sir, you have to take one thing, that you should not compare directly 1 lakh to 1,20,000 because absolutely the dates are different. Since the dates are different, you have to check out the elements very carefully. So now on 1/1/2011, you are having an amount of rupees 1 lakh and deduct depreciation. So depreciation you have to provide for 6 months, right? Which comes to an amount of 5,000. That is 1 lakh into 10% into 6/12, which comes to 5,000. Balance how much is there, Amma? So now 95,000 is revalued to 1,20,000, which is been an upward amount of rupees 25,000 which is revalued upward. Capital or revenue amma? Capital. Profit or loss amma? Profit. Sir, why it is called as capital? Because revaluation is done by the holding company only at the time of liquidation. Sorry, only at the time of date of acquisition. Take care. So holding company will be revaluing the assets of subsidiary company at the date of acquisition, and hence it will always become a capital item. So it will become either profit, downward either it will become loss. Now moving on to part 2 of this, depreciation. Take care, my dear children, while providing depreciation, please be careful. Don't provide directly on this 25,000. Why? Don't find for the logics, learn. That's it. And now moving on to the next thing. So please take care. Don't directly provide on 25,000. Observe how much is the depreciation provided already and how much is the depreciation to be provided now, and check out with 2 things. Let us start. Sir, they have provided depreciation on 1 lakh, right? So 1 lakh into 10%, which comes to 10,000. For the first half year, it will become 5,000. Second half year, 5,000. Already first half year is booked here. So now you have to check out only with the second half year. So they have already provided 5,000. How much we have to provide, amma? 1,20,000 into 10% into 6 by 12, which comes to 6,000. So they have provided 5. We have to provide 6. So additionally we have to provide 1,000. Clear, everybody? But if you have chosen directly, you will get a different figure. 25,000 into 10% into 6 by 12. 1250, which is wrong. So please don't do like that. Just follow this thing only. So depreciation never provide directly. Compare it with the old thing which is provided. Compare it with the new thing that is to be provided, and then check out. If you have to provide extra depreciation, it will become loss. If you has to decrease the depreciation which was already provided, it will become profit. Depreciation is always a revenue item. Why? Because it will be having effect only after acquisition but not before acquisition. Clear, everybody? So this is what the concept of revaluation and depreciation. Next, about unrealized profit. Sir, you might have remembered the streams, right? Holding is always at top, subsidiary is always at down. If holding is selling to subsidiary, sale of goods, it is called as downstream. If subsidiary is selling to holding, then it is called as upstream. Downstream transaction, upstream transaction. So please be careful now. It's very simple. Sir, if you see the downstream transaction, who is selling? Who is purchasing? Inventory is in whose books, amma? Subsidiary. Profit was booked by whom, amma? Holding company. Coming to upstream, who is purchasing? Holding company. Who is making profits? Subsidiary company. And here you are having inventory. So now, since we are in step 2, analyzing the reserves and surplus of subsidiary company, consider only with upstream transactions but not with downstream transaction. Clear, everybody? So coming to upstream transaction, who is making profits? So if at all holding sold to outsider, it is obviously realized. But in the question he will be giving 24,000 is unsold, 120 lakhs is unsold, 1 lakh is unsold. In such a situation, you will be left with some unrealized profit which has to be eliminated. So this unrealized profit has to be eliminated from step number 2 itself. Clear, everybody? Unrealized profit has to be eliminated. Sir, if profit has to be eliminated, it is nothing but a kind of loss. Am I correct or wrong? Which loss is that, sir? Revenue loss. So, in step number 2, you will hardly get these items. P&L account, general reserve, revaluation and depreciation, unrealized profit. Only these items you will get. Pakka, everybody? But before proceeding to step number 3, I would like to close step number 2 even with pre-acquisition dividends also. So just listen for the concept. So we are having a concept of dividends, right? So if holding company is declaring dividends, absolutely no problem. Why? Because holding will be declaring to the outsiders. But the problem is only with the subsidiary company. If subsidiary company is declaring the dividend, one portion will be given to holding interest, another portion will be given to minority interest. Am I correct or wrong? Sir, dividend that is being payable to minority interest, they will treat that. That is absolutely not necessary for us. So eliminate. I mean, we don't treat that always, but we have to treat the holding interest dividend. Okay, everybody, how much ever the portion of dividend that is to be payable to holding company is there, we have to check out with only that thing, but not with any other else. So now let us continue. Sir, dividend can be either of pre-acquisition or it can be either of post-acquisition. If dividend is given out of pre-acquisition profits, see, already we have separated pre-acquisition profits. Am I correct or wrong? Likewise, opening, current year, till date of acquisition, after date of acquisition, like this we have already separated pre and post. So if dividend is given out of pre-acquisition profits, then it will become pre-acquisition dividend. If dividend is given out of post profits, it will become post-acquisition dividend. Pakka, everybody? Dividend given out of pre-profits is pre-dividend. Post-profits is post-dividend. Already you people know what is the rule of pre-acquisition dividend, amma. Pre-acquisition dividend has to be adjusted against cost of investment. Post-acquisition dividend will become income. Am I correct or wrong? And that is to be transferred to P&L account. So, pre-acquisition dividend has to be adjusted against cost of investment. So, cash or bank account debtor to investment account. If it is post-acquisition dividend, you have to write an entry like cash or bank account debtor to P&L account. Am I correct or wrong? So, moving back, who is ultimately declaring this dividend? If it is declaring out of pre-profits, then it is called as which dividend? Pre-dividend. Deduct from this wing. That is like opening balance. If it is declaring out of post-profits and post-dividend, luckily we are not having any problem. If at all we are having, then you have to consider from post-wing. That is like not pre again. Current year la post is to be considered. Pakka, everybody? But we are not having any such kind of thing. We are having only pre-acquisition dividend. Understood, everybody? So pre-acquisition dividend has to be deducted from the opening balance. Remember this one. And remember, you have to deduct the total dividend, not the holding company share. You have to deduct the total dividend. Why? Because whose profits are this one? Subsidiary company. First of all, subsidiary has to declare the total dividend, right? So while deducting, deduct the total dividend. But while giving the treatment, give the treatment only to holding interest. But while deducting the dividend, you have to deduct the total dividend here itself. Pakka, everybody? Fine. These are the final adjustments you are having in step number 2. Okay? So step number 2, what are all the reserves you are having, amma? P&L account, general reserve, revaluation plus depreciation, unrealized profits, upstream or downstream, completed. And if any pre-acquisition dividend is there, pre-acquisition dividend, it has to be deducted from the opening balance. And in one problem, we are having bonus issue. What in cheptadante bonus issue is given out of opening balances of general reserve. He will be giving that statement. So now bonus issue has to be deducted from opening balance of general reserve, and then you are going to get the balancing figure of current year. So after deducting the pre-acquisition dividend or bonus issue, you will get one figure, then find the balancing figure of current year. Understood? Say if it is 1 lakh. Opening is given at 20,000. Immediately don't find balancing figure 80,000. That is wrong. Check out if any pre-acquisition dividend is there. 5,000, sir. Then the balance is 15,000. Now check out the balancing figure. 1 lakh minus 15,000, 85,000. Clear, everybody? So this is how you have to do with step number 2. In step number 2, whatever the items we have got, that has to be taken to step number 3. What is step number 3, sir? Apportionment of profits. Coming to step number 3, under apportionment of profits, the simplified format is all about capital profit, revenue profit, revenue reserve. Maintain these 3 columns. So remember, whatever you have got in step number 2, everything should be taken to step number 3. That is A, P&L account. You will get capital profit, revenue profit, this will be nil. B, general reserve. You will get capital profit, revenue reserve, this will be nil. C, revaluation. You are having only capital profit. So if it is capital profit, plus. If it is capital loss, minus symbol. Clear everybody? And moving on to the next thing, depreciation. If it is always revenue, right? Not reserve, okay? It has to be adjusted against revenue profit only. Why? Because depreciation is an item which is to be given effect for P&L account to general reserve. P&L account. So check out only in this column, not under capital, not under RR. If it is extra depreciation, you have to provide. Extra depreciation provide cheyalante, your profit will decrease, right? So here it will come negative balance. If existing depreciation has to be written off, here itself positive balance. Clear everybody? Extra depreciation provide cheyalante revenue loss, so minus. If existing depreciation provided has to be decreased ante, it's your profit and hence it has to be added. Clear everybody? So, and finally, unrealized profit. Sir, what is unrealized profit? Revenue loss. Am I correct or wrong? Because your profit is decreasing. So under revenue profit itself, negative symbol itself. Not here, not here. Now you have got everything here. So check out the totals. And this has to be separated between dash and dash. Holding interest, minority interest. So holding interest and minority interest. Pakka everybody? In step number 3, now ultimately we have got pre-holding interest, pre-minority interest, post-holding interest, post-minority interest. From here, diversification will start. Step number 2, total pre and post. Whatever you got in step number 2 has to be brought to step number 3 and put it under respective column. After that, you are going to get the separation between holding and minority. Now moving on to the next thing. What is the next one, Amma? Step number 4. What is step number 4? Aggregate of minority interest. Step number 4 is totally relating to minority only. Sorry. Ippudu chudandi. In step number 3, what are the total outcomes we have got? Pre-holding, pre-minority, post-holding, post-minority. Number 1, if it is minority, that's obviously nothing bothering to us. Because whether it is pre-capital or revenue, it is minority share. Why? You will take care about minority share. Whether is it to be treated pre or post will be decided by the minority. For us, pre or post is absolutely one and the same. Strictly speaking, if our share is only 60%, we have to consider only 60% from the subsidiary company. But you know what we will do? We will take the entire 100%. Did you get my point? Fixed asset 10 lakhs. Strictly speaking, you have to take 10 lakhs into 60%. But we are taking entire 10 lakhs. So 40% is belonging to whom? Minority. So that has to be given to minority and hence it will become a liability for holding company. Pakka everybody? But strictly speaking, again it is not a liability because I will not pay anything. It will happen only at the time of liquidation. Real payments will be disbursed only at the time of liquidation. Fine. Under minority, what are the things we will be having? Share in share capital, share in capital profits, share in revenue profits, share in revenue reserves. You're going to get the total which will be directly taken to consolidated balance sheet and it will be shown under liabilities side. But I already told you strictly it is not a liability. So it will not be shown under non-current liability or current liability, and also it is not an equity to show under shareholders funds. Did you get my point? Minority interest is neither equity nor a liability. But technically speaking, I have to take my 60%, but since I have taken entire 100%, I have to give to you minority. Am I correct or wrong? So what happens now? Minority will be shown after shareholders funds but before non-current liabilities. Neither under shareholders funds nor under current or non-current liabilities. It will be shown after shareholders funds but before non-current liabilities. Majority of us will forget to book minority interest in the balance sheet. Then after totaling it will not tally. Then you will get the difference. Then you will be getting that minority was not posted. But take care. So చేసేటప్పుడు ఒక లైన్ ఎక్స్ట్రా వదిలేసుకోండి అక్కడ, because obviously you will forget that one. So that is what with respect to your step number 4. Look here, step number 2 totally it is transferred to step number 3. Under step number 3 we are having 4 things: pre-holding, pre-minority, post-holding, post-minority. Both minorities were transferred to step number 4. So still we were left with pre-holding and pre-minority. So post-minority, post-holding, pre-holding and post-holding. So shall we proceed for pre-holding, amma? So that will be for step number 5. Step number 5 is nothing but cost of control. Slowly we will inject mana దగ్గరికి వస్తాం. Basic పక్కన పెడితే first we have started subsidiary profits. Subsidiary profits were analyzed. Subsidiary profits were distributed. I have seen the minorities share over with the outsiders. Now our work will start. Cost of control. It is divided into 2 parts. Cost of investment and second part is value of net assets represented by share capital and capital profits. Remember my dear children, cost of control will be generally computed at the time of acquisition. Of course, if any further developments are there, you have to consider that one. But generally it is always computed at the time of acquisition. Cost of investment. How much amount that is given in the question, take that one. Sometimes indirectly it will be given in the question, investment in subsidiary company. He will not be giving directly, but he will be giving in the balance sheet of holding company, investment in subsidiary company 3,40,000. So your cost of investment will become 3,40,000. Clear everybody? Fine. Now value of net assets represented by share capital and capital profit. Revenue will not come here. Sir, why revenue will not come here? Because it is computed only at the time of acquisition. So here you will get share in share capital, share in capital profits. In the sense, pre-minority is transferred to step number 5. Clear everybody? I'm sorry. Pre-holding is transferred to step number 5. So in step number 5, you will get cost of investment and share in share capital, share in capital profits. Observe. Say for example, these two comes to 3 lakhs. Your cost of investment is more, right? So to get a share of 3 lakhs, you are paying 3.4 lakhs. Extra you are paying. So which is nothing but capital loss, which is nothing but goodwill. But if it is of a reversal scenario, I mean to tell, if cost of investment is less, capital profit, capital reserve. So conclusions, if cost of investment is less, capital profit, capital reserve. If cost of investment is more, capital loss, it should be transferred to goodwill. Pakka everybody? So this is all with step number 5. 2 additional things. Number 1, if at all in the question you were provided with bonus issue, then while considering share capital, you have to consider including bonus. Don't confuse, sir, you told this will be computed at the time of acquisition. At the time of acquisition, there is no bonus. But now company had given bonus now. Whether to consider or not consider? Of course consider. Pakka everybody? Of course you have to consider. Reason being, bonus is also a part of share capital now. Clear everybody? For the same cost of investment, initially I am not having bonus, but for the same cost of investment, I got bonus from the company. So while considering here, if any bonus is there, including bonus you have to consider. Clear everybody? Now, did you remember the concept of pre-acquisition dividend? Pre-acquisition dividend, first of all, dividend has to be, total dividend has to be deducted in step number 2 from subsidiary company profits. Now if it is pre-acquisition dividend, holding company has to deduct it from the cost of investment. Am I correct or wrong? If it is correctly treated, if it is correctly treated, then there is no problem. కానీ మనకున్న ప్రాబ్లమ్స్లో ఏ ప్రాబ్లం కూడా కరెక్ట్గా ట్రీట్ చేసింది లేదు. ప్రీ అక్విజిషన్ డివిడెండ్ ఈస్ ట్రీటెడ్ యాజ్ పోస్ట్ అక్విజిషన్ డివిడెండ్ అనే ఉంటుంది. సో నౌ వాట్ యూ హ్యావ్ టు డూ, సార్ వాట్ ఈస్ ద జర్నల్ ఎంట్రీ అమ్మ? ప్రీ అక్విజిషన్ డివిడెండ్, cash or bank account debtor to investment account, but he is treating it as post. And what is he writing? Cash or bank to P&L account. It's wrong, right? So now rectification journal entry, P&L account debtor to investment account. In the sense, literally investment is having which balance amma? Debit balance, since I am investing my asset. Now with pre-acquisition dividend it has to reduce. Am I correct or wrong? So whatever you have already credited it to your P&L account, even that is also wrong. Even that also should be reduced. Clear up? So cost of investment minus pre-acquisition dividend of only which company amma? Holding company. If it is correctly done, no need to do. But if it is wrongly done, you have to deduct this one. So cost of investment minus pre-acquisition dividend if it was wrongly treated. Pakka everybody? That is what your step number 5. Step number 4, there's one point in one problem you are also having preference shares in subsidiary company. Just in one problem you are having preference shares in subsidiary company. Holding is not having any interest in preference shares. So entire preference shares are belonging to minority. Then it will become share in equity share capital, share in preference share capital. For equity you are having 1%. For preference you might have different percentage. Manakunna question lo aithe holding is not having any interest in preference share capital. So entire 100% will be enjoyed by minority only. So share in preference share capital 100 will has to be taken here itself. Okay now. So step number 4 is this one. Step number 5, on a conclusion note, step number 5, cost of investment minus pre-acquisition dividend if it is wrongly treated. And next, share in share capital, share in capital profit. Share capital in the sense including or excluding amma? Including bonus. Understood everybody? There ends with step number 5. Conclusion is very simple. Cost of investment less more. Less aithe CP CR, more aithe capital loss goodwill. Now moving on to the next thing. Step number 6. So step number 6 is intercompany transactions or intercompany owings, or it is also called as intra-group transactions, because it had been made between the same group. So intra-group transactions, or it can also be, we can tell something like two different companies were involved and hence intercompany transactions. Since between two companies, intercompany. Since between the same group, intra-group. What are all the things that you will get here? You may get, manakunna problems no hardly vachevi, creditors, debtors, bills payable, bills receivable. Also write inventory here itself. Also write inventory here itself. What to do, sir? Take the balance of holding company. Take the balance of holding company. For this add balance of subsidiary company also. Look at the balance sheet. You will get the balances of each and everything. Then you will get one total, right? Minus intercompany transactions or intra-group transactions. Deduct, nil. Coming to inventory, you will not deduct the entire transaction. What will we deduct, sir? We will deduct only unrealized profit. So unrealized profit will be deducted at last. Sir, asalu inventory ni ikkada enduku rayali? Can't we take it directly to the balance sheet? Of course you can. But again you have to open one more note there. Inventory, note 3. Again you have to open note 3 for solving that one. But why such problem? If you have computed here directly inventory, step number 6, you can write and you can book the amount. Clear everybody? So that is all about your step number 6. After that you are going to get the final things. That is like debtors net, creditors net, bills payable net, bills receivable net and inventory net. Inventory, you should not deduct the total amount, remember, you have to deduct only unrealized profits. Clear? Fine. Moving on to the next thing. Step number 7. Almost last. Reserves and surplus for consolidated balance sheet. What are the reserves you are having? Whatever the reserves you have, take all the reserves. I mean to tell, P&L account, general reserve. Anni problems lo manaki ive unnai. But in one problem, you are having securities premium. You are also having capital reserve. Just in one problem only you are having. But generally, P&L account to general reserve. Now, you have to take first balance of holding company. Take the balance of holding company. Did you remember in step number 3, one thing is still left off. Post holding interest. Adi ikkada add chestam. Add post holding interest. You will be adding that one and you are going to get some figure. Am I correct or wrong? Now listen. Two things are to be deducted. Minus unrealized profit if it is downstream. Did you remember? Holding to subsidiary. Who is making profits if holding is selling to subsidiary? Holding company. Holding company profits are there in which step, amma? Step number 7 here. And hence you have to deduct here. Clear? So if any unrealized profit downstream is there, you have to deduct in step number 7. And also, my dear children, you have to deduct pre-acquisition dividend if it is wrongly treated. ఇందాక అనుకున్నాంగా P&L account debtor to investment account. So in step number 5 from investment you have deducted, and in step number 7 from profits it has to be deducted, and ultimately you are going to get some net figure. Clear? With this thing, now you can solve any consolidated problem that would be in there in our material. Consolidated balance sheet నువ్వు ఏది తీసుకున్నా happily you can solve just with this format. Nothing great and nothing new will be there. Clear, Amma? So only some special elements you have to take. In step number 2, from opening balance you may have to deduct pre-acquisition dividend or bonus issue. And revaluation you have to be a bit more careful. And whenever you have got capital profit or capital loss, you have to book depreciation for revaluation, but don't compute directly. Compare the old figure, compare the new figure and provide the depreciation. You know one problem? In some of the cases, he will not give the depreciation rate at all. He will not give depreciation rate at all. Then what to do, sir? You have to find it. Find cheyadaniki data istadu. How? He will be giving balance sheet, right? That is on 31/3/2015. 1 lakh అని ఇస్తాడు అక్కడ. Did you get my point? And in the adjustments, he will be giving on 1/4/2014 book value of asset is rupees 1,20,000. He will not give you the rate of depreciation, but you have to compare now. How can you compare? Opening is 1.2, closing is 1 lakh, so depreciation is 20,000. Compute the rate of depreciation. 20,000 divided by 1,20,000 into 100. So 16.67% is your depreciation rate. Clear, everybody? So be careful. In one problem he has twisted even with this point also. And moving on to the next thing, step number 3. Whatever you got in step number 2, transfer everything to step number 3. Book under respective heads, whether is it capital profit or revenue reserve, so that it will also get completed. And the last total shall has to be a portion between holding interest and minority interest. Moving on to the next thing, that is all about step number 4, aggregate of minority interest. Share in share capital, capital profits, revenue reserves, revenue profits. But in one problem you are also having share in preference share capital. You have to book there itself in step number 4. Minority interest will become a liability. It will be shown after shareholders funds, but before non-current liabilities. And after that, step number 5, cost of investment minus pre-acquisition dividend if it is wrongly treated. And then value of net assets represented by share capital and capital profits. Share in share capital, share in capital profits. But take care, my dear children, share capital is including the bonus. So you have to compare cost of investment more or less. If it is more, capital loss, goodwill, less capital profit, capital reserve. Ultimately, this has to be transferred to consolidated balance sheet. And moving on to step number 6. Take debtors, creditors, bills receivable, bills payable, stock or inventory. For inventory, you have to deduct unrealized profit. Whereas for all the items, you have to deduct the total intercompany transactions. Clear, everybody? So, after that, you are going to get one net figure which can be directly transferred to consolidated balance sheet. And the next one, reserves and surplus for consolidated balance sheet. In only one problem, you are having securities premium and capital reserve. On a general note, we are having P&L account and general reserve. Take the balance of holding company. Don't take balance of subsidiary company, okay? Because balance is already analyzed in step number 2. So you have to consider only post-holding interest. For step number 6, balance of holding company plus balance of subsidiary company minus ICT or unrealized profit. But coming to step number 7, balance of holding company plus post-holding interest minus 2 things. Unrealized profit downstream, pre-acquisition dividend if any wrongly treated. And there ends with step number 7. And ultimately only one thing. In step number 5, you have got capital reserve, right? That capital reserve, if possible, you bring to step number 7 and add that capital reserve. So that again, no need to open separate note for reserves and surplus also. Directly you can put step number 7. Step number 5, the capital reserve, if possible, gurtunte, bring into step number 7 and add it so that your problem will be solved. Now, ultimately your consolidated balance sheet. Step number 8, schedule 3. Remember, my dear children, equity and liabilities, shareholders funds, under that first one, share capital. Always you have to open note number 1 for that. Reserves and surplus. Now it is not needed. You can directly step number 7. After this shareholders funds, minority interest. You can write step number 4. And after this one, non-current liabilities. After this, current liabilities. But if in any current liabilities you are having trade payables or bills payable, you can write step number 6. Because there you are going to do that. And after that you are going to get some total. And now coming to assets. Coming to assets, tangible assets you will book. But take care, intangible assets. Step number 5, goodwill. If you have if you have encountered with that, you will be getting here. And then it will become step number goodwill. Step number 5. Clear, everybody? And again, if you are having inventory or trade receivables or debtors or bills receivable, step number 6. You can get the amount. And of course, you can go ahead. But be careful only with revalued assets. Once if the asset is revalued, you have to consider only revalued figures, not the old figures. Pakka, everybody? There ends with consolidated balance sheet. Now, if any consolidated P&L account, because from the last 2 attempts he has asked consolidated P&L account only. Remember, I'll tell you even consolidated P&L account in a simplified version. For any kind of problem, you can follow this style. Listen. First, compute consolidated P&L account. Sir, how to compute consolidated P&L account, sir? Holding company plus subsidiary company minus intercompany transactions. In the sense, one company may sell to another company. So to one company it is sales and to another company it is purchases. So you have to deduct the same item from sales. You have to deduct the same item from purchases. One company is paying expense to other company. So to one company it is expense. To another company it is income. So it has to be deducted from income. It has to be deducted from expense. Schedule 3 format వచ్చు కదా. Revenue from operations, other income, expense, cost of raw material consumed, purchase of stock in trade, like that. So just by following schedule 3, prepare consolidated P&L account. Clear? After that, step number 2. Remember, be careful. Sir, consolidated P&L account, literally to tell you, holding company plus subsidiary company minus ICT. Am I correct or wrong? But look carefully. I'm just telling you it in different style. Sir, consolidated P&L account is nothing but literally step number 7 P&L account column. Will you accept or not? Step number 7. Reserves and surplus for consolidated balance sheet. P&L account. Balance of holding company. Add post holding interest. Gurtostunda? minus unrealized profit minus pre-acquisition dividend. Am I correct or wrong? Literally to tell you, consolidated P&L account is nothing but step number 7, these things. అంటే ఇప్పుడు అల్టిమేట్ గా యువర్ ఆన్సర్ షుడ్ బి మ్యాచ్డ్ విత్ దిస్ ఆన్సర్. ఇప్పటి వరకు మనం ఏం చేసాము, కన్సాలిడేటెడ్ P&L అకౌంట్ అని holding company plus total subsidiary company minus ICT has been taken. But we know step number 7, you have to take holding company plus only post holding interest. Am I correct or wrong? You want only post holding interest. But whose profits are totally included here? Whose profits are totally included, amma? Subsidiary. But we want only whose profits, amma? Holding. So what has to be eliminated? Minority has to be eliminated. Subsidiary is having two parts, holding interest, minority interest. What is needed for us? Balance of holding company plus post holding interest antunam kada. So what is absolutely not needed for us? Minority. మరి మైనారిటీ షేర్ ఎంతో తెలియాలి అంటే ఇన్ స్టెప్ నెంబర్ 2 బై కీపింగ్ ఇట్ as వర్కింగ్ నోట్ ఆర్ డైరెక్ట్లీ బై కీపింగ్ ఇట్ as స్టెప్ నెంబర్ 2 యూ హ్యావ్ టు డ్రాఫ్ట్ P&L account of subsidiary company. That is step number 2. After drafting subsidiary company's P&L account, step number 3. Again from step number 1, you have to eliminate these things. What are those things, sir? Minority interest has to be eliminated. And if you observe, it is total holding interest. Am I correct or wrong? But you want only which interest, amma? Post. So if any pre is there, if any, because in one P&L account, he has given in the question, acquisition is something around 2011-12. We are doing consolidation for 2015. For 2015, do you have any pre? No. But in one problem, 2015, year starting is 1/4, acquired on 1/7. There 3 months is pre. So in this case, eliminate minority and eliminate pre-holding interest if any. Clear? And also eliminate pre-acquisition dividend if it is wrongly treated. Ante kada? And finally unrealized profit. Step number 7 lo em chesano ade chesa chuskondi. In step number 7, what we have done? Balance of holding company plus post holding interest minus unrealized profit minus pre-acquisition dividend. This is base. Now from this base, what have we done? Manam em chesamandi? First one, computed consolidated P&L account. While computing consolidated P&L account, we are getting holding plus subsidiary minus ICT. In step number 2, I want only post holding interest, but subsidiary is a combination of holding minority. So I have to eliminate minority, right? So in order to eliminate minority, I have to draft the P&L account of subsidiary company. So P&L account of subsidiary company has to be computed. Then from the P&L account of subsidiary company, find the minority interest. Vachestundi kadamma. So now in point number 3, that is at last, consolidated P&L account anta ayipoyin tarvata profit or loss before minority interest minus minority interest. And next minus what are the things that I have told you? Pre-acquisition dividend if any, unrealized profit minus pre-acquisition profits if any. Because current year if you have acquired subsidiary company, you also may have during up to date of acquisition unnadi kadamma. In our example, 1/4 is the year starting, 1/7 is the date of acquisition. How many profits are pre? 3 months. So separate holding, minority. Holding lo again 3 months is pre. Even that also has to be deducted here. Understood everybody? So this is what your P&L account steps. So what you have to compute? First one, consolidated P&L account. Second one, P&L account of subsidiary company. After that, You have to deduct some things. What are those? Minority interest, pre-holding interest, pre-acquisition dividend, unrealized profit. Ultimately, your work will be over. Understood, everybody? That's it. So by considering this one, you can happily compute your consolidated P&L account. Fine. So that is what your consolidated P&L account. So let's try to look some areas. I'm not concentrating on the problems initially. I told you that one, because especially coming to advanced accounts, you know, even though the chapters are less, the part of each and every chapter is too much heavy. Likewise, I'm not very much confident that I can give 100% justice to partnership. Partnership ki nenu 100% justice istanu అని అయితే నాకు నమ్మకం లేదు, because I have chosen partnership to teach at last. Two reasons. Number one, majority of the people will be taking it as choice. ఎంత కష్టపడి నేను ఇప్పుడు చెప్పినా ఆల్రెడీ మీరు మీ బ్రెయిన్స్ లో ఫిక్స్ అయిపోతారు కదా. సో దేర్ ఆర్ సమ్ కైండ్ ఆఫ్ పీపుల్, ఐఎమ్ నాట్ స్పీకింగ్ అబౌట్ ఎవ్రీ వన్. అండ్ మోర్ ఓవర్, when compared to the chapters of amalgamation and consolidation with partnership, amalgamation and consolidation can cater a better thing even when compared to partnership. So that is the reason, and since partnership is having many models again, so I have kept it at last, and I'm going to cover major areas. Of course, I'll deal with partnership, but I was very much confident that I'm going to do 100% justice for the partnership. So likewise, we have completed till now 3 chapters. For liquidation, we have done to the maximum extent, and also for internal reconstruction to the maximum extent. Now consolidation, I have given you the whole format so that you can solve any kind of problem. Just spare for another 5 to 10 minutes, okay? So that let's complete consolidation and let's go for lunch break. Of course, even I am hungry. Fine. Yeah, one more thing I'm having, just minority interest if it had become negative. If step number 4, minority interest had become negative, it's very easy, amma. Andulo em kashtam ledu. If total minority interest had become negative, it has to be first borne by the reserves and surplus of the holding company. After that, if any profits are there, first of all, it has to be enjoyed by the holding company. Only then it will be given to the minority. Till then, it will be taken by that company itself. It's a very small topic, and hence I did not cover that one. Problems, come on. Fine. First one is normalized thing. Second one is also normal. You can compute all these things. So yes, consolidated balance sheet. Just if you observe here, so the date of balance sheet is 31st December 2011. Now if you observe the adjustments, date of acquisition is somewhere on 1st July 2011. So there will be a machine which is revalued. So can you directly compare 1,50,000 to 1,80,000? Yeah? No. First of all, 1,50,000 is the balance on 1/1/2011, and 1,80,000 is revalued on 1st July 2011. So first of all, you have to provide depreciation, and then you have to provide, and then you have to compute revaluation profit or loss. Connected with revaluation is always depreciation. So while going with depreciation, what to do? To tell, do you need to compare the old one or new one, or do you need to take the direct amount? Compare the old one and new one. In this question, if I was not wrong, 37,500 ento ostundamma. Just I have told, just 2 days before I told the problem. నేను ఎంత గ్రేటో గుర్తు అంత సీన్ ఏం లేదు. Just day before yesterday I have completed this problem. Around about 37,500. If you compute direct percentage on 37,500, it will go wrong. So you have to compare the old depreciation figure and new depreciation figure. Then you have to take a decision. How much is to be extra provided or extra amount to be written off. And CRD number 5. There will be nothing great, but only difference. two assets will be given for revaluation here. Sir, if two assets were given, how to do it, sir? Very simple. You do with machinery, you do with furniture. Totally finally get the net capital profit. Ledu ante you will get two profits, right? So take everything to step number 3. Capital profit on machinery, capital loss on furniture. Like that also you can take to step number 3. That is what I am telling. Whatever you got in step number 2, take that to step number 3. So that problem will be solved. And also, inventories of H Limited includes goods costing purchased from S Limited. Purchased from S Limited. So upstream or downstream? Upstream. If it is upstream, step number 2, subsidiary company profits has to be eliminated, and of course inventory is common. If it is downstream, step number 7, like consolidated P&L account is there, right? You have to eliminate there. Sir, if you try solving consolidation under these steps, it will become very, very easy for you. మీరు ఇది వరకు చేసేటప్పుడు some things will have to be deducted at minority interest, some things has to be deducted at consolidated P&L account. Very confusing. అంటే మర్చిపోతారు ప్రీ ఎక్విజిషన్ డివిడెండే ఉంది. some portion will has to be deducted at minority, some portion at consolidated P&L account. But the style that I have told you, ఎక్కడ ఏది చేయాలన్నది క్లియర్ గా చెప్పేశాను. You can choose a problem and you can just do it in that style. You're going to get for sure. Sir, if any pre-acquisition dividend is there, likewise somewhere here given pre-acquisition dividend, 10% is paid out of pre-acquisition profits. It has to be deducted from the opening balance of P&L account. In one problem you will be having 33/2016 will be the year ending, 1/4/2016 will be the year starting. Did you get my point? I'll be telling you the thing here, right? Look here, he will be giving company has declared 10% dividend on 31/3/2016, and next immediate statement, on 1/4/2016 holding company acquired 80% in subsidiary company. This is what the statement. Point number 1. క్వశ్చన్ సరిగ్గా అర్థం కాని వాళ్ళు, క్వశ్చన్ సరిగ్గా చూడని వాళ్ళు, ప్రీ ఎక్విజిషన్ డివిడెండ్ ఈస్ దేర్, రైట్? అండ్ ఆఫ్టర్ దిస్ క్వశ్చన్ విల్ బి కంటిన్యూయింగ్. హోల్డింగ్ కంపెనీ హ్యాస్ ట్రీటెడ్ దట్ ప్రీ ఎక్విజిషన్ డివిడెండ్ యాజ్ పోస్ట్ ఎక్విజిషన్ డివిడెండ్ అంటాడు. ఇఫ్ ప్రీ is treated as post, you have to deduct in 2 areas. Minus step number 5, cost of investment has to be deducted, and also last step number 7 minus step number 7. P&L account, I mean to tell, it has to be deducted from investment and it has to be deducted from P&L account. Now, did you remember in step number 2, whatever the pre-acquisition dividend, if it is declared, it has to be deducted from the opening balance of P&L account, I told you. Did you remember? Now, if the dates are like this, generalized people will not observe these dates and happily they will solve the problem and it will become exactly correct. But there are some people who will be having keen observation on the questions. They will think more. వాళ్ళ పాయింట్ కరెక్టే. వాళ్ళు ఏమంటారంటే, సార్ 31/3/2016 ఈజ్ ద బ్యాలెన్స్ షీట్, కంపెనీ డిక్లేర్ డివిడెండ్ ఆన్ దాట్ డేట్. సో ఆల్రెడీ డివిడెండ్ మైట్ హ్యావ్ బీన్ అడ్జస్టెడ్, దెన్ వై అగైన్ వీ హ్యావ్ టు అడ్జస్ట్ ఆన్ ద ఓపెనింగ్ డేట్? క్వశ్చన్ అర్థమైందా? ఇన్ ద క్వశ్చన్ విల్ బి గివింగ్ ఆన్ 1/4/2016 P&L account balance is 30,000. మనం కన్సాలిడేషన్ ప్రాబ్లమ్స్ వాట్ యూ హ్యావ్ టు డూ, టేక్ 30,000 ఓపెనింగ్ క్లోజింగ్, అండ్ ఫ్రమ్ ఓపెనింగ్ యూ హ్యావ్ టు డిడక్ట్ pre-acquisition dividend, like total 30,000 or whatever is the pre-acquisition dividend is there, you have to deduct that. Don't concentrate on the numericals, concentrate on the concept. P&L account closing balance, opening current year. Opening is 1/4/2016. In the question he will be telling that, sir, dividend is already declared on 31/3/2016. Now one student will be asking something like this, sir, company has declared dividend on 31/3/2016, already dividend has been adjusted, why we have to adjust in opening balance? Ani vaadu adjust cheyadam manesi sum chestadu, which will become wrong. Did you get my point? So don't forget, forget about dates in the question. Never judge a question. Even though the question is wrong, you deem that the question is correct and start solving the solution. Minus into minus is equal to positive. But wrong is the no good wrong. Ultimately, it is a correct answer for the wrong question. So I don't tell that it is wrong. వాళ్ళ పాయింట్ ఏంటంటే జనరల్లీ ఇట్ ఈస్ నాట్ పాసిబుల్ టు అడ్జస్ట్ డిక్లేర్ డివిడెండ్ ఆన్ ద సేమ్ డేట్. కరెక్ట్ ఆర్ రాంగ్? అండ్ హెన్స్ దే విల్ నాట్ అడ్జస్ట్ అని కన్సిడర్ చేస్తారు. కానీ ఆల్రెడీ డిక్లేర్డ్ అని క్వశ్చన్లో ఇస్తాడు కాబట్టి స్టూడెంట్స్ విల్ కన్ఫ్యూజ్ విత్ రెస్పెక్ట్ టు దాట్ ఏరియా, బట్ విచ్ ఇస్ అబ్సల్యూట్లీ ఈజీ ఇఫ్ యూ ఫర్గెట్ అబౌట్ డేట్స్. So you will be having these kind of questions in 2 to 3 problems, these kind of dates, but you just don't concentrate on the dates. In all the consolidation problems, it was being done like that, so you also do like that. Clear everybody? That's it. Sir, this is a bonus question, Amma. Bonus. Finding the bonus is very, very easy. That is why I have skipped it. But if you want, just on a short note, I will be telling. The bonus ratio will be given something like 3 shares will be given for every 5 shares. So original shares will be 5, bonus will be 3, and total shares will be 8. 5 plus 3 is equal to 8. This is after bonus issue. This is before bonus issue. Now, if you look at the question here, holding company acquired 180 lakh shares and subsidiary company is having how much share capital? 4,800. That is like 480. So 180 divided by 480, you will get something around how much? Holding interest. 180 by 480. But how 37.5% is absolutely possible for a holding company? It should have a minimum of 50%. And hence it's not correct. Then what is being given in the question? 3 for every 5 bonus. Holding 180 lakhs on 31/3/2010. Bonus is declared on 1st January 2011 and balance sheet is given on 31st March 2011. So balance sheet date is after bonus. Holding company acquisition date is before bonus. So if you are doing 180 by 480, this is before bonus, this is after bonus. How is it possible? Which is wrong. So now what to do, sir? Very simple. Take the total shares like 480 kadandi ichadu, so 480 here. And how much will be the bonus? How much will be the original shares? 480 into 3 by 8, 180. 480 into 5 by 8, 300. Now holding company acquired 180 out of how many shares? 300, because that is opening date. So 180 is somewhere here. So how much will be the bonus? 180 into 3 by 5. 108, and total will become 288. Now observe this percentage. 180 by 300, 60%. 288 by 480, 60%. Indaka previously you have done 180 divided by 480. How is it possible? One is before bonus and the other is after bonus. So be careful with that area also. And last and final one, most probably, bills payable and bills receivable. In this question he will be telling total bills payable of subsidiary company were being drawn by holding company itself. Who is the drawer? Holding company. Holding company can endorse these bills to the outsiders also. So in the question he is told that totally 160 lakhs are the bills that were drawn by the holding company. So who has to pay to whom? Subsidiary has to pay to holding company. Strictly speaking, it is an ICAI and it has to be eliminated. But holding company has endorsed 115 lakhs to the outsiders and still it is just having only 45 lakhs. So now how much is ICT? 45 lakhs or 115 lakhs? Because 115 were already endorsed to outsiders, subsidiary has to pay to the outsiders and hence it will not be considered. 45 lakhs will be your ICT. So that's it. And consolidated P&L account, just I have given you the format, just go through the format and solve the problem, you will get it. Be careful. Uniformity in accounting policies, I did not touch it because it is such an easy concept. Holding company is following FIFO method, subsidiary is following weighted average method. So it's not possible to add directly. You have to bring in uniformity. So subsidiary company weighted average method has to be brought to the FIFO method of holding company, and then you have to add something like this. Difference in accounting policies, if any are there, you are not supposed to add directly. You have to consider only after uniformity. Only after uniformity you are supposed to add that. And yes, the last and final point, consolidated P&L account. Just look here. This is a question that was being asked in July 21 for 15 marks. If you have solved in the steps that I have told you, it will become such an easy problem. And also the assignment problem corresponding, and kontamandiki adi CRD lo undochu, ICAI problem. It will something like 4096 to apestadu. I mean to tell, he will not compute step number 2. That is like computing subsidiary company profit separately, and you have to deduct minority interest. I told you, right? But please do it for any problem, because only for that problem he did not deduct minority interest, but for all the other problems that were being tested in RTP, that were being given in study material, other problems, and also tested in examination, he is deducting minority interest. Because I told you, like, balance of holding company plus post-holding interest has to be considered. So minority has to be deducted. Pre-holding, if any is there, it has to be deducted. So please be careful. Don't just rely on the solution that was directly given in study material, because that is for the one problem he has given like that. For all the other problems, he is deducting minority. So please be careful with that one. I'm closing my session with the last and final point. You know, like, how peculiar the question will be. Did you ever observe dividend breaking for the period? Dividend proportioning for the period. Something like, I'll just ask you. 400 is the preference share capital you are having. 7% is the preference dividend. How much is the total dividend? 28. When it will be declared? End of the year, mid of the year? Preference dividend, generally when it will be declared? End of the year. Did you ever observe, like, for mid of the year I will declare half, and for the end of the year I will declare half? Nobody will, till now, nobody will come across with that kind of point, where you are having that kind of point here. Preference dividend up to 39/2020. Remember, some things are practically not possible, but in question anything is possible. Moreover, వాళ్ళని ఇవ్వడంలో కూడా తప్పు పట్టలేము, because he wants to test your concept. అందుకే వాడు ఎంత తెలివిగా ఇచ్చాడో చూడండి. He did not give equity dividend up to. He has given preference dividend. Why? Because preference is fixed. So up to 39, that is from 1/4 will be like 6 months. So half year dividend is considered here. Did you get my point? So, and holding company is having 50% preference shares. So out of this 14, 50% is to holding company. The subsidiary company 14 expense, holding company 7 rupees income. And since it is ICT, this 7 has to be eliminated. Since it is ICT, this 14 also has to be eliminated. Clear? I mean total dividend 28 kada. Year ending another half year dividend will be declared. Including that I am telling. In the sense 14 already paid plus 14 will be declared. Totally 28. Out of which 14 has to be given to holding company, 14 has to be given to outsiders. So this has to be eliminated. This has to be shown in books of accounts. In this question, other income holding company is having this 7. This 7 is received from whom? Subsidiary company. So even it is an ICT, and hence it is also to be eliminated. Okay, so this is a very different question. If you are having time, even though you are not having that addition, sir, I strictly recommend, if you are following our materials, please shift to 46th edition of materials. Or if possible, 47th is also no problem. But previous versions were not recommended at all. No sir, we are preparing board materials. Absolutely fine, nothing great at all. But take care, in board materials, some of the RTP's problems, MTP's problems will not be there. You have to cater those things also. So this is an examination problem. So if possible, check out with that one. A very different problem. So that is the end of morning session. So let's meet in the evening session. Still as per our target, ESOPs is pending. In the meanwhile, if that 15 minutes could not have been interrupted, we might have completed that one also. But whatever, so still in our target, ESOPs is pending. Let's finish off it in the afternoon session. Okay, fine, Amma. Thank you. Let's meet in the afternoon session. Take care. Happy lunch. So welcome back and very good afternoon. So let's continue with the next things. So of course Harsha, I'll be revising even buyback chapter also. And in this session, let's go with banking, NBFC and also amalgamation. Of course, it's a very hard thing, but let's try to complete. And coming to amalgamation, likewise, the major concentration will be only on the format. Likewise, how we have started consolidation in the morning session in the same style. And one or two different points, likewise, how we have discussed in the same style, we will be discussing about amalgamation. And coming to NBFC, once if I have completed with banking, there will be nothing great about NBFC to discuss, except 2 points or hardly 1 point, which is being different in a problematic part where you have to be a bit careful. And before that, so let's start with the first topic, that is all about banking. So coming to banking, nothing great to discuss because everything is just format based. So I will be just picking the concept and I will be just telling you the elements what have been that are required for problematic part. So fine, the first important concept that is being related to examination is classification of asset. The assets are being classified as performing and non-performing assets. Performing in the sense, prompt payment is there from that asset, and which are not NPA are also called as performing asset. So what is the time period or lapsation or some relaxation period given for performing and non-performing is all about 90 days. Whatever is overdue, that is like either interest or principal or EMI, both are overdue for a period more than 90 days, then it will be called as NPA. If it is less than or equal to 90 days, it's a relaxation period, it will be still a performing asset. Two things will be included. Number one, prompt repayment is there. Number two, interest or principal or overdue for a period less than 90 days. Sir, what do you mean by due? What do you mean by overdue? And what do you mean by not due? If the due date has not yet come, we will call it as not due. If the due on the due date, we will call it as due. After the due date, we will be calling it as overdue. Say for example, on 1/1/2011 up to 31/1/2011, 1 month interest has to be paid on 31/1/2011. But you are somewhere at the date of 16th. So now we will be calling it as not due. On 31st it will become due. After 31st it will become overdue. Here our concentration is being extended with overdue itself. So prompt payment is there, performing asset. And next one, interest or principal is greater than or equal to 90 days. Then we will be calling it as not greater than or equal to 90 days. Then we will be calling it as performing asset. If it is greater than 90 days, then we will be calling it as non-performing asset. If it is performing asset, sir, interest has to be recognized on performing assets on accrual basis. Why? Because we are not having any doubt on that asset. Whereas coming to non-performing, we are having doubt on that. Certainty is not there, and hence you have to recognize it on cash basis. So this is what the initial thing. Now, listen, assets to the bankers are nothing but loans and advances that were being given by you. So all the loans and advances for the purpose of income recognition, we have classified into performing and non-performing. Income on performing has to be recognized on accrual basis. Income on non-performing has to be recognized on cash basis or actual basis. Now, we may have doubt not only on the interest but also on the principal, that the particular customer may not be paying it on time, and hence I will be again classifying it something like secondary classification for the purpose of provisioning norms. For the purpose of provisioning norms, I will be again classifying all the assets into standard, substandard, doubtful and loss assets. Again under doubtful we are having D1, D2, D3. Sir, if it is performing asset, automatically it is a standard asset. If it is non-performing asset, automatically it is substandard up to the period of 12 months. But if it is more than 12 months, immediately it will become doubtful. And after becoming doubtful, up to 1 year of doubtful, it will be in the category of D1. And 1 to 3 years, that is after 1 year, but before 3 years, it will be in the category of D2. And after 3 years, it will be in the category of D3. And one more thing we are having is all about loss asset. Sir, initially it will become standard. Afterwards it will become substandard, afterwards doubtful D1, D2, D3. But loss asset is an asset which had been occurred from any stage. Till now he is performing promptly, who is called as a standard. But all of a sudden from tomorrow or all of a sudden due to his financial crunch, or a huge loss has occurred, or a fire accident has occurred, due to which that customer is unable to pay from the next month. Till now he is performing, but all of a sudden he has converted to a loss asset. So who are going to decide that he is a loss asset, sir? Either management or RBI or even auditors of the bank will be deciding that it is a loss asset if it is irrecoverable. If it is recoverable, there is no problem. If it is irrecoverable, then we will be calling it as a loss asset. So all the performing assets are standard assets. All the non-performing assets, immediately it will become substandard up to 12 months. More than 12 months of NPA, it will become doubtful. Up to 1 year, D1. More than 1, less than 3, D2. More than 3 years, it will be in the category of D3. Pakka everybody? Fine. And moving on to the next thing. So please be careful. Provisioning requirements and provisioning norms. 1 second. Harsha, I'll be revising back in the last session, Amma. Moving on back, provision. How much percentage we have to create the provision? Sir, if it is standard, of course, very less riskier assets will be there in standard. If nothing is mentioned on all on standard assets, the percentage will be 0.4 percentage. But if it is commercial and real estate sector, of course, risk will be comparatively higher and it will be 1 percentage. Agricultural and small and medium scale sector, the risk will be comparatively lower. Moreover, even though it is higher, India is a country which has to promote the primary sector and small and medium scale sector, and RBI is just asking them to create a provision of 0.25 percentage. So if nothing is mentioned, 0.4, agricultural SME 0.25, and if it is like commercial and real estate, 1 percentage. And next one, substandard. Sir, substandard, if nothing is mentioned, generally substandard will be secured itself. If nothing is mentioned, it is secured, and for that the percentage will be 15%. And unsecured, it will be 25%. Now listen, it's an unsecured, but minimum guarantee is there. It's an infrastructure loan, infra loan, plus we are having some minimum guarantee, which is nothing but escrow accounts. Escrow accounts are nothing but accounts which are having minimum guarantee, and for trust basis, trusts emana form ayi atlanti situations lo, they will be giving some escrow guarantees, wherein the risk will be comparatively medium, and hence it will be like 20%. If it is totally secured, 15. If it is totally unsecured, 25. Infra plus escrow accounts, it will be in between those three things, while it is 20%. That is what with substandard. And coming to doubtful, if it is unsecured, no doubt. It is itself is doubt, and unsecured 100%. Doubt, but we are having security. Then on D1, D2, D3, 25, 40, 100 is the percentage. And next one, loss asset. On loss asset, the percentage is absolutely 100%. Clear everybody? So this is what all about your provisioning norms. In the same way, I would like to tell about NBFC percentages also, because we will be having lots and lots of confusion after going with those things. So NBFC, same style of classification, no doubt at all in that. Standard. But only one thing is that, did you remember NBFC D and NDSI and NDNSI? If it is NBFC D and NDSI, deposit accepting companies and non-deposit systematically important, then risk will be comparatively higher, 0.4%. If it is non-deposit, non-systematically important, 0.25%. This is initial thing. So Whatever the rule of standard is there, the same rule for NBFC D and NDSI for standard. NDNSI, it is 0.25%. Remember, my dear children, banking kanda NBFC always comparatively a percentage will be lower itself. If you remember that, you will get. So now substandard will be like 10%. Substandard will be like 10%. No specific classification is there. And next, coming to doubtful. So coming to doubtful, my dear children, unsecured, of course 100%, no doubt at all in that. Loss asset, of course 100%, no doubt at all in that. But doubtful, secured, D1, D2, D3, 20, 30, 50. So that is a percentage. Always lesser than the banking percentages. If you remember like that, it will become very easy for you. Clear, everybody? So that is what your provisioning norms. Once again, anyways, we will be discussing it in NBFC, nothing great at all, but initially these are the things. So please tell me, Amma, classification of assets: performing, non-performing, performing accrual basis, non-performing cash basis. Prompt repayment is there, performing. If not prompt being repaid, non-performing. And next, percentages and provisions for secondary classification. All the performing will become standard. By the moment it becomes NPA, it will become substandard up to 12 months. After that, it will become doubtful, D1, D2, D3, up to 1 year, 1 to 3 years, more than 3 years. And finally, loss asset. Percentages: standard, normally 0.4, agricultural 0.25, commercial and real estate sector 1%. And next, coming to substandard: secured, unsecured, infra plus escrow 15, 25, 20. Risk will be medium. And D1, D2, D3, secured, doubtful 25, 40, 100. And next, see, loss asset 100, doubtful, unsecured 100. If it is NBFC, D and SI and ND, NSI, 0.4, 0.25. Substandard is lesser than to that, that is 10%. Doubtful is also lesser than to that. Ikkadaithe 25, 40, 100. There 25 kanda mundu 20, 40 kanda mundu 30, 100 kanda mundu 50. If you remember like that, it will become very simple. And of course, unsecured is always 100 and loss asset is also always 100. Sir, banking la, there is no difficult point. There is no peculiar point. Asala ye sum lo kuda undavamma. Every sum is just provision applicability. There will be nothing new point at all. But you have to be careful with P&L account format. Of course, balance sheet format is there. 99.9% he will not test. But 0.1% we cannot tell anything. Anything might happen in our course, right? And some special cases of NPS. Some special cases of NPS. First one is like cash credit or overdraft. Take care, if it is been NPA, generally the period is greater than 90 days. I mean to tell, interest or principal is overdue for a period 90 days, then it will be called as NPA. But here we are discussing some situation where 90 days is not the common thing, but some other element is different. What is that for the first one? CC or OD, when it is declared as out of order. What do you mean by out of order, or when it will be declared as out of order? See, there will be something which is called as sanction limit or drawing power. But coming to all our questions, you have to check out with drawing power itself. Generally, sanction limit will be given by the banker at the time of taking the credit card, or at the time of giving the cash credit, or at the time of giving overdraft. But drawing power, depending upon situation to situation, he will be modifying. So what is more important for the problem? Problem is all about drawing power but not sanction limit. Problem lo manam eppudu chudalsindaithe drawing power maatrame. Fine. So if at all drawn more than drawing power, he is having a period of 90 days where he is supposed to make that less than 90, less than that drawing power. I mean to tell, say for example, bank has given a DP of 10 lakhs. So maximum amount that he can withdraw is only 10 lakhs. But say for example, he is such a sort of customer who is having special permissions from the manager and drawn 12 lakhs. How much is additionally drawn, Amma? 2 lakhs. How much period is there for you? 90 days. Immediately bring the balance within the limits. In the sense, it should be less than 10 lakhs. If it is still more than 10 lakhs, even after the completion of 90 days, it will be declared as out of order, thereby it will be declared as NPA. Now a person is there, drawn less than drawing power. Of course, drawn less than drawing power. Say his DP is 10 lakh, but drawn is just 8 lakhs. But you know the biggest problem here? The interest is like 1.5 lakh, but the payment is just 50,000 in a period of 90 days. Sir, next rule emi ante, the repayments or the credits should be at least covering up the interest amount. If he is not at least covering the interest, again he will be declared as out of order, even though he has withdrawn less than the drawing power. See here, drawn is less than drawing power. That is like 10 lakhs, drawn 8 lakhs. Say for example, for a period of 90 days, single rupee is also not paid. No credits or no repayment. He will be declared as out of order. Or for a period of 90 days, he is paying the amount, but the amount is less than the interest overdue. How much is the overdue interest? 1.5 lakh. But the repayment is only 50,000. Your credits are not even covering the, and hence you will be declared as an out of order. Pakka everybody? So this is another point that you have to be a bit careful. So 1, drawn more than drawing power, 90 days, not made within drawing power. Not made the limit within the drawing power. That is what first one. Second one, drawn less than drawing power, but no credits or no repayments, or credits or repayments are not even covering the interest portion. Even then it will be called as an out of order. Immediately it will become NPA. Agricultural loans and advances divided into short-term duration crop and long-term duration crops. If the crop season is less than or equal to 1 month, it is called as short term. If the crop season is greater than 1 month, it is called as long term duration crop. 1 year. Some sort of technicalities is quite common. So if the crop season is less than 1 year, then it is short term. If the crop season is greater than 1 year, then it is called as long term duration crop. Now what do you mean by a crop season? Sir, crop season is something right from seedling or planting till harvesting. Right from seedling and planting till harvesting. Naatu vayadam దగ్గర నుండి కోత చేసేంత వరకు how much of a time they will be considering, that time will be called as a crop season. If such sort of crop is taking greater than 1 year, then it will become long term. Less than 1 year, then it will become short term. So now how to decide NPA in this situation, sir? If interest or principal is overdue for a period more than 2 crop seasons for short term, then it will be declared as NPA. If it is long term, the period is given for more than 1 crop season. Clear everybody? In the sense, instead of 90 days, here you have to consider seasons. Say for example, paddy, the season is 3 months hard. If you take sugar cane, the season will be 14 months around. So depending upon the crop type, the season will be decided. If paddy you have considered hardly the month, hardly the period is like 3 months. So up to how many crop seasons relaxation is given? 2 crop seasons. That is 2 into 3 months, which comes to 6 months. Say for example, he is taking something like jowar, where the period of crop season is 4 months. Now you have to consider 2 into 4 months. 8 months you have to consider. Clear everybody? So like that it will be decided. It is not depending upon the standard periods. It is just depending upon the type of crop and the period of crop season. That is what your agricultural. And the next one is consortium advances, which is nothing but also called as syndicate loans. Syndicate loans or consortium advances. Group of banks coming forward, 2 or more bankers to give a loan to a single person. Say for example, TCS company is asking around 1000 crores loan. Maybe to a single bank it is not a huge amount, but risk involved is huge. And hence a single bank is not ready to face that risk. It will be considering the group along with the other banks, it will be giving a loan. It is having 2 party summa, main banker or the lead banker and other bankers which are nothing but members. Generally, the customer is having mostly contact with the lead banker, but while classifying NPA, every bank has to classify by itself, but not the group will be classifying. Group generally will not classify. For classifying NPA, individually bankers has to classify. Remember my dear children, if the loans were given with the guarantees of Exim Bank, Kisan Vikas Patras, Indira Vikas Patras, National Savings Certificates and fixed deposits. For all these kind of things, whatever are there, for all these kind of things, NPA classification is absolutely not at all required. In the sense 90 days or one crop season, whatever the thing, that is absolutely not required. NPA classification is not required. Remember, my dear children, gold bonds and gold loans. If any loan is taken by giving security as gold, for that thing again classification will be there. Government securities, yes, classification will be there. If only these things, there will be no classification of NPA. But if it is gold or government securities, NPA classification will be normal itself. Clear, everybody? Fine. And moving on to the next thing, ECGC or DICGC cover. So remember, ECGC, Export Credit Guarantee Corporation, DICGC, Deposit Insurance Credit Guarantee Corporation. So these are the companies which will be providing insurance facilities to the bankers. See, banker had given loans to the customers. If customers evade and gone, of course it is too much risky to the banker, right? And hence it is been taking insurance policies on the customers or on the loans and advances that were being given to the customers. For 40% risk coverage, for 80% risk coverage. It's very simple. If you want to take a coverage of 80%, you have to pay huge premium amount. If the coverage is only 20%, of course premium will be less. If a customer had evaded and gone to who is due for us to the extent of 10 lakhs. Total 10 lakhs is unsecured. Customer has declared insolvency. Since I am having an insurance policy, this ECGC cover will be giving me. How much portion it will be giving me, sir? On how much portion ever you have taken insurance, that much portion you are going to get that. If you want a coverage of 80%, you have to pay more premium. If you want to get a coverage of 60%, comparatively less premium. 40% still comparatively less premium. Clear, everybody? Fine. So coming to ECGC or DICGC cover, first of all you have to take the total loan amount, and this total loan amount has to be divided into two parts. Number one is secured, number two is unsecured. Sir, secured in the sense already security is there for you, then why again you will get once again cover? On security there is no cover. Only on the unsecured portion there is cover availability. Clear, everybody? So on unsecured cover there is obviously cover availability. So you have to take care. Secured, unsecured. On unsecured you are having covered portion. Whatever the balancing figure, say for example 40% is covered, 60% will be uncovered. Remember, my dear children, on the covered portion absolutely no NPA classification is required. But on secured portion and unsecured portion, normal classification is very much needed. But the luckiest thing enti ante, in all the problematic parts, we are having only D3 category. So whether secured or unsecured, D3 category in the sense 100%. But if at all, take care, we cannot give that guarantee, because in the examination, porra paatuna substandard asset ki ECGC cover annadu anuko, then again percentage will change. If it is unsecured, it will become 25%. If it is secured, then it will become 15%. But ఇప్పటి వరకు మనకున్న అన్ని ప్రాబ్లమ్స్ ఆర్ ఓన్లీ ఇన్ D3 category, and hence entire 100% can be created for the purpose of provision. So that is what about cover. But take care, one thing that you have to remember is all about ECGC and DICGC cover will be applicable only for unsecured portion. You have to remember that very clearly. So that is one of the things where you have to be a bit more careful. Next, rebate on bills and discount on bills. Very, very simple concept. So just have a look here. I'll be giving you an example. On 1/1/2011, we are having a bills receivable of rupees 10,000. On 1/2/2011, a customer had come to the banker. Now all we are in the position of bankers, okay? Think from the viewpoint of bankers. Now, now to a banker, a customer had come on 1/2/2011 for discounting the same bill of rupees 10,000. The period of the bill is all about 4 months. Did you get my point? Fine. How many months discount will be given by the banker now? Look at carefully the dates. On 1/1/2011, bill of 10,000 drawn for a period of 4 months, but he is coming on 1/2/2011. So the discount will be computed only for 3 months. Say for example 9% is the discount. Then how much will be the discount, amma? 10,000 into 9% into 3 by 12. 225 is the discount amount. Am I correct or wrong? So how much amount will be given by the banker, amma? 10,000 minus 225. Around 9,075 or 9,775, whatever is that. That was being given by the banker to the customer in the form of amount. The biggest problem is all about this income. If you observe, what is the date of discounting? 1/2/2011, and what is the period of discounting? 3 months. So it will be expiring on which date, amma? 30/4/2011. In the sense, but we are having year end something like 31/3/2011. So for your current information, in previous year we are having 2 months. In the next year we are having 1 month. So, which is nothing but 225 has to be apportioned for current year and next year. That is like 2 months is to 1 month, which comes to an amount of, this is what the point. So that is like in 2 months 150 and in next month 75. Now look, my dear children, whatever is the amount that is to be discounted in the next period is called as rebate on bills. Whatever is the amount, Now moving on to the next thing, please look here, Amma. So total discount, I have written it as 225, but current year income is only 150, which has to be transferred to P&L account, and whatever the next year income 75 is there, it has to be transferred to rebate on bills account. Clear, everybody? So literally my entry will be, first of all I have to give the amount to the customer, right? But I am getting bill. Bills purchased and discounted account debtor to customer account some 9775 to discount on bills account 225. There's no problem if this total discount is relating to current year, but the problem only 2 months is relating to current year. So discount on bills 225 to P&L account 150 to rebate on bills, which comes to 75. Clear, everybody? So that is what our concept of to discount on bills, rebate 75, 150. Now take care, last and final stage. In the next year, we have to open the books of accounts. Am I correct or wrong? At that time, whatever is the rebate on bills that we have written in the last year has to be transferred to discount on bills. So what is the journal entry? Rebate on bills account debtor to discount on, that's it. So it is something like discount on bills. Current year total discount will come here, and next year rebate is there. It will be coming here, and whatever is the amount that is to be transferred to P&L account will be coming here. That is what discount on bills. And moving on to the next thing, rebate on bills. So take care, rebate on bills is having credit balance, amma. It is like pre-received income, income received in advance. So opening, closing. So whatever opening is there, it has to be transferred to discount on bills, and current year whatever rebate is there, it will be transferred to rebate on bills, and it has to be transferred to next year discount. So current year, whatever is the excess amount that we have received, it will be transferred to rebate on bills, and it will be acting as the closing balance. And in the next year again same cycle will continue. This rebate will be transferred to discount on bills. Pakka, everybody? So that is what another concept, that is all about rebate on bills. Moving on to the next thing, bills for collection. So coming to bills for collection, again very, very simple, nothing great at all. See, the only difference between rebate on bills or discounting a bill and a bill discount, bill collection is all about customer will be surrendering the bill to the banker in bills purchased and discounted. Now, drawee has to pay to the banker. Otherwise, banker will be collecting the same from the customer. Of course, that is nothing but drawer. But under bills for collection, it is of different style. It is a service that is provided by the banker. In the sense, whoever is the customer is there, he will be giving the bill to the banker. And banker will be collecting that, and the amount will be given to the customer. Otherwise, he will not be giving the same to the customer. But whatever is that, banker has provided the service, so he will take the commission for that. Pakka everybody? So bills for collection, asset account debtor, to bills for collection, liabilities account. Whether the bill honors or dishonors, the entry will be absolutely reverse. Bills for collection, liabilities account debtor to bills for collection, asset account. Pakka everybody? So that is what all about your bills for collection. For the work that is done by the who is that banker, he will be charging some commission. So that is quite common. Customer account debtor to commission account. Okay everybody, that is bills for collection. And last and final thing, bills for bills for collection, the last point is that it is no need to show it both at asset side and liability side. It will be shown at the footnote of balance sheet along with contingent liabilities. But it is not a contingent liability. It is shown along with contingent liability. Both asset side and liability side it has to be shown. It's something like waste of time, or the position will not be affected, and hence it can be shown along with the contingent liabilities. And next one, acceptances, endorsement and general guarantees. Sir, these are different kinds of services that were provided by the banker in the form of a guarantee. Banker can give guarantees, general guarantees untai kadani, letter of credit guarantees or something like that, or banker can accept a bill on behalf of our creditor, or banker can endorse a bill on behalf of our creditor, who is nothing but customer. Customer is requesting the banker, you bank, give guarantee to the person with whom I am doing the business. Here our customer is there. He wants to do the business. He wants 1 lakh worth of goods, and which are to be supplied by Mr. A, who is at Delhi. So A is not trusting my customer. Then customer is requesting the banker, please provide some security to A so that he will be sending the goods to me. I will be doing the business, and so that I can give the money to Mr. A, or I can give the money to Mr. Banker. This is what the request made by the customer. So on behalf of my customer, I am accepting, banker is accepting a bill that is drawn by Mr. A. On the due date, I will be paying to Mr. A. Now this customer has to pay to me. Acceptance. Endorsement in the sense, I will be drawing a bill on my customer. My customer will be accepting and sending it to the banker. Banker will be endorsing the same bill to the Mr. A. And on the due date, that customer has to pay to Mr. A. If he fails to pay, banker has to pay, and banker will collect the same from the customer. Asali emi kaakunda single form, guarantee, signature. Who has to pay? Customer has to pay to Mr. A. If he fail to pay, banker will pay. Of course, for each acceptance, endorsement and other obligation is a contingent liability, so there will be no journal entries at all. So if at all it is accepting, it will be at credit side. And current year acceptance or guarantees by constituents for acceptances, endorsement and other guarantees will be at credit side. And debit side, what are the things that you are having? If at all client had honored or customer had honored, if at all client had dishonored, even then it has to be deducted. I mean to tell, you have to check out ultimately how much is your liability now. You are having a guarantee amount of rupees 10 lakhs, opening balance. And current year, you have given guarantees for another 30 lakhs. Total, you are having a guarantees of 40 lakhs, out of which 5 lakhs was paid by the customer. And another 5 lakhs paid by the banker. And another 20 lakhs dishonored. So, banker has to pay. Now, this 5 lakhs, since paid, no more a liability. And even this 5 lakhs, since paid, no more a liability. But this 20 lakhs, this 20 lakhs, since dishonored, banker has to pay. This is converted to a liability. So, out of 40 lakhs, for 10 lakhs, no liability. For 20 lakhs, converted to liability. And remaining still 10 lakhs is there, right? It will be carried forward as a contingent liability. Pakka everybody? So, that is all about acceptances, endorsement and other obligations. And last but not least, 3 types of investments that banker will do. HTM, HFS, AFS. Held till maturity, held for sale, available for sale. Held till maturity, in the sense till maturity date, banker will be holding the investment. Long term or short term? Long term. And hence it has to be valued at cost price. But if you come to the second one, HFS, their intention is to sell whenever the price is getting increased, which is nothing but held for sale. And the third one is available for sale. They are not having clear-cut intention. If price rise, they will sell. Otherwise, they will not sell. Available for sale, but their intention is not to sell. But if time comes, they will sell that. These two things are literally as short term and has to be valued at cost or market price, whichever is lower. And there is one more important thing. If banker is investing all the amount in HTM, held till maturity, then it will not be having sufficient funds to reach the customers, and hence ceiling limit is there. Maximum 25% is on held till maturity, and hence whatever the remaining 75% will be for HFS and AFS. Remember, HTM is maximum 25%. You are having in one problem also. Clear everybody? So that is what your banking simplified rules. And financial statements. So coming to financial statements, I am not at all covering balance sheet. I'm not covering balance sheet because our aim is not with balance sheet. Yes, on the major situations, just wait. On a very major note, the things that were being tested is all about P&L account only. So we are just covering P&L account itself. So P&L account schedule starts from 13, 14, 15, 16. 13 is interest, 14 is others. Again same, 15 is interest, 16 is others. So operating expenses, but you can write other expenses also. Whatever are the administration expenses, operating expenses and all other expenses will be coming directly in schedule number 16. But take care, for one thing there will be no note or schedule number, but you have to open working note, that is for provisions and contingencies. Clear everybody? So I mean to tell something like, it will be something like this. So name of the banker, whatever is there you will be writing. Statement of P&L account, on some date you are writing. Take care. Now it is been all about part 1. What is part 1 number? Income. What are all the two things you are getting? Interest earned, other income. And here you are going to get total. And next, moving on to the next thing. Part 2. What is part 2? Amma? Expenses. Under expense, two things. Interest expense, others. And also it is one more thing you are having. Provisions and contingencies. Schedule number 13, 14, 15, 16. Working note number 1. Sir, here you can also write other expenses. Operating and rayalana mandatory aithe ledu, because practically there are banks who are writing other expenses. Because not only operating expenses, some other expenses, if any are there, will also be included here itself. Likewise, other financing expenses, if any are there, or other any small administration expenses will also be coming here itself. Take care. 13, 14, 15, 16 and provisions and contingencies, there is no schedule for that, and you have to open working note number 1. In all these things, everything is very simple, but for each and everything one special element is there. So let's discuss that one. First one, schedule number 13. Interest. Whatever kind of interest that you earn will be coming under this schedule. But take care, if it is non-performing asset, then it will be on cash basis. Please check out the question. He will be giving in the question accrued istadu, but you have to convert it to cash. So that is one area where you have to be a bit careful. And this is the note where you have to be very careful. Because whatever the commissions, exchange, brokerage will be here. But remember, profit on sale of investment minus loss on sale of investment. Profit on revaluation of investment minus loss on revaluation. Profit on sale of assets minus loss on sale of asset. Profit on exchange transaction minus loss on exchange transaction. And other income, if any, you have received. So, for sale of assets, revaluation of assets. Sale of investments, revaluation of investments. And finally, profit or loss on exchange transactions. if any are there, even loss is also to be booked in other income itself by setting off with the profit, and it has to be shown in a negative figure. So please be careful with schedule number 14. And of course 15 is very, very simple, nothing great at all. 16 is also very simple. If you are having enough capability, by heart the order. Who will be having such kind of enough capability? Moreover, if you have, by hearting is some sort of waste of time itself, right? తీస్తే తీసుకొని హాఫ్ మార్కో 1 మార్కో మళ్ళీ బ్యాంకింగ్ క్వశ్చన్ ఒక్కటే వాడికి కాదు, పేపర్ అంతా బ్యాంకింగ్ క్వశ్చన్ ఒకటే రాస్తే బై హార్ట్ చేసుకుని వెళ్ళప్పుడు అది. సో టేక్ కేర్, యూ కెన్ రైట్ ద నార్మల్ స్టేజ్, ఐ మీన్ లైక్ నార్మలీ వాట్ ఎవర్ ఈస్ ద ఆర్డర్ దట్ ఈస్ గివెన్ ఇన్ ద క్వశ్చన్. అండ్ ఎస్ సార్, ఇఫ్ యూ అబ్జర్వ్ this question, CRD number 10, something like KLM Bank Limited, if it is an SM, many times it is being tested in the examination. So this kind of questions are frequently being tested in the examination. So please be very, very careful. And the last and final area where you have to be a bit more careful, and also this one, CRD number 11, KC Bank. So I told you like on some NPS he will be giving earned istadani cheppa kadandi. So that is what this question, he will be giving earning, but you have to convert it to collected. So deduct earning and add collection so that you are going to get it on the cash basis. You know like how easy is this question? First anni 13, tarvata 14, afterwards 15, and finally 16. That is what the question style is also. Same question and similar question many times is being tested in the examination. So please be very careful. This style of questions RTPs lo unnayi, MTPs lo unnayi, past examinations lo unnayi, study materials lo kuda unnayi. So please be careful with it. And now moving on to the thing. Yes, last but not least, from current year profit 25% will has to be transferred to statutory reserve. That is mandatory. Sir, if loss is there, who will do what if loss is there? All the thing is extended only when profit exists. If profit is there, you have to transfer it to statutory reserve. Minimum of 25% of current year profits. Chala mandi chesa mistake entante brought down profits also will be added and they are computing. Please take care, it is not the brought down profits, it is only the current year profits. Clear everybody? Why I am telling in the sense, if you look here the format, profit or loss, part 3, part 1 I told you income, did you remember? Part 2 expense, part 3 profit or loss. In profit or loss, current year will be considered, opening also will be added, and after that appropriations. Coming to appropriations, whatever appropriations given in the question, follow that. Like 5% transfer to general reserve, 10% dividend declared hourly, okay. Even though if it is not mentioned, if it is banker, 25% of current year net profit has to be transferred. Take care, don't compute it on the total, you have to compute it on the current year net profit. Clear, Amma? So that is all about simplified versions of banking. So I did not cover balance sheet of bank. Okay, so that's what banking. Check out, emana doubts unte adagachu. Of course, at last you will tell no doubts are there. And then we are going to start the next chapter, that's like NBFC. And also remember, I did not cover capital adequacy norms. And even capital adequacy norms is very, very easy. Of course, nowadays it is been testing for 10 marks. I did not cover because it is such an easy thing. You are having tier 1 capital list, tier 2 capital list, and afterwards you are having risk weighted assets. Coming to risk weighted assets, if it is relating to government or RBI, then the risk will be absolutely 0. If it is relating to other banks, risk will be like 20%. For all the remaining things, 100% is. And for off balance sheet items, wherein you are having what is that called, non-funded exposures, real estate ki sambandhinchina non-funded exposure, if any is there, 150% is the risk weighted asset. One more thing, it will not be there in what is that called list, but you will be getting directly in the question something like loans that were given against fixed deposits. ఇలాంటివి కొన్ని పాయింట్స్ ఉంటాయి. Loans that were given guarantees with Exim banks, loans given guarantee with fixed deposit. Sir, on that we ourselves are telling no risk, no NPA is required. Then why risk will be there? Did you get my point? If the loan is extended with the guarantees of KVP, IVP, Indira Vikas Patras, Kisan Vikas Patras, National Savings Certificate, fixed deposits, Exim Bank, no NPA classification is required. Why? Because there is no risk. So even capital adequacy norms related questions, no, if you have provided with the assets, loans given against fixed deposit, risk is absolutely zero. No risk is there and hence no need to consider that one. List lo direct ga undadu, but you are having in one problem also, so please be careful. Loans given against some sort of things, you have to consider it as zero. Afterwards think like leasehold premises ani, లేకపోతే other fixed assets, fixtures and fittings, whatever are the things there, educational loans given, like this you will be having for all the things where you have to consider 100%. Clear everybody? That's what your capital adequacy norms. And afterwards conclusion is important, amma. I mean to tell the conclusion, you have to maintain a minimum of 9%. If you are not maintaining a minimum of 9%, you should be in a position to tell why you are supposed to not maintain that 9%, and you have to reinstate the same to 9% immediately. Clear? Now moving on to the next thing, NBFC. I'm not covering each and everything. Under NBFC, provisioning norms already I told you, and periods, performing, non-performing periods, మీరు చూస్తే అర్థమైపోతుంది. The things that I am covering are all about on a note periods we will cover, and what is it called, net owned funds. We are going to cover these two things. NBFC is a very easy chapter. In this chapter, mainly two models were being highly tested. Number one is hire purchase and leasing asset installment period ichesi. He is going to tell you how much period it is overdue and you have to create a provision on that. And number two is net owned funds. Sir, net owned funds in the sense, first of all, you are supposed to know what is owned funds. Whatever is the bank and tier 1 capital is there, generally all those things will be included even in NBFC also. That is under owned funds. So coming to owned funds, equity share capital paid up will be included. And next, preference share capital compulsory convertible will be included. And apart from these things, reserves and surplus. What are the reserves that are included, amma? Free reserves will be included, securities premium will be included, capital reserve that is realized in cash will be included. If any revaluation reserve is there, it will not be included, because revaluation is not realized in cash, right? And hence it will not be included. If any is included, it has to be deducted. Clear everybody? Intama? And moving on to the next thing, sir, share capital plus reserves and surplus minus if any miscellaneous or fictitious assets are there, it has to be deducted. Also if any intangible assets are there, those have to be deducted. So this is what your computation of owned fund literally. Owned fund, which includes share capital plus reserves and surplus minus miscellaneous assets. Here also intangible asset has to be deducted. Share capital, paid up equity share capital, paid up compulsory convertible preference share capital, reserves and surplus, free reserves, securities premium, capital reserve realized in cash. If any revaluation surplus is there, it will not be included. If included, it has to be deducted. And if any miscellaneous assets like P&L loss, miscellaneous assets, heavy advertisement expenditure, or discount on issue of debentures, preliminary expenses has to be deducted. And if any intangible assets are there, even those intangible assets also will be deducted, wherein we are going to get the owned fund. After that, you have to deduct investments in order to get net owned funds. There are two kinds of investments that are to be deducted in order to get net owned funds. Number one, investments in subsidiaries. I'm to tell you investment in group companies, which includes subsidiaries, joint venture, associates. Sir, investment in group companies we are telling, right? In the sense subsidiary, joint venture, associate. They will become our subsidiary, joint venture and associate only if you have invested in equity shares. So literally first one, investment in equity shares of group companies. Second one, investment in equity shares of other than group companies okati, and investment in other than equity shares of group companies ఒకటి. Hope you have got the difference. Number one is equity shares in group companies. Number two, all other investment. What are all other investments you are having, amma? Equity shares of other than group companies, other than equity shares of group companies like debentures, preference shares, bonds, etc. and etc. First one, investment in equity shares of group companies, not at all permitted, because your business is to give the loans to the customers, but you are using it for the purpose of your personal sake, and hence it is not permitted. Total amount has to be deducted. But if it is other investment, up to 10%, relaxation is being provided. In excess of 10%, if any is there, it has to be deducted. Understood? Up to 10% of owned funds. Say if your owned funds are 1,000 lakhs. If your other investments are 250 lakhs. In excess of how much has to be deducted? 10% of owned funds, that is 100 lakhs. How much is in excess of 100 lakhs, amma? 150 lakhs. So in second slot, you have to deduct 150 lakhs. This is what the computation of your net owned funds. Take care, in one of the recent questions, he has also given with NBFC. Investment in other NBFC is also not permitted. Even it also has to be deducted. Understood, amma? Fine. అయితే ఇప్పుడు మన సమ్స్ అన్నిట్లో ఎలా చేస్తాడు అంటే, he will be taking the total investments, investment in group companies, investment in equity shares, other investment. Total investments తీసేసుకుని in excess of 10% of own funds will be deducted. Did you get my point? Sums చేసే థియరీ చెప్పేటప్పుడు అయితే how it will be, investment in group companies totally should be deducted, other investment in excess of 10% is the words he is using, but while doing the problems he is not concentrating on that. Take the total investment minus 10%, in excess of 10% of owned funds, and total investments has to be deducted. Take care, my dear children, even investment in other NBFCs is also to be deducted. And group companies, don't stick only to the companies, investment in other NBFCs. In one of the recent examination, that point is added. Even andarki cheptunna, స్టార్టింగ్ నుండి వాడు ఏ మోడల్స్ అయితే అడగకుండా ఉన్నాడో, there is a scope or chance to ask that kind of models. So don't be in a very cool notion that those will not be tested at all. ఏదో ఒకటి ఖచ్చితంగా అడిగేస్తాడు. Till now share surrender did not ask, or till now statement of affairs did not ask. So of course in two of the things he will be asking one thing. సో ప్లీజ్ బీ కేర్ఫుల్. ఇప్పటి వరకు అడగనివి ఏవైతే ఉన్నాయో ఆ మోడల్స్ నుండి టెస్ట్ చేయడానికి స్కోప్ ఖచ్చితంగా ఉంది. సో బీ కేర్ఫుల్ విత్ ఈవెన్ దాట్ థింగ్ ఆస్పెక్ట్ ఆల్సో. ఫైన్. అండ్ నెక్స్ట్ థింగ్ ఈజ్ ఆల్ అబౌట్ పీరియడ్స్. Likewise, when it will become standard, substandard, etc. and etc. Sir, in banks we have used 90 days. Here we are going to use 3 months. Here it is in the form of months, there it is month in the form of days. Don't ask me why. Literally I don't know, because the commission has framed like that. Act was framed like that. I don't have any personal contact with the persons who have framed that act, okay? RBI to nakem personal contacts levamma. Now moving on to the next thing. All the NBFCs are divided into NBFC deposit accepting. Generally deposits accepted by NBFC is not possible. Exception, with the prior permission of RBI, it can accept fixed deposit. That is also not given to chit fund company, loan company, investment company, hire purchase company, leasing company and insurance companies ki matrame permission icharu. That was not given to chit fund company. Anyways, that too prior permission is required. So NBFC D. And next, NBFC non-deposit but systematically important. Systematically important in the sense assets will be greater than or equal to 500 crores. And all other NBFCs, that is NBFC, ND, NSI, non-systematically important, not accepting the deposits, assets are less than 500 crores. Rules will be stringent, rules will be a bit normal, comparatively easier rules untadi. Now, what are those things, sir? Sir, number one, periods chuddam for performing and non-performing. Performing and non-performing, same rules. That is like up to 3 months it is performing. In excess of 3 months overdue, it will become non-performing. But coming to NBFC, ND, NSI, it is totally different. Performing up to 6 months. If it is leasing and hire purchase, it is up to 12 months. And coming to non-performing, if it is a period greater than 6 months, interest and principal overdue for a period greater than 6 months, it will become non-performing. If it is a leasing and hire purchase loan greater than 12 months, then it will become non-performing. Clear everybody? That is what the initial of performing and non-performing. Next concept is all about standard, substandard. So all the performing will obviously become standard. Performing, standard. By the moment it becomes NPA, it will become substandard. And it will be in the category of substandard up to 12 months of NPA if it is D and NDSI. If it is NDNSI, up to 18 months. In excess of that period, it will become doubtful. Of course, D1, D2, D3. Less than 1 year, 1 to 3 years, more than 3 years. Ultimately, loss asset, if any is there, from any stage, it can come. Due to non-recoverability or irrecoverability, any asset can be considered as loss asset, provided if it is decided so by the management or RBI or auditors of NBFC. Clear everybody? That's it. So this is what the major theme of NBFC. And of course, one more thing which is important for problematic examination but very easy. Provisioning requirements of hire purchase and leasing. Sir, period 0 to 12 months, interest or principal is overdue for a period of 0 to 12 months, 12 to 24 months, 24 to 36 months, 36 to 48 months. And now the percentage is something like 0, 10, 40, 70, 100. Percentage of net book value. How much is the net book value that will be given in the question? So by considering that thing, you have to proceed further. 0, 10, 40, 70, 100. Take care, my dear children. One special point is here. If at all, the period of that particular leasing or hire purchase is completed, and from the last due date of installment, if 12 months is expired, then you have to consider 100% of net book value but not the respective percentage. I mean to tell you, say for example, you have given, listen carefully, you have given an asset under hire purchase basis for 24 months. What is the last date of installment, Amma? 24th month. Am I correct or wrong? Say for example, 12 months expired. If 12 months expired, how many months it will become? 36 months. If it is 36 months, how much percentage, Amma? 40%. But the rule is that from the last installment, if 12 months is expired, provide entire 100% of net book value irrespective of the period. Is the example clear? From the last installment, if 12 months is expired, if expiry of 12 months is completed, then you have to create 100% of net book value irrespective of the period that is given. Why I am telling this point in the sense, ఈ క్వశ్చన్ చాలా సార్లు అడుగుతున్నాడు. If you want to twist that question, he will add this point. Apart from that, nothing great. Just he will add this point. మనం ఏమంటే లైట్ తీసుకుంటాం, ఎందుకంటే మనకు తెలియదు కదా సరిగా. So take care. So from the last date of installment, if 12 months period is expired, then you have to create 100% of net book value irrespective of the original period that we have. Pakka everybody? So that is what about NBFC. But I am having a question here to discuss. Just okka question untundi. Periods confuse ayye question amma. Yes, Bright Finance Limited. So coming to this Bright Finance Limited, see in this question what happens, he will be giving more than 30 months due. More than 30 months, but he will be telling that it is substandard. How is that possible? I'm just telling you one example. Basing on this example, you go and analyze that, you will be getting it in a better way. Sir, listen. I'm just telling you, 9 months overdue, even though it can be called as performing. 9 months overdue, even though it can be called as performing. Sir, how is it possible? Listen, generally the classification will be happening only at the end of the year. Generally the classification will be happening only at the end of the year. Say for example, a person had taken a loan on 1/2/2011. By the year ending, that is 31/3/2011, he has to repay the amount. First due date is 28/2/2011, but did not repay anything. How many months completed, Amma? 1 month. So it is overdue only for a period of 1 month. So by the year ending 31/3/2011, he is classified as performing. Now, till the next classification comes, he is called as performing only. Next classification, when it will come? 31/3/2012. Of course, ఇప్పుడు సెబీ రూల్స్ వచ్చేసాయి, 3 months కి వెయ్యాలి, అప్పుడు మళ్ళీ చేస్తారు. బట్ మన ప్రాబ్లమ్స్, బీయింగ్ ఆల్ వి పీపుల్ ఆర్ డూయింగ్ అకౌంట్స్, నాట్ ద సెబీ యాక్ట్, కన్సిడర్ 12 months as the financial period. So up to 31/3/2012, that is again reclassification, still it is called as performing. But overdue ఒకసారి చూద్దాం. On 28/2/2012, how many months completed? 12 months over. Strictly speaking, it has to become substandard, but it is still in the category of performing. Why? Because it was not yet classified. So please take care. To decide the category, don't just look at the period. To decide the category, don't just look at the period. Look at the previous classification. From the previous classification, you are going to classify the next thing. Sir, if nothing is given and I am telling 12 months overdue, then automatically it will become substandard. But I have given a clear-cut explanation to you. Now on even on 28/2012 also, since it was not reclassified, it will be still in the category of performing. ఇప్పుడు వాడు కూడా అక్కడ ఒక, in that question what he will be telling is that up to 30 months overdue will be there. Up to 30 months overdue will be there, but it was being classified as, I'm sorry, what is that called? Yes, but the period classified after substandard is less than or equal to 12 months. Total overdue is 30 months, but it was classified as substandard, but 12 months was not yet expired. Still it is in the category of substandard. After classifying it as substandard, if 12 months is expired, then it will become doubtful D1. But after classifying as substandard, if 12 months is not expired, it will be in the category of substandard itself. Pakka everybody? So that is what your example, a point. So be careful with that point. So Bright Finance Limited, this 30 months, 10 accounts. Look here, out of 10 accounts overdue for more than 30 months, 6 are already identified as substandard for more than 12 months. So go to the next category. And there are some other assets identified as substandard for a period less than 12 months. Still in the category of substandard. Is this 30 months relevant at that time? No. Previous classification is more relevant than this one. For the last and final time I'm telling, and I'm going to close. Please don't fall just in a trap of looking the months. Also look at the previous classification. Generally, as per accounting, financial year is the period. Up to next classification, it will be running only in the previous classification itself, irrespective of period due. Now he is telling 30 months is the total overdue. 30 months is the total overdue, more than 30 months. But those assets were identified as substandard for a period of less than 12 months. Since 12 months was not yet expired, those will be still in the category of substandard itself. Don't just look at the previous period, look at the previous classification. చాలా మంది ఈ పాయింట్ కి కన్ఫ్యూజ్ అయిపోతూ కొట్టేసుకుంటూ ఉంటారు ఎందుకు అని. అండ్ ఎట్ లాస్ట్ దే విల్ బి కమింగ్ టు ఎ కంక్లూజన్ సంథింగ్ లైక్ అక్కడ ఉంది బట్టి పట్ట ఒక్కటి రాస్తే అయిపోతుందని ఫిక్స్ అయిపోతాం. నాట్ ఓన్లీ యూ, ఇనీషియలీ నేను కూడా అంతే ఉండేవాడినేమో ఇఫ్ ఐ వాజ్ ఎ స్టూడెంట్ ఎట్ దాట్ మూమెంట్. మాకు అప్పుడు ఎన్బిఎఫ్సి లేదు కదా. సో దాట్స్ వాట్ మై పాయింట్ ఈస్ ఆల్ అబౌట్, అండ్ దట్ ఈస్ ద ఎండ్ ఆఫ్ ఎన్బిఎఫ్సి. So take 2 to 3 minutes time, we are going to start amalgamation. Of course, it's difficult to complete like 5 varaku kada. 5 to 6 is our break, but 5:15 to 6 is our break. ఇఫ్ యూ వాంట్ ఐల్ ప్రొవైడ్. లైవ్ నుండే కావాలంటే ఇచ్చేద్దాం, ఐ డోంట్ హ్యావ్ అబ్జెక్షన్. కానీ అప్పుడు రివిజన్ మొత్తం అంతా నేను నా ఎండ్ నుండి చేయడానికి పాసిబిలిటీ ఉండదు. సో లెట్స్ డూ వన్ థింగ్, హూ ఎవర్ వాంట్స్ టు గో టు బ్రేక్ బై 5 o'clock. విల్ కంటిన్యూ. So even coming to amalgamation, our concentration is on the overall formats and overall essence. One or two difficult points with the problematic part. But coming to amalgamation, there will be no such difficulty, but provided you have to read the question carefully. Amalgamation, see, each question is having its unique style. Only one thing that you have to be more careful is towards reading the question. మీరు చెప్పొచ్చు, సార్ వాట్ ఎవర్ ఈజ్ ఇన్ ద ఎగ్జామినేషన్ ఎవ్రీథింగ్ విల్ జస్ట్ డిపెండ్స్ ఆన్ ద క్వశ్చన్ చదివితేనే ఆన్సర్ వస్తుంది అని. దాట్స్ ట్రూ, బట్ ఫర్ అమాల్గమేషన్ ఇట్ విల్ బి 1% హయ్యర్. ఎనీవేస్ లెట్స్ స్టార్ట్. అమాల్గమేషన్, లైక్ I already told you, partnership, amalgamation, consolidation together will be catering for 50 to 60 marks in the examination, wherein in the morning session we have completed with the consolidation, and with that steps you can solve that, but take care with consolidated P&L account also. And now let's come to amalgamation. Sir, coming to amalgamation, there are two companies, like old company or new company, which is nothing but old company is transferring the business to the new company, so which is called as transferor company, and new company is accepting that transfer, which is called as transferee company. Take care, for transferor company, closing the books of accounts. Why AS 14 is applicable for closing the books of accounts? For closing the books of accounts, AS 14 is not at all applicable. Then what is applicable, sir? Liquidation proceedings will be applicable. IGAPs, Indian Generally Accepted Accounting Principles, are applicable. In that, what are applicable? In the sense, liquidation proceedings, like how to close a company or how to close the books of accounts of a company. And coming to the second one, that is transferee company, obviously accounting standard number 14 is applicable. Now first let us see this one. And after that one, since old company has transferred the business to the new company, and new company has to disperse purchase consideration to the old company, that is to the transferor company. So we'll see three heads. Number one is closing the books of accounts of transferor company, purchase consideration, and transferee company, books of accounts. Fine. Sir, coming to the first one, transferor company, I'll try to cover each and every different areas that you will encounter in the question. క్వశ్చన్లో ఒక్కొక్క పాయింట్స్ వస్తాయి కదండి, అవి వచ్చేలాగా ఎలా వస్తాయో ఆ పాయింట్స్ అన్నీ కూడా లైక్ వైజ్ హౌ వీ హ్యావ్ కవర్డ్ టిల్ నౌ ఫార్మాట్స్లోనే ఎలా అయితే కవర్ చేసామో ఐ జస్ట్ కవర్ ఇన్ దాట్ స్టైల్ ఇట్ సెల్ఫ్. సో ప్లీజ్ బీ కేర్ఫుల్. సో ఫస్ట్ వన్, క్లోజింగ్ ద బుక్స్ ఆఫ్ అకౌంట్స్ ఆఫ్ ద ఓల్డ్ కంపెనీ, దట్ ఈస్ సంథింగ్ లైక్ transferor company. How to close the books of accounts of the transferor company? Listen carefully. Sir, it's very simple. If you take a balance sheet, you are hardly having share capital, reserves and surplus, outside liabilities, fixed assets, current assets, miscellaneous assets. Fixed assets, current assets and outside liabilities are totally external items. I mean to tell, if you transfer these things to the new company, the new company will be giving purchase consideration to the shareholders of our company. So now, whatever the assets that you are having and whatever the liabilities you are having, you have to transfer it to the new company, and for that transfer we will use an account called realization account. So for closing all the assets that were transferred, realization account debtor to assets account, and for all the liabilities account debtor to realization account. Transferred all the assets, transferred all the liabilities. Now you have to go with purchase consideration. But before going with purchase consideration, there is no rule that all the assets will be transferred. You know, in some of the questions he will be giving, all the assets were transferred by the company except plant and machinery. Then what to do with that plant and machinery, sir? You have to sell that asset. or he will be telling bank loan is settled by our business concern itself. After settling bank loan, we have transferred all the assets and liabilities to the transferee company antadu. In that situation, how to do, sir? If assets and liabilities were transferred, put it in realization. If not transferred, you have to do liquidation proceedings chesanga, liquidation lo, sale of asset and settlement of liabilities. You have to do that one. And if any profit or loss is there, it has to be transferred to realization. In reconstruction, you will be transferred to reconstruction, but here you will be transferring it to realization. Say for example, you have sold an asset, cash or bank account debtor to asset account. Profit or loss will be there, right? It will be transferred to realization. So to realization, if profit, realization, account debtor, if loss. Clear everybody? So this is what with the sale of assets. So be careful, observe the question. Question lo one of the statements he will be giving, except plant and machinery or except bank loan. Bank loan is settled by our business concern. So first of all, you have to write the settlement entry for our business concern with respect to bank loan, and then you have to transfer all the remaining assets and remaining liabilities to the transferee company. So assets over, liabilities over, and outside liabilities over. Now the next one, whatever the share capital, reserves and surplus and miscellaneous assets are there, these are solely belonging and to be borne by equity shareholders only. So all the items that are relating to equity shareholders, you have to open equity shareholders account. So by equity share capital account, by reserves and surplus account, to miscellaneous assets account. I mean to tell, if any losses, discount on issue of debentures, preliminary expenses are there. So equity share capital, reserves and surplus, miscellaneous assets. But share capital may also include preference shareholders. People will confuse if preference shareholders is given. Nothing great at all. I guess in 2 questions we are having preference shareholders. A preference shareholder settlement ela cheyali. First of all, you open preference shareholders account also, and by preference share capital. First book this one. Stop here. So you have booked all the items that are available in balance sheet of transferor company. So remember, exam for any kind of problem I am telling, likewise how I have told for consolidation, in the same style I am telling for amalgamation also. For any kind of problem, if it is something like closing the books of accounts of transferor company, open realization account, open equity shareholders account, open preference shareholders account. Assets and liabilities taken over by the transferor company has to be transferred to realization account. Assets and liabilities which were not taken over, you have to do sale of asset and settlement of liabilities. Listen this carefully because I am going to link the same with partnership also. Sale of assets and settlement of liabilities. If any profits or losses are there, it will be again transferred to which account? Realization account. Equity share capital, reserves and surplus, miscellaneous assets has to be transferred to equity shareholders account. Only one item is there for preference shareholders, that is preference share capital. Closed all the things. Transferred all the business. Now start. That company has to give you purchase consideration. Coming to purchase consideration, there will be 3 aspects. Number 1, due. Number 2, receipt. Number 3, disbursement. Give the purchase consideration. First of all, due. Who has to give you transferee company? So entry, transferee company account debtor to realization account. Receive the purchase consideration, whatever is being given by that company. It might be either in the form of equity shares, preference shares, debentures, bonds, cash. Ela aina undachu. So for our time being, I am using the word purchase consideration. So receive purchase consideration. So purchase consideration account debtor to transferee company account. And last but not least, disburse. To whom we will disburse ఈక్విటీ అయితే ఈక్విటీ వాళ్ళకి, ప్రిఫరెన్స్ అయితే ప్రిఫరెన్స్ వాళ్ళకి. సో ఈక్విటీ షేర్ హోల్డర్స్ అకౌంట్ డెటార్, ప్రిఫరెన్స్ షేర్ హోల్డర్స్ అకౌంట్ డెటార్ టు పర్చేస్ కన్సిడరేషన్ అకౌంట్. చెక్అవుట్, transferee closed. And ultimately again, whatever the accounts that you opened that were left over, that is realization account, equity shareholders account, preference shareholders account. Ultimately these were the left out things are. Okay, sir. So now what to do? 99.9% he will be asking you to open necessary accounts. నెససరీ లెడ్జర్ అకౌంట్స్ అంటాడు. నెససరీ లెడ్జర్ అకౌంట్స్ ఆర్ జనరలీ ఓన్లీ దీస్ 3 అకౌంట్స్. Sometimes if time is permitted, open transferee company account. If time is not permitted, no need to open. అంటే లైక్ 15 మార్క్స్ ఆర్ 20 మార్క్స్ యూ హ్యావ్ టు మేనేజ్ ద టైమ్. సార్ సమ్ స్టార్ట్ చేసేటప్పుడు ఎలా తెలుస్తుంది అని నన్ను అడిగితే నేనేం చెప్పలేను. జస్ట్ బై లుకింగ్ ఓవర్ టు ద ప్రాబ్లమ్ యూ హ్యావ్ టు అసెస్ దట్ వన్, ద లెంత్ ఆఫ్ ద పేపర్. If you are capable and you are having confidence to do, then please go ahead. If you are not having confidence that your paper is going to be finished in time, then skip transferee company. Because necessary ledger accounts in the sense, generally these 3, of course transferee company will also come. Next priority. So now purchase consideration due. I have to book it in realization first, right? Because my total assets and liabilities transferred were in this account itself. So whatever the consideration received will be in this account itself. Something like by transferee company. And after that one, I have received the purchase consideration to transferee company. And finally disbursing, right? At the time of disbursing, please be careful. Preference shareholders account debtor to purchase consideration. Whatever is given, that one. Even equity shareholders account debtor to purchase consideration. Whatever is given, that one. Now the biggest problem. How to close these accounts? Last but not least, closing procedure. Please be careful, okay? First, you always close preference shareholders account only if preference shareholders account is there. If you have preference shareholders account, close preference shareholders account only. So preference shareholders account, say you have to pay 5 lakhs. You have paid 5 lakhs, no problem. But if you are paying 5.5 lakh, excess whatever is paid, that is absolutely your loss. This has to be transferred to which account, sir? Realization account. And a realization account lo, the total consideration you have booked for both preference and equity, preference loss is 50,000 booked. Understood? So in realization account, both parties losses or profit shall has to be separately treated. And remember, afterwards you may get profit with equity shareholders. So whereas it might be at credit side. So please be careful. Why I am telling in the sense, first instance if you are balancing the figure of realization account, you will get a balancing figure of 4 lakh at debit side. Normally మనకి తెలిసింది ఏంటి అంటే realization account has to be transferred to equity shareholders. Equity shareholders account will not be closed. Preference shareholders account also will not be closed at that moment. So under closing procedure, first you have to close preference shareholders account and then you have to close realization account, and profit or loss whatever is on realization will be transferred to equity shareholders. Technically speaking, whether you close equity shareholders or realization account, it is one and the same. But order wise చూసుకుంటే like logical గా చూస్తే ఏదైనా ఒకటే. But technically as per books of accounts, if you want a clear cut procedure, realization profit or loss has to be transferred to equity shareholders. Clear everybody? So this is what your liquidation proceedings are all about. So come on Amma, what are the liquidation proceedings that you are having? First you have to close assets and liabilities that were transferred to the transferee company. To which account Amma? Realization. So there ends with the first one. Assets and liabilities that were not transferred to transferee company. Sale of assets, settlement of liabilities. Again whatever is the profit or loss that you have got, it has to be transferred to realization account. There ends with the second one. And now you have to open 2 more accounts. What are those 2 more accounts Amma? Equity shareholders account, preference shareholders account. In equity shareholders account, you are going to get equity share capital, reserves and surplus, miscellaneous assets. In preference share capital, you are going to get preference share capital only. Now purchase consideration under 3 stages: due, receipt, disbursement. Due, what is the entry? Transferee company account debtor to realization account. Next, receive purchase consideration account debtor to transferee company, and finally equity preference to purchase consideration. If you received cash, give cash. మీకు క్యాష్ వస్తే క్యాష్ ఇవ్వు, ఈక్విటీ షేర్స్ వస్తే ఈక్విటీ షేర్స్ ఇవ్వు, ప్రిఫరెన్స్ షేర్స్ వస్తే ప్రిఫరెన్స్ షేర్స్ ఇవ్వు. క్లియర్ ఎవ్రీబడి? అండ్ నెక్స్ట్, ప్లీజ్ బీ కేర్ఫుల్. in this connection, you have to be careful with one thing, that is realization expenses. How to treat with these realization expenses, sir? Number one, if realization expenses are borne by transferor company and paid by transferor company, we have to bear, we have to pay. Of course, bear and pay, realization account debtor to cash or bank account. But it has to be borne by transferee company and paid by transferee company. Vallane annam. How is it possible, sir? Well, agreements. It's obviously their agreements. Then what to do, sir? Let them write the entry. No entry in our books at all. And next one, take care. Borne by transferor company and initially paid by transferee company and reimbursed by transferee company. First of all, we are paying, but it will be reimbursed. So at the time of payment to cash or bank, but it has to be borne by that company. So it is all about transferee company account debtor to cash or bank account. At the time of receipt, cash or bank account debtor to transferee company account. Of course, technically after booking these two things, there will be no entry. But take care, while you go in practical purpose, two things will not be happened on the same day. మనకైతే అసలు అమాల్గమేషన్ క్లోజింగ్ ఓపెనింగ్ పర్చేస్ కన్సిడరేషన్ అన్ని సేమ్ డే గా సేమ్ టైమే while doing the problem. But coming to the practical situations, everything will not be happened on the same time or same day. It will take some periods of time, like months of time, in some situation years, of course possible. So in all such kind of situations, you are supposed to pass these all journal entries. Clear, everybody? So coming to closing procedure, first of all you have to close preference shareholders account, and preference shareholders profit or loss will be transferred to realization account. Then close realization account, profit or loss on realization will be transferred to equity shareholders account. Thereby all the three accounts will have to be obviously closed. Clear, everybody? And remember, if you have not got anything to do, directly book it in realization account itself. ఏం చేయాలో తెలియట్లేదు, ఆ టైంకి సమ్ అయినా అవ్వాలి కదా, you directly book it in realization account. Clear, everybody? Fine. So now second point is all about purchase consideration. So now coming to purchase consideration, sir ఇంకా అవ్వలేదు, closing the books of accounts లో 1 or 2 points will be discussed. That will be discussed after the completion of purchase consideration. Some sort of linkages will be there. So remember, we are having two companies like transferor company, transferee company. Transferee company may give consideration to transferor company, and who are the owners of the company? Ultimately shareholders. So whatever is the consideration is given to shareholders will be count as a purchase consideration. If the consideration is given to debenture holders or the bond holders or the lenders, that will not be counted as a purchase consideration. So who are the shareholders we are having? Equity shareholders, preference shareholders. So if you pay even to equity shareholders or if you pay even to preference shareholders, it will be counted as a purchase consideration. So it can be either in the form of equity shares, preference shares, cash, bonds, debentures, etc. Whatever they have chosen, they will give that thing as per the negotiations between the transferor company and transferee company. Now coming to this one, hardly as per accounting standard number 14, there are two methods. Net payments method, net assets method. Of course, there is another method like intrinsic value method. It's not a separate method. It is a part of net assets method, or it might also be a part of net payments method. Fine. So now, when we have to use net payments, when you have to use net assets. So remember, if every payment is given in the question, whatever that is to be paid to preference shareholder is given in the question, whatever is the thing that is to be paid to equity shareholder is also given in the question, whatever the total payments that are to be given to shareholders are given in the question, then it is net payments method. But remember, if at all only part payment is given, and for the part payment he is linking with the net assets. Likewise, he is telling to the equity shareholders, we will give 1:5 equity shares and the balance is given in preference shares. Balance in the sense, how will we know the balance? For that thing, you have to compute net assets. Clear, everybody? If you check out the balance or remaining, if any style of these points or these words are given in the question, then it will be obviously which method, amma? Net assets method. Now one more thing, whatever that we close in realization will be at book values. Whatever that we close in realization will be at book values, but while computing net assets, since that is a kind of purchase consideration, it is totally depending on the market, you have to consider the same at market values. While closing the books of accounts, book values, but while going with the purchase consideration, you always have to consider market values. Sometimes, remember my dear children, there might be unrecorded assets. There might be unrecorded liabilities. That also might be transferred to the new company. Of course, there will be nothing great at all. Transferee company is having unrecorded asset, transferred to transferee company. Transferor company, I'm sorry. Transferor company. Old company is having an asset, transferred to new company. Old company is having unrecorded asset that was not recorded in books of accounts. If it was not recorded in books of accounts, why will you close that one? Am I correct or wrong? So no need to close it at all. So there will be no specific journal entry in the transferor company. But while the transferee company is taking that, it is getting an asset again. So it has to record that asset. So even in net assets also, it has to record that. If at all there is an agreement between transferee company and transferor company at the initial stage itself that my company is having some sort of goodwill, you also have to pay me an extra amount. That goodwill will be immediately debited when computing net assets also. Did you get my point? Normally, net assets base మీద ఇచ్చేటప్పుడు goodwill అన్న కాన్సెప్ట్ అరైజ్ అవ్వకపోవచ్చు. Because whatever the market value of the net assets is there, that will be directly given by transferee company to the old company. So while the transferee company recording the journal entries, assets account at our market value to liabilities account, whatever the values it has taken, that value. Am I correct or wrong? So there is no scope for goodwill in general, but even under net assets method also, question lo istadu, at the time of computing net assets, consider goodwill of the transferee company at 1 lakh. Then you have to consider that. Then you have to immediately consider that as goodwill 1 lakh and adi kuda మీరు consider చేసి net assets ని compute చేయాలి. Clear everybody? Be careful while computing net assets. Be careful also while computing net payments method. There will be some sort of adjustment. If he has given, give 1:3 preference shares, give 1:5 equity shares, this is one style. Give a lump sum cash of 10 lakhs, this is one style. In this style, there is no problem. But the problem is all there. Give 12% preference shares to preference shareholders so as to maintain the same income. ఇది వాడు చెప్తాడు. Now you have to check out. How to check out? Say for example 10 lakhs is the preference share capital we are having, which is at 10%. 10 lakhs, 10% preference share capital. So what is the income we are having? 10 lakhs into 10%, which comes to 1 lakh. Now he is asking you to give 12% preference shares to maintain the same income. So your income should be 1 lakh, but the percentage should be 12%. Am I correct or wrong? So 1 lakh divided by 12% will be getting something. Entama? So this much preference share capital has to be given now. So literally to tell you, adem kottadi kaadu, multiply dividend ani kaakunda, think with common sense. 10 lakh into 10%, income is 1 lakh. So 10% of preference share capital is equal to 1 lakh. Now we want the same 1 lakh, but on how much? 12% is preference share capital. So therefore preference share capital is equal to 1 lakh divided by 12%. It's common sense. Don't be in a wrong notion, multiplication, division, atla kaakunda. If you think with common sense, you'll get that. So this is another style. Likewise, he will be telling so as to maintain the same income. Ilanti questions cheptu untadu, ilanti points. So be careful with these kind of points that were given in purchase consideration. Now, Same question or same things, but he will be telling something like intrinsic value. You know, there's a one problem. మనకి ఇప్పుడు లేదనుకుంటా, but previously we used to have, I don't know whether నాకు గుర్తున్నంత వరకు లేదు. Sir, whenever intrinsic value is given in the question, the value of intrinsic value is given, right? I mean, like in the question itself, he will be giving 12 rupees is the intrinsic value, 14 is the intrinsic value, right? Ante kada? He will be telling intrinsic value of A limited, B limited is 13 and 14, and exchange of purchase consideration will be with intrinsic value basis. He is given in the question. But if he has not given in the question, what to do? Because theory lo chala clear ga oka chota rastadandi how to compute intrinsic value, or it is also called as book value. See, take care, book value is not face value. Book value is not face value. Intrinsic value or book value is one and the same. How to compute this one, sir? If nothing is mentioned, and if he is telling book value or intrinsic value basis, the share exchange has to be done, then you have to compute intrinsic value, something like share capital plus reserves and surplus minus miscellaneous assets divided by number of shares. Then you are going to get intrinsic value. Clear, Amma? While considering this one, you have to consider it book value. You have to consider it book value, because share capital book value is same. Reserves and surplus, no market value, no book value. Miscellaneous assets, no market value, no book value. Everything is at book values itself. But while computing net assets, you have to consider at which value, Amma? Market value. This is another thing that you have to be careful. Anyways, so now while going with intrinsic value, sir, how to proceed with intrinsic value? Just look, say for example, A limited, B limited. A limited has been transferring its business to B limited. We have computed net assets. Net assets of A limited are something like 5,000 lakhs. Net assets of B limited are something like 7,000 lakhs. Clear? And now he is given in the question intrinsic value 15 and 17. Now he is telling also we were provided with number of shares, something like 10,000 number of shares and 20,000 number of shares of B limited we are having. Now the exchange has to be happened. Jagrataga vinande. Exchange has to be happened with respect to intrinsic value basis on the number of shares. So how many shares we are having? 10,000. And what is the value we are having? 15. So 10,000 into 15. 1,50,000 has to be given with 17 rupees intrinsic value basis divided by 17. 8,000, something like 824 number of shares will be given. Clear, everybody? Simply to tell you, get the total intrinsic value of our company, and now he is valuing on the basis of his company. Our intrinsic value is 15. Our number of shares are 10,000. So total value is 1,50,000. But his intrinsic value is 17. So 1,50,000 divided by 17, which is nothing but 8824. So we will be telling 8824 shares will be issued for all the 10,000 equity shares holders. Clear, everybody? This is a style of questioning. And in another style of question, he will be telling on the basis of net assets, right? ఇంకేం చెప్పడు, జస్ట్ ఆన్ ద బేసిస్ ఆఫ్ నెట్ అసెట్స్ అంటాడు. ఎట్ దట్ టైమ్ ఎలిమినేట్ ఇంట్రిన్సిక్ వాల్యూ అండ్ ఎట్ దట్ స్టేజ్ కంప్యూట్ నెట్ అసెట్ వాల్యూ పెర్ షేర్. డిడ్ యూ గెట్ మై పాయింట్? కంప్యూట్ నెట్ అసెట్ వాల్యూ పెర్ షేర్ ఇన్ ద సెన్స్ 5,000 lakhs 7,000 కదా, 7,000 number of shares, 10,000 shares and 20,000 shares. Compute net assets value per share. Something like lakhs తీసేసేయండి అమ్మ, 5,000 divided by 10,000 or something like that. Okay. 0. Something like lakhs అని తర్వాత పెట్టుకోవచ్చు, nothing great at all. So my point is just to convey the elements for you. So now how to proceed, sir? Totally 0.5 lakhs. Am I correct or wrong? ఇందాక ఏం చేసామో సేమ్. This is NAV per share. Am I correct or wrong? How many shares you are having? 10,000. Literally 10,000 into 0.5 lakhs divided by 0.35. Understood? In the sense, if intrinsic value is given 15 into 10,000 divided by 17. If he is not giving and he is just telling one thing, exchange shall has to be based on net assets value, ante, or exchange has to be given on net assets basis, then how will we come to know? Since we don't know anything, compute net assets by considering it at market value and then find net assets value per share, number of shares multiplied by net assets divided by that company's net assets value. You will be giving one number of shares. I mean like one number where that many number of shares will be given to this company. Clear everybody? So this is what your net payments method, net assets method. Sometimes if nothing is given, intrinsic value method. If no information is given, just on the basis of net assets, okka problem emo undandi, em information ivvadu, he will be just telling exchange will be based on net assets basis. In the sense you have to compute net assets value per share and then you have to give the exchange. Pakka everybody? So that is what your purchase consideration. Now, I told you one special point will be there in realization, like closing the books of accounts, right? That last part is all about question lo etla istadante sometimes say for example 12% debentures 1 lakh is existing in transfer or company. In some questions he will be telling transferee company will be assuming this 12% debentures and then it will be settled by transferee company. That is one style. Please take care. 12% debentures as it is will be assumed by transferee company and transferee company will be disbursing the liability of that 12% debentures. That is one style. In another style it will be telling it will not assume the liability, it will directly settle the debenture holders. It will be directly settling the debenture holders. That is another style. So, if at all 12% debentures was assumed by transferee company, there is no problem. Since the liability is taken over, we will be directly putting this one in realization account. But if it was not taken over and if transferee company is settled, then however we are getting purchase consideration for equity shareholders and preference shareholders, in the same way you have to open 12% debentures account also. Clear everybody? After opening 12% debentures account, how much is the brought down balance? Check out. How much is the settlement value? Check out. Again, if any profit or loss is there, it has to be transferred to realization account. This is common. Clear? Aithe, sir, why this is treated specially? You already told us if a liability is settled, then it will not be transferred to realization account, and you told that profit or loss will be transferred to realization. Then what is speciality in this point? For this, you are receiving consideration from transferee company only. You are not settling. You have received the consideration from transferee company and you are settling. Understood? That is the speciality of this point. In the sense, our company's existing assets will not be affected. Ala kaakunda, if you are settling the liability, our cash, transferor's company cash is going out then to cash or bank account. If that company is giving, you have to take the consideration even given to the debenture holders. That has to be settled to the debenture holders. But remember, it will not be counted in purchase consideration. That is a point where you have to be careful. It will not be counted in purchase consideration. Pakka everybody? So this is what all about your purchase consideration and closing the books of accounts of transferor company. Now all about incorporation of the same assets and liabilities or opening the books of accounts of transferee company. Obviously, accounting standard number 14 is applicable. There are two types of amalgamation as per accounting standard number 14. Accounting in the nature of merger, accounting in the nature of purchase. As you all people know, if 5 conditions are satisfied, then it is called as merger. If any of the conditions are not satisfied, then it is called as purchase. all the assets and liabilities of old company has to become assets and liabilities of new company. And next, consideration has to be disbursed only in equity shares. Of course, for fractional shares, it can give cash. And whoever the 90% of shareholding, whatever is there, it has to become shares of the new company shareholding again. And next one, what is that, Amma? Yes, assets and liabilities has to be transferred at book value. Last but not least, they have to carry on the business that is carried on by the old company, or at least they should have the intention to carry. If all the 5 conditions are satisfied, merger. Otherwise, purchase. Surprisingly, all the problems, whatever we are having in our books is only purchase. Just okay oka problem emo merger undi. Adi kuda merger with exclusive ga ledu. In the point of merger, in the point of purchase. And all the remaining problems is totally on purchase itself. So, నేను book చేయాలనుకుంటే merger ఇస్తాడు. అన్ని క్వశ్చన్స్ వాడు బుక్ చేయాలనుకోడు. ఇన్ ద ఎంటైర్ పేపర్ హీ విల్ బి గివింగ్ 1 క్వశ్చన్ సో యాజ్ టు ఎలిమినేట్ ద చాయిస్. మన ప్రాబ్లం ఏంటంటే మనం తీసుకునే చాయిస్తో పాటు అదొక చాయిస్ వస్తుంది. సో బీ కేర్ఫుల్, స్టడీ ద క్వశ్చన్ పేపర్ ప్రాపర్లీ. దట్ ఈస్ ద రీజన్ వై ఐ విల్ టెల్ యూ డోంట్ లీవ్ ఎనీ మోడల్. నీకు ఏదైనా మోడల్ లైట్ అని అనుకున్నావు అనుకో, అట్లీస్ట్ హాఫ్ అటెంప్ట్ చేసేలాగా ప్రిపేర్ అవ్వండి. దట్స్ వాట్ మై పాయింట్. దట్ ఈస్ వాట్ ఐ హ్యావ్ డన్ పర్సనలీ వైల్ ఐ వాజ్ ఎ స్టూడెంట్. If it did not come, fine. But if it had come, at least you are supposed to write half of the question. Because you know, sometimes those are the savior things. ఎవడు బై హార్ట్ చేస్తాడు స్టేట్మెంట్ ఆఫ్ అఫైర్స్ ఫార్మాట్, ఎవడు బై హార్ట్ చేస్తాడు బ్యాలెన్స్ షీట్ బ్యాంక్ ఫార్మాట్ అనుకునే బదులు ఒక్క 15 to 20 minutes కూర్చుంటే you will get format in your hands. If all the questions are typical, or if any 2 or 3 questions are typical, then this question will become savior for you. The advantage of that, now you will not know. While going to the examination, అయ్యో I did not do this one అని అనుకుంటావు చూసావా, అప్పుడు అనమాట. ఎంతో వరకు అక్కర్లే. You will think like that even in the revision examination itself. No need to check out for the main examination. ఇంకా మెయిన్ అయితే చెప్పాల్సిన అవసరమే లేదు కదా. So please be careful. So now, sir, if it is merger, of course you have to check out with the things. Purchase consideration and net assets difference. If any is there, it has to be adjusted only against the reserves and surplus. Remember my dear children, if it is merger, all the assets and all the liabilities, every asset, every liability, including reserves and surplus, also to be transferred to the new company. Pakka everybody? Fine. Including all the assets, including all the liabilities, including all the reserves and surplus have to be carried on to the new company. So whatever is the purchase consideration and whatever is the net assets difference is there, it will be adjusted against the reserves and surplus. Sir, makanta vastundi gaani ee final step రావట్లేదు sir. Purchase consideration ki net assets ki difference reserves and surplus ki adjust చేయాలంటున్నారు కదా sir. And మళ్ళా అందరూ కూడా we are having 3 things. Number 1, first of all, it has to be adjusted against the reserves and surplus of transferor company. If it is not sufficient, against transferee company. Even if it is not sufficient, have the debit balance like P&L account. What to do with all these things, sir? Simple. First, let's write the entry. Then I will be showing practically what happens. First of all, you are purchasing a business, right? Business purchase account debtor. 2, you have to pay the consideration to liquidator. Liquidators of transferor company. Amma, I didn't get you. For this, what PC method to use? In the sense, for what you are asking the question? What is the journal entry, Amma? Business purchase account debtor to liquidator of transferor company. That is the initial thing that you have to write. I mean to tell, there you are writing one entry due for purchase consideration. Did you remember? New company or transferee company account debtor to realization account. Where that entry is being written in that book, simultaneously here this is the entry. Okay. Now, get all the assets, get all the liabilities that were being given by the transferor company. So assets account debtor to liabilities account. You have got this asset and this liability because you are purchasing the business. So to business purchase account. Clear everybody? Sir, this will be with purchase consideration. This will be at net assets value. I mean to tell literally market value or agreed values. Inka clear ga maatladte. Now to business purchase you will write, right? This will be with purchase consideration. If the net difference between assets and liabilities agreed values and purchase consideration is absolutely same. I mean to tell your agreed value of asset is 100. Your liabilities agreed value is 60. How much is the difference? 40. If your business purchase consideration is 40, then it's absolutely fine. No need to do anything. But what if the purchase consideration is 30? What if the purchase consideration is 45? What to do in this situation, sir? Listen, I'm telling you small thing. Of course, it is ఏమంటారు అది స్టాండర్డ్ పరంగా వెళ్తే అది తప్పే, ఎంట్రీ పరంగా రాస్తే అది కరెక్టే. సో ఎంట్రీ ఇస్ ఇన్కార్పొరేట్ ఆల్ ది అసెట్స్. సిన్స్ దిస్ ఇస్ మెర్జర్, agreed value is exactly equal to book value. To liabilities, of course agreed value is equal to book value. Don't write reserves and surplus. Agandi. So reserves and surplus rayaddu. And finally to business purchase, write the purchase consideration. Now check out where the balancing figure will come and put their reserves and surplus. That's it. Did you get my point? అంటే లైక్ నువ్వు ఇప్పుడు నార్మల్గా అయితే హౌ యూ హ్యావ్ టు షో ద నెట్ అసెట్స్. సే ఫర్ ఎగ్జాంపుల్ 100 minus 60 ఈజ్ ఈక్వల్ టు 40 మైనస్ పర్చేస్ కన్సిడరేషన్ సే 65. ఎక్సెస్ ఆఫ్ పర్చేస్ కన్సిడరేషన్ పేడ్ 25. First of all, this has to be adjusted against the reserves and surplus of transferor company, reserves and surplus of transferee company. If even it is not there, P&L account. ఇవే కదా నువ్వు రాయాల్సింది. ఇవన్నీ రాసేటప్పుడు యూ హ్యావ్ టు షో హౌ మచ్ రిజర్వ్స్ అండ్ సర్ప్లస్ ఆఫ్ ట్రాన్స్ఫరర్ కంపెనీ ఇస్ దేర్. సే ఫర్ ఎగ్జాంపుల్ 20, సెట్ ఇట్ ఆఫ్. ట్రాన్స్ఫరీ కంపెనీ రిజర్వ్స్ ఓన్లీ 2, సెట్ ఇట్ ఆఫ్. స్టిల్ హౌ మచ్ బ్యాలెన్స్ ఈస్ దేర్? 3. ఫర్ దాట్ యూ కెనాట్ డూ ఎనీథింగ్ అండ్ హెన్స్ డెబిట్ P&L అకౌంట్. am I correct or wrong? సో అలాంటి కన్ఫ్యూజన్స్ అన్నీ లేకుండా ఉండాలి సింప్లిఫైడ్గా అంటే పాస్ దిస్ ఎంట్రీ except reserves and surplus. Finally whatever the reserves and surplus are there, put it as a balancing figure. Over. Clear everybody? Likewise to tell you how you will be writing an entry in purchase. Assets account debtor to liabilities account to business purchase. If credit side balancing figure it is capital reserve. If debit side balancing figure it is goodwill. Something like capital loss and capital profit. Am I correct or wrong? Extend the same logic here also. But instead of writing capital reserve and goodwill, you replace the word with reserves and surplus. That's it. Sir, won't we lose mark? Of course you lose 1 mark. Of course you may lose 1.5 mark. But తప్పు రాసి ఏదో రాసే బదులు డైరెక్ట్గా రాస్తే బెటర్ కదా. ఇఫ్ యు ఆర్ కేపబుల్, ఇప్పుడు నేను ఇంకొకటి చెప్తా. ఆఫ్టర్ రైటింగ్ 2 reserves and surplus, బ్యాలెన్సింగ్ ఫిగర్ వచ్చింది కదా, డోంట్ రైట్ దేర్ బ్యాలెన్సింగ్ ఫిగర్ విత్ ఇన్ ద బ్రాకెట్స్. దట్ ఈస్ ద టెక్నిక్ యూ హ్యావ్ టు యూస్ ఫస్ట్. ఇఫ్ యూ రైట్ విత్ ఇన్ బ్రాకెట్స్ బ్యాలెన్సింగ్ ఫిగర్, అమ్మా వీడు బ్యాలెన్సింగ్ ఫిగర్ వేసాడు అనుకుని వాడికి అర్థమవుతుంది. అసలు బ్యాలెన్సింగ్ ఫిగర్ అని రాయికు, అలా రాయి. నౌ యూ అనలైజ్, యూ విల్ గెట్ ది ఆన్సర్. Likewise, now you have to check out the difference between assets and liabilities and purchase consideration. You will get one difference. Now you observe the reserves and surplus of the companies, and if you are able to manage that, write within brackets how did you get that 5 rupees. Likewise 25 minus 20 minus 2. Balance is 3. If you can write like that, write. Sir, time will be consuming more, sir. Why to go with say? Write 3, enough. Clear everybody? So this is what the major thing that you have to take. Ante sir నేను ఎందుకు ఇలా చెప్తున్నాను అంటే మెర్జర్ ఒకే ఒక ప్రాబ్లం ఉంది. ఇప్పుడు ఒక 2 or 3 ప్రాబ్లమ్స్ ఉంటే వీ కెన్ గివ్ ఎ గ్యారంటీ దట్ యూ మే గెట్ ఎ బెటర్ క్లారిటీ. బట్ ఓన్లీ వన్ ప్రాబ్లమ్ ఈస్ దేర్, కరెస్పాండింగ్ అసైన్మెంట్ హార్డ్లీ విచ్ ఈస్ ఫ్రేమ్డ్. సో వై టు హ్యావ్ టూ మచ్ స్ట్రెయిన్ టువర్డ్స్ దట్ పాయింట్? దట్ ఈస్ వాట్ మై ఇంటెన్షన్. సో యూ కెన్ జస్ట్ write the balancing figure. And if it is purchase, Of course, agreed values are different, book values are different. So assets account debtor at agreed values, 2 liabilities account at agreed values, 2 business purchase with purchase consideration, and if excess is paid, excess purchase consideration is paid, it is loss, goodwill. If at all short consideration is paid, it is profit, 2 capital reserve. దీంట్లో ప్రాబ్లం ఉండదు, ఎంట్రీ రాయడం వరకు ప్రాబ్లం ఉండదు అంటున్నా. And moving on further, at the time of disbursing the purchase consideration, at the time of disbursing the purchase consideration, what you have to do, amma? You have to give the purchase consideration. How you have decided? To whom you are going to give, sir? Liquidator. So liquidator of transfer or company to equity share అయితే equity share, preference share capital అయితే preference share, debentures అయితే debentures, cash అయితే cash, bank etc. If issued at premium to securities premium. Clear everybody? Now in some questions he will be telling everything and he will give one statement. Pass the entries for par value of the share. అంతా చెప్పేస్తాడు, అంతా బానే ఉంటుంది, ఒక్క స్టేట్మెంట్ మొత్తం కన్ఫ్యూజన్. What is that one statement? Pass the entries for par value only. His intention is all about if you are having large balance at debit side goodwill, and if you have decided to issue the shares along with premium, then this will always become a capital loss. This will always become some sort of profit. Why? Because you have issued shares at premium. In the sense, it is obviously your company is having market and hence you have given it at premium. Market on the profit. But since that company is having good market, you are assuming that company by paying more consideration, which is nothing but goodwill, capital loss. But the biggest problem, this securities premium and this goodwill can never be set off. If at all here you are having capital reserve, there would be no problem. Why? Because capital reserve is exactly opposite to goodwill. These two things can be set off. But you are not having capital reserve now. You are having securities premium. And also you are having large number. How much? I mean like large number of goodwill that is being debited. So now it's never possible to set off this goodwill and that securities premium. So here itself confine your PC only to par value so that you will not be getting this goodwill. Understood? ఒకే ఒక్క ప్రాబ్లం ఉంది, పాస్ ద ఎంట్రీస్ ఫర్ పార్ వాల్యూ. బట్ యు నో ద లక్ ఆఫ్ దట్, అందులో ఎంట్రీస్ రాయమని అడగలేదు, కంప్యూట్ పర్చేస్ కన్సిడరేషన్ అని అడిగి ఆపేశాడు. He has one question like pass the entry, I mean like they have decided to pass the entries for par value, but the question is all about compute purchase consideration. So we are very lucky, but what happens, it was given in the question, in the examination. So that is what, like pass the entries for par value, then automatically goodwill will be eliminated if you did not consider securities premium. Understood everybody? So this is another thing that you have to take care. Now almost we are at last, intercompany transactions. Likewise, how we have eliminated the same under consolidation, the same logic will be extended. Sir, creditor is having credit balance. See, like A is being incorporated by B, A is being taken over by B, and in A's books B is standing as a creditor, and in B books A limited is standing as a debtor. Now intercompany owings, those are to be eliminated, right? Ultimately these are to be eliminated. So the entry will be very very simple. So cancel creditors, creditors account debtor, 2 debtors account. Even bills also, bills payable account debtor to bills receivable account. But coming to inventory, again don't eliminate the entire transaction. You have to eliminate only unrealized profit. గుర్తుపెట్టుకోండి, whether it is consolidation or whether it is amalgamation, for unrealized profit the question is framed in such a way that stock into rate by 100 plus rate. Like strictly speaking you have to read the question and you have to take the decision. బట్ నీకు అది ఎవరికి కాస్ట్ ప్రైజో ఎవరికి సెల్లింగ్ ప్రైజో అర్థం కాని సిచ్యువేషన్ ఉంటుంది చూసావా, దెన్ మల్టిప్లైడ్ బై రేట్ బై 100 ప్లస్ రేట్. 99% కరెక్టే అవుతుంది, బట్ దాట్ రిమైనింగ్ 1% జై శ్రీకృష్ణ. సో నౌ యూ విల్ బి గెటింగ్ సమ్ అన్రియలైజ్డ్ ప్రాఫిట్, రైట్? దట్ అన్రియలైజ్డ్ ప్రాఫిట్ హ్యాస్ టు బి ఎలిమినేటెడ్. ఫ్రమ్ వేర్ ఇట్ హ్యాస్ టు బి ఎలిమినేటెడ్, సార్? ఆఫ్ కోర్స్ ఫ్రమ్ స్టాక్. Inventory is shown at higher value, right? So now that has to be eliminated. So to inventory, then debit what, sir? Of course, goodwill. If it is merger, reserves and surplus. If it is purchase, you have to use goodwill. Sir, but we are having capital reserve also. Then you can use capital reserve also. Did you get my point? If you are having capital reserve, debit capital reserve. If you are not having capital reserve, debit goodwill. If it is purchase, if it is merger, reserves and surplus. Take care, my dear children. You can also write to stock reserve. Likewise, capital reserve to stock reserve, goodwill to stock reserve. Ultimately, stock reserve will be deducted from stock itself. Ante kada. So you can also write directly inventory. There is nothing wrong in that. Okay, now ma. And almost one last thing that I have to tell you. Reserves and surplus incorporation under purchase method. Generally, no reserve is needed to be transferred. Exception. If you want the benefit, adi kuda. If you want the benefit, then statutory reserves has to be transferred. See, in one of the concept questions, if I was not wrong, he will be giving one statement that the new company had not incorporated statutory reserves. Is there any wrong in that? No. It is up to them whether to get the benefits or not. If they want the benefits, incorporate statutory reserve. If they don't want the benefits, don't incorporate statutory reserves. For this, if you were penalized, you have to pay the penalty also. Penalty is to maintain. So now what to do, sir? Statutory reserves ought to be incorporated. So the journal entry for this incorporation is something like amalgamation adjustment reserve account debtor to statutory reserves account. Statutory reserve is a reserve, and hence it has to be in note to reserves and surplus as a positive balance. Amalgamation adjustment reserve is been having a debit, and even you are using a word reserve, and hence even it will be in note to reserves and surplus, but as a separate line items it had to be deducted. You may be asking me, sir, then why to write? It is just a presentation style. But they have incorporated that obviously. But incorporation and maintenance is very much important. Up to how much period it has to be maintained, sir? As per that respective statute. Well, respective law or statutes prakaram evaithe unnayo, dani prakaram value chayali. Clear, everybody? Now, in one question, I'll be closing the session, just 2 to 3 minutes. In one of the questions, he will be giving something like, there is already existing goodwill in the company. But while incorporating, you will get a capital reserve. Kangarlo manam chesedi enti ante, this goodwill will be shown at intangible assets, that capital reserve will be shown in reserves and surplus, which is absolutely wrong. Remember, these two things are absolutely opposite and hence set off. Kachitanga cheyalsinde. Understood, everybody? Yes. And now, in some questions, he has given the purchase consideration. In some questions, he has given the purchase consideration like 2 companies will be there. 2 companies will be taken over by a new company. This new company will be giving purchase consideration to the new companies, to the old companies in one ratio. Likewise, he will be giving the profits. He will be telling in average profits ratio, in weighted average profits ratio, like that he will be telling. Remember, my dear children, till he tell weighted average, you always have to use average only. Don't bring your partnership concept here and again should not confuse. Likewise, sir, weighted average, even in our partnership, even if he did not ask weighted average and if he asked average, if at all weight is applicable, then we will be putting weights. But that sort of things were not there here. Until he is asking in the question weighted average, you have to go with only average. Say for example, 10,000 shares are to be disbursed by C Limited to A and B in respect of the profits earned, in respect of the average profits earned for the last 3 years. Now in the question, he will be giving the data of the last 3 years. Take the last 3 years data, do the average, and in proportion you have to give that. If in the question he is telling weighted average, go with weighted average itself. Clear, everybody? Nowhere he has asked with capitalization methods and super profits method. He has been asking goodwills only on average methods itself. Pakka, everybody? So this is what your hard point of your amalgamation, and my sincere request to you is read the question properly with amalgamation. అమాల్గమేషన్తో మీరు చేయాల్సిందల్లా క్వశ్చన్ ప్రాపర్గా చదివితే ఆన్సర్ వచ్చేస్తుంది. అండ్ టేక్ కేర్, ఇన్ ఓల్డ్ కంపెనీస్ యూ హ్యావ్ టు బీ కేర్ఫుల్ విత్ లెడ్జర్ అకౌంట్స్. ఇన్ న్యూ కంపెనీ యూ హ్యావ్ టు బీ కేర్ఫుల్ విత్ జర్నల్ ఎంట్రీస్. దిస్ ఈజ్ వాట్ ద స్టైల్ ఆఫ్ క్వశ్చనింగ్. అండ్ ఈ రెండిటికి లింక్ చేస్తూ ఉన్న ఒక పాయింట్ ఏంటంటే పర్చేస్ కన్సిడరేషన్. Clear everybody? Fine, that's the end of the session of your amalgamation. And in the next session, let's start with first let us complete ESOPs and buybacks. Scoring scoring topics ivi rendu kuda, because ESOPs sometimes he will be asking for 10 marks, sometimes he will be asking for 5 marks, even buyback 10, some cases 15 marks is also been asked from buyback. Asalu andro emundo telidu, 15-12 marks ke ekku adugutunnadu kuda. Buyback 5 marks question rojule poyayi. If you want, you can analyze the model wise analysis. He will be asking the major questions 12, 10, 15. So such an easy chapter, of course scoring also, but one or two peculiar points will be there in buyback also. Let's learn those things, and then let's try to complete partnership. I can't promise to the 100 extent, but to the maximum extent I will try to cover. Like at least format and cover cheyadaniki try chesta. The biggest problem in partnership is basic, advanced. Malla basic lo Garner versus Murray rule, normal dissolution, all partners insolvent, piecemeal distributions, Malla under piecemeal distributions, maximum loss method, relative capital method or higher relative capital method. And again coming to advanced, amalgamation of firms, conversion of firms, sale of a firm to a company. ఇవి అన్నీ కవర్ చేస్తే ఒక 4 to 5 hours హ్యాపీగా లేచిపోతుంది. ఇంకో ప్రాబ్లం ఏంటి తెలుసా, హౌ మచ్ ఎవర్ ఐ ట్రై టు టెల్ ఫార్మాట్స్తో పని అవ్వదు. అక్కడ మేట్ బి కంప్లీటెడ్ బేసిక్ వరకు కొంచెం ఏదో మేనేజ్ చేస్తారు, కానీ బేసిక్ నుండి అడిగే క్వశ్చన్స్ తక్కువ, అడ్వాన్స్డ్ నుంచి అడిగే క్వశ్చన్స్ ఎక్కువ. సరే పోనీ అడ్వాన్స్ నుండి లెట్స్ ట్రై టు కవర్ ఈచ్ అండ్ ఎవ్రీథింగ్ అని అనుకుంటే ఈచ్ అండ్ ఎవ్రీ క్వశ్చన్ ఈజ్ ఇన్ డిఫరెంట్ స్టైల్. Different style in the sense, explaining one adjustment is not sufficient there. Explaining the whole question is very much required. So that is the reason. See, one thing, actually one day marathon class in the sense we cannot complete the whole syllabus. Hardly 60 to 70%. But I am just keeping partnership at last, so as to make the remaining topics comfortable at least. నేను ఎంత చెప్తున్నా కదా, if we sit for partnership around for 3 hours it will take minimum. That is minimum. Explaining each and every concept and going with each and every problem, minimum 3 hours. Fasak. Then what about the remaining sessions and remaining topics? Likewise buyback, ESOPs, internal reconstruction, many things are there, right? Anyways, so I don't want to take your break time. So let's meet in the next session. First priority is like ESOPs, buyback, and last priority is all about partnership. I'll just try to explain the formats in partnership. Thereby let's close our session. Okay, thank you. Let's meet in the next session. Bye ma.
Girls alone. వద్దులే కూర్చో, చెప్పిన పని చెక్. గర్ల్స్ వెళ్ళండి 10 minutes, 15 minutes గర్ల్స్, తర్వాత మొత్తం మీకే అంతే. గర్ల్స్ వెళ్ళాలి తొందరగా, గర్ల్స్ తొందరగా వెళ్ళాలి బయటికి, క్యాంటీన్ దగ్గరికి వెళ్ళండి కింద.
So one of the doubts by one of our friends, Nida Manuri, 10% preference shares holders are to be paid at 10% premium by issue of preference shares of transferee company, and equity shares of transferor company will be issued equity shares at 5% premium. Which method? Sir, if necessary అన్న వర్డ్ ఏమన్నా క్వశ్చన్లో అడిగాడో లేదో చూడండి. నెసెసరీ నంబర్ ఆఫ్ ఈక్విటీ షేర్స్ అన్న వర్డింగ్ గనక ఏమైనా ఉంటే then you have to go with net assets method. Otherwise you have to go with payments method. If it is directly like number of shares have to be disbursed at number of shares, then you have to go with payments method. But if it is necessary number of shares or for the balance, if that kind of words are there, it will become net assets method. Anyways, so we are almost in the final session. Almost in the last and final session hai kada. Fine. So in this session we are going to cover the last 3 topics, that is like ESOPs, buyback, partnership. As I told you, partnership basic koncham cover aitadi, advanced koncham cover aitadi. You may be thinking like you can tell more. See, నేను ఎంత చెప్పినా పార్ట్నర్షిప్తో ఈచ్ అండ్ ఎవ్రీ ప్రాబ్లమ్ ఈజ్ ఆఫ్ డిఫరెంట్ స్టైల్. బట్ లెట్స్ వన్స్ ఆఫ్టర్ లర్నింగ్ ద ఫార్మాట్, లెట్స్ ఓపెన్ ద క్వశ్చన్స్ అండ్ లెట్స్ డిస్కస్ ద డిఫరెంట్ పాయింట్స్ లైక్ వైజ్ హౌ వీ హ్యావ్ డన్. Of course, we are not having such ample time for do that, but let's try to do that. And yes, so let's start with the topic ESOPs. Employees stock option plans or employee stock option scheme is nothing but ESOPs. So company will be offering shares to employees so as to attract them and retain them in our company. See, it's all quite common that shifting nowadays is quite common to the employees. Likewise, especially the ekkada untundante software. If the shift from manaki telse untundi, we might have been hearing all these things. If you shift from one company to another company, lakhs and lakhs of rupees they will offer. Something like in one company offering 50,000 with enough of 5 to 6 year experience. If he has shifted to another corporate, not only in software, wherever you go corporate, this style is there. So he is shifting to another company where he is getting 80,000 salary, shifting to another company where he is getting 1 lakh salary. Like this, if it is being happened, employee is getting benefited, but company may not get 100% benefit. Reason being, existing employee's work has to be taken over by the new employee, and the new employee has to continue the work, which is a typical part. So companies has to retain the employees and companies has to maintain the employees. So for this thing, company has to make the shareholders to feel that it is their own company. When they will feel that the company is their own company, only when they are having shareholding in that. So if they want, they can purchase the same in the market also. If they want, they can purchase the same in the market also. But in the market, if everybody are purchasing and you are also purchasing, there will be nothing great at all. To whatever price other people is available, at whatever price the share is available to the other persons, even at the same price it is available to our employees also. This is what generally happens. But then why an employee will purchase a share of the company? Logically, if you speak, or normally if you speak, if employee is having money, then employee will be using it for his purpose. Whether he will invest or not, it is up to his wish. That is obviously not needed for us. But if company is making an attractive offer to the employees, something like company is telling you work in our company for 3 years and then you will be given an option to purchase 100 shares in our company at a discounted market price. Say for example, market price is somewhere at 120, I will be offering to you just at 70 rupees. So you are having a benefit of 50 rupees for each share. Like that, 100 shares, 100 into 50, around 5,000 you are going to get the benefit, provided if you subscribe the share. Otherwise, of course, you will not get that at all. But take care, my dear children, everybody. So a company is offering shares to the employee so as to retain them, and it will be offered at a predetermined price, which should be a discounted market price, which should be a discounted market price. That is what called as your plan of ESOPs. Clear, everybody? Now, the main periods that you have to be careful here is all about vesting period and exercise period. Initially, company is having vesting period offered to the employees. Then companies will be offering to the employees with some exercise period wherein he is supposed to exercise the option. What do you mean by vesting period, sir? Sir, the vesting period is a period wherein the employees are supposed to satisfy the conditions. Vesting period is such a period where the employees are supposed to satisfy the vesting conditions. Vesting conditions might be either market based or period based or service based or even performance based. Something like, to summarize all those things, service or period based, performance or market based. Likewise, you work with us for 3 years, you will be provided with an option, or you provide a profit or you provide your excellent service to us so as to make the company to earn a profits more than 10% in every year, so that we will be giving you the options. Or your target 55,000 units of goods must be sold out in 1 year, then you will be provided with the options. Like that, it is quite possible. It might be possible either with number of years, or it might also be possible with some market based conditions or performance based condition. Target is tarvalki. If you finish off the target, then you are going to get the option. Whether to exercise that option, that is like subscribe that option or not, is up to the wish of an employee. Whereas that will be subscribed during exercise period. So literally to tell you, if you are satisfying vesting conditions during a period which is called as vesting period, and during exercise period you are having an option to exercise the option. If you exercise the option, it's fine. If you did not exercise the option, even though it's fine, but the point that you need to understand, if you exercise the option, then you will get a share at a predetermined price. But if you did not exercise the option, then that option will be lapsed. It's not like a right issue where that option can be transferred to another person. It's not possible. Why? Because we are giving an option to the employee by setting certain target. So that target has to be achieved by the employees, so it is not possible to shift his options to another person. If satisfied, proceed. If does not satisfy, lapse. Now coming to lapse of options, there are 2 kinds of options that will be lapsed. Vesting options lapsed, unvested options lapsed. What do you mean by vesting options lapsed and what do you mean by unvested options lapsed? Sir, once if vesting conditions are satisfied, then all those options are called as vested options. And if employee exercised, fine. But if employee did not exercise, it is called as vested options lapsed. Now coming to the next one, unvested options. Take care. If at all an employee had not satisfied vesting conditions itself, then it is called as unvested options, and obviously unvested will be always lapsed. Unvested options will be always lapsed. Vested options, if not exercised, then they will become lapsed. If exercised, the option will be converted into share. This is what the general intro of ESOPs. Then in ESOPs, for 5 marks question, these kind of questions are being tested a lot, where the vesting period is less than or equal to 1 year. These kind of questions are being tested a lot for 5 marks, where the vesting period is less than or equal to 1 year. Also, to all the people I am telling, ESOPs law, there are 2 methods, intrinsic value method and fair value method. But take care, now in the revised what is it called, addition of study materials, even though two methods are there, in each and every question he is not giving different intrinsic value and different fair value. Intrinsic value is exactly equal to fair value. Ochelaga he is framing the questions. I mean to tell something like, a share is been trading in the market at 120, where it is been offered to an employee at rupees 70. So now, as per our thing, intrinsic value is equal to, what is intrinsic value, amma? Market price as on the date of grant minus exercise price, that is 120 minus 70, which is 50. In the question itself, he is adding one more thing, that the fair value of the share is rupees 50. So now there is no confusion at all. In the question itself, in the revised materials, in the revised study material himself, he is directly telling that both things are absolutely same. Intrinsic value and fair value. But be very careful, okay? Because in the examination, he may need to twist you. He may twist you. Something like fair value, he may give rupees 60, but intrinsic value given in the question is rupees 50. Now, under which method the question is being tested? Adokasari chuskondi. Sir, if no method is asked, what to do, sir? Fair value method. If no method is asked, you have to go with fair value method. So be careful for such point. Now, what are the journal entries, sir? Sir, it's very, very simple. Just look here. So, you have to create a reserve for the employees. Sir, I'll just ask you a simple question. Did you remember bonus issue? Something like shares are issued at free of cost. But for that, what you are utilizing, amma? Reserves and surplus. Even now also, the face value of the share is 10 rupees. Market value of the share is 120 rupees. Exercise price of the share is 70 rupees. If you are issuing a new share in the market, you are going to get 120 rupees, where the securities premium is 110. But now you are issuing the share to an employee just for rupees 70. If you are issuing the share just for rupees 70, then who will be arranging the remaining resources of 50, amma? Did you get my point? So company has to arrange that in the form of reserve, and for this purpose it has to create a specific reserve called employee stock options outstanding account. This is a reserve. Clear, everybody? Fine. So as I told you that there are two types of methods for solving the problem. Those are intrinsic value method and fair value method. Number one, fair value will be directly given in the question. Intrinsic value, you have to compute that. How to compute intrinsic value, amma? Market price as on the date of grant minus exercise price is equal to intrinsic value multiplied by number of options granted. Multiplied by number of options granted will be giving you the total expense. The total expense that has to be amortized over the contract period. We have started with the problematic part. Hope you are getting that one. There are two methods of solving the ESOP's problem. What are the two methods, amma? Intrinsic value method and fair value method. What is given in the question, amma? Fair value. What you have to compute, amma? Intrinsic value. How you have to compute, amma? Market price as on the date of grant minus exercise price. Then you are going to get one value. If this intrinsic value or fair value is multiplied by number of shares or number of options, literally speaking, not yet shares, those are just options, then you are going to get total expense that has to be recognized, and it has to be amortized over contract period. What do you mean by contract period, sir? Literally nothing but vesting period. He will be giving in the question 2 years, 2.5 years, 3 years, like that. You have to proceed for like that. Clear, everybody? Fine. So for this, for any kind of question, I'll be telling you a simple format. Solve in that way, you will get any kind of question. Even in one question, 24,000, 12,000 will be there, where you are getting difference in that. ఒక క్వశ్చన్ లో 24,000 12,000 వస్తుంది, అందులో ఒకలా చేస్తాడు. చాయిస్ లిమిటెడ్ ఆప్షన్స్ గ్రాంటింగ్, what is it called, performance based, 10%, 9% will be there, అందులో ఒక టేబుల్ వేస్తాడు. In some other table he will draft another style. But for everything, I'm just giving you a common table. You can just follow that one for any kind of problem. Even one problem is like 2.5 years. Another problem is like 4.5 years. You can follow this style for everything. Take care. How many years you are having? Follow that many number of years first. Number of options granted. Remember, options will be granted only in year 1. Year 2 and year 3, we will not grant any options. So number of options granted will be considered. And next, you have to consider, please be careful, number of options lapsed. Say for example, 1000 options granted. In the first year, 100 options might be lapsed. So immediately next column will be number of options remained. So out of 1000, if 100 were lapsed, how many are the options remained, Amma? 900. In the second year, another 200 options might be lapsed. So now how many are the options remained, Amma? 700. Like this you have to proceed. And after that, take care, expense per option. What is expense per option, Amma? Either intrinsic value or fair value. Remember, if it is fair value, in the question he may give you for each and every year different fair values. Clear? So consider the fair values that were given in the question. And next one, very important, vesting period. Vesting period. Say for example, if the vesting period is 2.5 years, year 1, year 2, year 3, only half year you are having. If your total expense is something like 30,000 divided by 2.5 years, how much you will get? 12,000 per annum. Year 1 12,000, year 2 12,000, but year 3 since only half year is there, it will become 6,000. Or take care, in the corresponding question you will be having another style that first year 6 months. So first year you have to consider 6,000, second year 12,000, third year 12,000. So that is what your vesting period. If vesting period is same, considered everywhere 2.5 years. But if you have seen the choice limited problem, vesting period is obviously different. Why the vesting period is different in that problem, sir? Listen, he will be keeping some conditions, Amma. Conditions enti ante, say for example, year 1 options will be vested if your growth rate is 10%. Did you get my point? If you did not achieve the target of year 1, year 2 options will be lefted if year 1 plus year 2 average is 9%. Even if you did not achieve the options in year 2, in year 3 you are going to get the options vested if year 1, 2, 3 average is somewhere around 8%. Edo chudutadu vadu. Now you have to check out what is year 1 actual. Sir, first let's talk in a very normal way. You are at the beginning of year 1. Company is giving you an option and telling if you achieve 10%, you will be getting 1000 options at the end of year 1. Did you get my point? What will you think? If not in year 2, if not in year 3. Now you are in year 1. What will you think? Will you achieve the target or not? Of course, yes. So at the beginning of year 1, the vesting period is equal to exactly 1 year. Now at the ending of year 1, your actual target is only 9%. Your actual is only 9%. What is the target? What is the actual? Achieved or did not achieve? And hence at the end of year 1, now the vesting period has to be revised from 1 year to 2 years. Something like in which attempt you will complete? First attempt, sir. After getting result, second attempt. After getting result, third attempt. After getting result, inka no more attempt. You will be gone for marriage. పెళ్లి చేసేస్తారని చెప్తున్నానమ్మా. ఎవరో పెళ్ళికి వెళ్ళడం కాదు, నీ పెళ్ళికి నువ్వే వెళ్తావు. So I mean to tell all about in a very simplified thing. If there is a clear cut data like 2 years, 3 years, consider everything. If there is no clear cut data, analyze properly. Now here you are drafting a table. Am I correct or wrong? This will be considering at the end of year summa. So at the beginning of year 1, vesting period is 1 year. But you are at the end of year 1. How much is the vesting period now? 2 years. Since year 1 target is not achieved, at least in year 2 we will achieve the target ani anukuntunnam. That's what you're assuming, and then you have been gone something like with some percentage. And after that, listen very carefully everybody, even at the end of year 2 your average is, say for example, 8.5%. Achieved or did not achieve? And hence at the end of year 2 your vesting period will again revise to 3 years. If at the end of year 3 if you have achieved the target, it will become 3 years because achieved the target, so 3 years concluded. If you did not achieve the target, now there is no other conditions, all other options will be lapsed. So ika vesting period, no, options were absolutely lapsed. Okay everybody, so this is the only problem you are having for 10 marks. One time, 2 times it is tested in the examination also, choice limited problem. So take care, compute the percentages properly. If you are having clear cut data, take the vesting period, otherwise analyze it properly. At the beginning of year 1 vesting period is always first year. Come to the end of year 1, if achieved 1 year, if not achieved 2 years. Come to the ending of year 2, if achieved 2 years, if not achieved 3 years. Come to the end of year 3, if achieved 3 years, if not achieved, lapse. Okay everybody, so this is what your vesting period. And finally you have to compute cumulative expense to be recognized. How to find that cumulative expense to be recognized? So just wait, let me put everything in one thing, like year 1, year 2, year 3. So tell me Amma, number of options granted, number of options lapsed, number of options remain, expense per option, vesting period. Expense per option is either fair value or intrinsic value. So now take care, coming to the last point, that is like vesting period. After the completion of this one, cumulative expense recognized, you have to check out the cumulative expense that is recognized. How to find the cumulative expense that is recognized, sir? Number of options remaining, that is like 900 ankondi, into fair value 10 rupees ankondi, vesting period, say for example vesting period is 3 years. Now 900 options into expense per option divided by vesting period, that is like 3 years. Since cumulative he is telling, how many years completed? 1 year. So multiplied by 1 year. Come to year 2. How many options remaining? 700. And what is expense per option you are having, Amma? Say 10 rupees. What is the vesting period? 3 years. Now cumulative expense that is to be recognized for first year and second year. Strictly speaking, in first year you are having 900 expense, booked 900 options, booked expense for 900 options. But coming to second year, number of options are remaining only 700. So whatever the expense that is booked is obviously higher. So let's equalize that. How to do it, sir? 700 options multiplied by expense per option divided by 3 years multiplied by how many years completed, Amma? 2 years. So multiplied by 2 years. So literally to tell you, cumulative expense recognized will be number of options remaining multiplied by expense per option divided by vesting period multiplied by completed number of years. Okay. So you have to compute this one for year 2 and year 3. Finally, expense to be recognized. How much expense that is to be recognized, sir? Difference between year 1 and year 2 shall has to be recognized in year 2. Difference between year 2 and year 3 has to be recognized in year 3. I mean to tell, if you take this example, 900 into 10 divided by 3 years. How much, Amma? Into 1 year, 3000. Second year, 700 into 10 divided by 3 into 2. 4667. First year expense, how much is already recognized? 3000. Second year, for cumulative year 1 and year 2, how much is necessary? 4667, out of which already how much is recognized? 3000. Balance is 1667, enough of recognizing in year 2. Like that, say for example, you have got 5,000 in year 3. Or else let's say 5, 6, 6, 7 in year 3. So for 3 years, enough of having 5, 6, 6, 7. But already 4, 6, 6, 7 is recognized, and hence the balance 1,000 will be recognized in the last year. Clear, everybody? So this is what a common approach which can be considered for every problem and you can solve. But be careful with vesting period and fair value. Also, you are having one of the recent examination questions wherein he has asked with options into different groups. I mean to tell, vaad em chesadante, total options granted to employees are 60, were grouped in 3 stages. 20% say in year 1, I'm sorry, 20% say in group 1, and next another 40% in group 2, and another 40% in group 3. Anukundam. So now he is telling for group 1 vesting period is equal to 1 year. For group 2 vesting period is equal to 2 years. For group 3 vesting period is equal to 3 years. How many tables you will get now? 3 tables. For 1 year vesting period 1 table. For 2 years vesting period 1 table. For 3 years vesting period 1 table. How many options you are having? 60 into 20%, 12. 60 into 40%, 24, and 24. Clear, everybody? So to each and every employee, 12 options in group 1 are granted. If there are 1,000 employees, how many options will be granted, Amma? 12,000. Fair value of group 1 is different, fair value of group 2 is different, fair value of group 3 is different. For any kind of thing, take this format and solve the problem you are going to get. Pakka? Fine. Now, the last and final model of ESOPs frequently being tested in the examination, especially in the last questions. Vesting period less than or equal to 1 year. Sir, normally what are the entries we are supposed to write? Okkasari entries chuddam. Employees compensation expense account debtor to employee stock options outstanding account. Already you have got here expense to be recognized in the first year, right? 3,000, 1,667 and 1,000. So for all the 3 years you have to write the entry something like employees compensation expense account debtor to employee stock options outstanding account. This is expense. So it has to be closed and transferred to P&L account debtor to employees compensation expense. This is ESOS, which is a reserve and surplus. So it will not be closed. It has to be continued to be shown in note to reserves and surplus. But say for example, vesting period is obviously completed. What is completed? Vesting period is completed. Now time had come for exercising the options. So bank account debtor, you are getting some amount. So number of options exercised multiplied by exercise price. Clear? To equity share capital. Say for example, in our example we have told something like market value is 120, exercise price is 70, right? How much a person is giving to me? 70. How much is arranged by the company? 50. Over how many years it has arranged? Vesting period. So you have to debit which account, Amma? ESOS account. Employee stock options outstanding account. Why? Because you have already created a reserve as ESOS and now you have to utilize ESOS. Finally to equity share capital, face value 10 and to securities premium 110. These are the entries. For each and every year you will be writing these 2 entries and in the last year you are supposed to write this entry. Say for example, 1,000 options are there. Only 700 options were exercised. How many options were lapsed? 300. For the lapse of these options, you have to write an entry. Specific reserve, general reserve, ESOS anadi. Specific reserve. Now how many options were already lapsed? 300. So that is not needed for us. So transfer it to general reserve. What is the journal entry? ESOS account debtor to general reserve account. Pakka, everybody? Fine. These are vested options lapsed. Sir, for unvested options lapsed, what is the journal entry? ESOS account debtor to general reserve, but no need to write entry. Sir, why you no need to write the entry, sir? Look at this table. First year, for how many options you have recognized? Second year? So strictly speaking, you have to recognize an expense of 3,000 in year 1, 3,000 in year 2 and 3,000 in year 3, and for unvested options labs you have to reverse. కానీ మనం ఇప్పుడు ఏం చేసామండి, ఇన్ ఇయర్ 2 ఐఎమ్ నాట్ రికగ్నైజింగ్ 3,000 ఎక్స్పెన్స్, బ్యాలెన్స్ 1667 ఈస్ జస్ట్ రికగ్నైజ్డ్. డిడ్ యు గెట్ మై లాజిక్? ఫస్ట్ ఇయర్లో 3,000 చేస్తున్నావు అంటే నార్మల్గా సెకండ్ ఇయర్లో కూడా ఎంత చేయాలి, 3,000. కానీ సెకండ్ ఇయర్లో విత్ హౌ మచ్ ఆప్షన్స్ యూ హ్యావ్ స్టార్టెడ్ ద కాంప్యూటేషన్, 700 ఆప్షన్స్. సో దేర్ వాట్ ఎవర్ ద ఆప్షన్స్ 200 దట్ వర్ ల్యాబ్స్, ఐ హ్యావ్ డిలీటెడ్ దోస్ ఆప్షన్స్ and I did not consider those for computation at all. So no need to write an entry for unvested options lapsed in your examination. Theory lo untadi but a problem lo kuda avasaram ledu. Clear everybody? For unvested options lapsed no need to write any journal entry, but for vested options lapsed at the end you have to write an entry like ESOS account debtor to general reserve account. Clear everybody? Fine. So this is all over. Now as I told you, again I am telling less than or equal to 1 year vesting period. How to write the entries at this situation, sir? Sir, ESOS, employee stock options outstanding. It's a reserve. Am I correct or wrong? Reserve is created for future. But what is the vesting period? Less than or equal to 1 year. Where is the future? So there is no need to write ESOS account at all. Asli ESOS account anakkarla. మరి ఏం చేయాలి సార్? Likewise, say for example you are having one more question. Options granted were 20,000 but exercised were 16,000. Strictly speaking, you have to recognize expense for how many options? 20,000 and 4,000 options you have to cancel the options. Am I correct or wrong? But in year 1 itself we know that 4,000 were lapsed. So why to write the entry for 20,000 and cancel 4,000? You can directly write an entry just for 16,000. Clear everybody? So bank account debtor for 16,000 options into exercise price. Will we write ESOS account? No, ESOS is a reserve. Don't write that one. Then what to write, sir? Employees compensation expense to equity share capital to securities premium. And finally equity employee compensation expense will be transferred to P&L account. Clear everybody? These will be passed at the end of the year. Take care. These questions less than or equal to 1 year questions ఏవైతే ఉన్నాయో అవన్నీ కూడా ఎగ్జామ్లో ఫ్రీక్వెంట్గా టెస్ట్ చేస్తున్నాడు. Especially the question which is having the word post vesting restrictions. There is a question with post vesting restrictions. Name ante question lo extra information ivvadam annattu, nothing great. Just by looking over to that, no need to deter at all. Look at this question. Due to post vesting restrictions, fair value of the share is being estimated at 67. So since nothing is mentioned, you have to always consider which method amma? Fair value method. What is the fair value of the shares given amma? 67. And also market price as on the date of grant is 72 and exercise price is 60. Don't be in a wrong notion like 72 minus 60. No, that's not correct. What is correct, sir? 67 minus 67 is the corrected thing. Clear, amma? But now in the recent study material, even this confusion is also not there. As I told you, fair value is exactly equal to intrinsic value. So there is no even such confusion also. But take care, these kind of questions were frequently being tested in the examination. Ekkuva sarlu adigadu. Okay? So please be careful, and that is nothing but ESOPs. And all the remaining are same. Yes, I told you something like choice limited sum, right? Like difference of targets will be given and vesting period will change. That is what here, unlimited sum. Assignment 6 lo choice ichi untaru, nothing great at all in that. So targets and actuals. Targets chudandi, year 1 ending 16%, but year 1 ending 15%, not achieved. Year 2, average of 2 years should be 13%. Let's check out what is year 1 plus 2 average. 15 plus 10 by 2. But not achieved. Target is 13. And finally at the end of year 3, 10% is the target given. 15 plus 10 plus 6 by 3. 10.33. And hence the target is achieved at the end of third year. Sir, so we will be writing the table for the end of years, right? End of year 1 vesting period 2 years. End of year 2 vesting period 3 years. End of year 3 vesting period. Since target is achieved, again 3 years itself. If target is not achieved, lapsed. Yeah, this one I told you. Recent examination question annam kada. So if you observe, yeah, there is one more thing. Expected forfeiture per year. How many of the employees will be leaving the organization? Until, or how many options will be lapsed? నేను ఇచ్చిన ఎగ్జాంపుల్లో 100 అని చెప్పాం. This time he is giving in percentage. Sir, how much is expected forfeiture per year? 3%. What are the total options granted, amma? 600. How many employers, amma? 1000 employees. 1000 employees lo per every year, how many employees will go, amma? 3%. So in year 1, 1000 minus 3%, minus 3%, minus 3%. Hope you have understood what I have done. 1000 employees I am having. First year, how many employees will leave? 3%. Second year, how many will leave? 3%. So 1000 minus 3%, balance is 970. Out of 970, in the next year, again 3% will leave. Did you get my point? So how much ever it comes. So minus 3 minus 3%. Entama? 940 point em leda. 913. Take 912.6 itself. That is also very important. That is the reason why I am telling. If it is given in percentage, you may be asking me, sir, how is it possible to have 912.6 employees in our business concern? Undaru 0.6 add ostadi. It's not possible. వాడే ఇందులో సగం బయట సగం ఉండలేడు కదా. So that's technically not possible. Logically also not possible. But theoretically everything is possible. So take 912.6 employees itself for all the 3 years and start computing. And one more thing, don't confuse with this expected life, okay? What is the vesting period given? What is the exercise period given? So total ESOPs period is 6 years, but company is expecting that whoever employees wants to exercise, they will be exercising just in 2 years itself. I have provided a period of 3 years, but employees will exercise the option just in 2 years. So ultimately, my expected life is 5 years. This is no way connected to our problem. But 5 years is no way connected to our problem at all. And remaining things are common. If you look here, graded schedule. So year 1 25%, year 2 25%, year 3 50%. In the sense total 600 options to each an employee. So out of which, look here, 1000 employees, 600 options to each employee. Out of 600, 25% is in year 1, 25% is in year 2, 50% is in year 3. So whatever the computation that comes, you just go with that computation. Clear everybody? So that is what your graded schedule is all about. So be careful, just do it if you are having enough time. Okay? That is the end of ESOPs. Just check out. If you have any doubts, you can please ask. And then we are going to start with the chapter of buyback. In the next chapter, buyback. So nothing great in buyback at all. Just, I guess hardly within 20 minutes or 15 minutes we can complete this chapter. but it is being tested in the examination for 10 marks, 12 marks, 15 marks. So please be careful. Coming to buyback, the thing that you have to be careful is with how many number of shares are being bought back. Number of shares ఎన్ని కొంటాము అన్నది జాగ్రత్తగా చూసుకోవాలి. Listen, you are having limits of buyback. So something like 3 tests you are having. Test 1, shares outstanding test. What is shares outstanding test amma? 25% of outstanding shares, total outstanding shares. Here you have to consider only equity. Remember this one. And next one, test 2, resource test. Sir, under resource test, first you are going to get maximum resources that can be utilized for the purpose of buyback. What are the maximum resources that we can utilize for buyback, amma? 25% of paid up share capital plus free reserves. Remember here, paid up share capital includes both equity share capital, preference share capital. Here free reserves not only just includes free reserves, also includes securities premium for the purpose of buyback. Be careful. Securities premium has to be included. Here share capital in the sense both equity and preference, but here outstanding equity shares will be considered in test 1. Now after that, maximum rupees had come. Now maximum number of shares that can be bought back. Maximum number of shares that can be bought back is equal to maximum funds that we have divided by buyback price. Then you are going to get maximum number. And next is all about test 3. Test 3 is debt is to equity test, which is nothing but 2:1. Literally to tell you, equity should be half of the debt. You have to maintain minimum equity, and that equity to be maintained is half of the debt after buyback. If it is before buyback, we can tell, but after buyback, how can we tell? Reason. Now, for the purpose of debt is to equity ratio, debt includes all the debts, including current liabilities and non-current liabilities also. Current liabilities includes creditors. Creditors is also debt for the purpose of test 3. Outstanding expense, it is also debt for the purpose of test 3. Remember, outstanding expense kuda debt namma. Next, equity. For this purpose, equity, whatever you are having in test 2, the same. Resource, that is nothing but paid up equity share capital plus paid up preference share capital plus free reserves, including securities premium. Clear, everybody? After doing all these things, we are going to get something like debt and equity, and your equity should be maintained at half of the debt. Equity is equal to half of the debt, and it has to be maintained after buyback, amma. Before buyback, everybody will be knowing, but after buyback, in the sense, how can we tell? Because out of some reserves and surplus, you have to maintain CRR also. Am I correct or wrong? So this is a bit tricky, and hence for this we are having equations, simultaneous equation method. But no need to consider 2 variables for simultaneous equation method. Also we are having shortcut method. Just by considering 1 variable, you can also follow that method also. But before that, let me tell you one thing. If a company's equity share capital has to be bought back by the company, if a company has decided to buy back an equity share, company's equity share capital is getting decreased, for which, take care my dear children, for which a company is supposed to maintain its capital requirement, or a company is supposed to fill the capital gap. I mean to tell, redemption of preference shares lo kuda cheptu untaru kada meeku, how much ever share capital is being redeemed, that much ever share capital first of all has to be raised. In the same way here also, for buying back the equity share capital, you have to be careful with step number 1, matching capital requirement. How to match the capital requirement, sir? It can be matched either through fresh issue of shares or by way of creating CRR. Fresh issue can be only other kind of shares. What are the shares that are being bought back now? Equity. So what includes in fresh issue, amma? Only preference. Other redemption of preference shares, you will get two things, both equity and preference. But here it is not like that. Here it includes only one thing. What is that thing, amma? Preference share capital. Pakka everybody. And moving on to the next thing, CRR. That is like capital redemption reserve. So capital redemption reserve can be created from free reserves, and also if free reserves are insufficient, you can use securities premium, but that should be the last option. Clear everybody? So under buyback, first of all, before buying back, a company has to match its capital requirement. It can be matched either through fresh issue or CRR. Fresh issue includes only same kind, other kind. In the sense equity is buying back, in the sense it has to issue preference share capital. And coming to CRR, it can be created either from free reserves or sometimes securities premium also. Pakka everybody? Matching capital requirement is over. Now moving on to the next thing. Start buyback. But to buy back, first of all, you need cash. Am I correct or wrong? So check out whether you are having existing cash in the business or not. If you are having existing cash, absolutely no problem. But if you are not having existing cash in the business concern, listen carefully, you have to sell some assets. That will be given in the question. Or he also will be giving something like issue some preference share capital in order to pull up cash, issue some debentures in order to pull up cash, or sell some assets or investments for pulling up the cash. The question law is to arrange cash resources. You have to write the entries for that thing also. And finally, buyback. Due entry, payment entry. How many shares are to be buyback? Number one, if it is directly given in the question, like how many shares that are to be bought back. It is directly, if it is directly given in the question, like how many shares are to be bought back, don't check whether it is correct or wrong. Follow the answer directly. He is telling, purchase 25,000, company has decided to buy back 25,000 equity shares. Don't check whether it is correct or wrong with tests. You straight away do the answer. But in another question given, company has decided to buy back 25,000 equity shares, but you being an accountant, check whether is it within the provisions of Companies Act 2013 or not, section 68 or not. This will be highlighted in the question. In such a situation, then you are supposed to check with all the three tests whether it is within the limits or not. Now moving on to the next thing. In the question, he will not give the number at all, but he will be telling directly, compute the maximum number of shares that could be bought back. Direct question lo maximum shares ninne compute cheyamani cheptadu, then you have to compute the same. Pakka everybody? Fine. So that is what your buyback, due entries and payment entries. So now I mean to tell, not entry, that is what, how many number of shares that are to be bought back. So for due entries and payment entries, sir, all these things are absolutely very easy. Fresh issue, what is the entry? Cash or bank account that are to preference share capital to securities premium, that is okay. Next, for creation of CRR, free reserves or securities premium account that are to CRR account, okay. Sell the investments, cash or bank account that are to investment account, profit or loss will be transferred to P&L account. Issue preference share capital, we know. Issue debentures, we know. Cash or bank to debentures to securities premium. All those things are common. Concentrate here. Buyback due entries, buyback payment entries. Due entry. To whom you have to pay? Equity shareholder. What is being cancelled? Equity share capital. So equity share capital account debtor to equity shareholders, or you can also write equity share buyback account. Say for example, face value is 10 rupees, but you have decided to pay 25 per share. So 15 rupees is premium on buyback. And next one, payment entry. What is a payment entry? Equity shareholders or equity share buyback account debtor to cash or bank account 25. Payment is also over. Now only this is the account that should be closed. Remember section 133 alanti concept emi ikkada ledu. Securities premium as per section 52 of Companies Act 2013. It can utilize securities premium for the 5 purposes: writing off of preliminary expenses, for buyback of securities, for issue of fully paid up bonus shares, for writing off of share issue expenses, and for redemption of preference shares and redemption of debentures. Therein, for writing off of premium on redemption of preference shares and premium on redemption of debentures, for writing off of preliminary expenses, section 133 will come. But here such kind of thing is not there. So you can happily utilize securities premium. So the journal entry will be securities premium account debtor to premium on buyback account. ఏ బైబ్యాక్ ప్రాబ్లమ్స్ అయినా ఈ 4 స్టెప్స్తో ఆర్ ఈ 4 స్టేజెస్తో అయిపోతుంది. సో ఫస్ట్ వన్, ఐ డోంట్ మీన్ దట్ అగైన్ సేమ్ కన్సాలిడేషన్కి 1 2 3 4 5 6 7 8 ఐ టోల్డ్ యూ సో యాజ్ టు మేక్ యూ టు నో విత్ దట్ థింగ్. ఎగ్జామ్లో అలాగే రాస్తాం. బట్ కమింగ్ టు అమాల్గమేషన్ ఐ టోల్డ్ యూ స్టెప్స్. But my meaning is not to reproduce it in steps, but to check out whether you have covered with each and everything or not. Even here also the same thing. I tell you 4 steps. Don't write in the examination in the form of steps, but recollect those steps whether you have completed with all the aspects or not. First one, you have to match the capital requirement either through fresh issue or CRR. Or the second one, arrange cash resources if any are there, like sale of investments, issue of shares or issue of debentures. And moving on to the third one, buyback, due entry and payment entry. Buyback, due entry and buyback, payment entry. And moving on to the next thing, part number 4, close premium on buyback account. Premium on buyback account can be closed along with securities premium also. First one is like match capital requirement, fresh issue and CRR. Second one is like arrange cash resources either through sale of investments or issue of shares or issue of debentures. Okay, fine. So just in 4 steps you can complete this buyback. Only last and final thing, test number 3. I had just conveyed you before buyback, after buyback, simultaneous equation method and shortcut method. 2 variables, 1 variable. Let's learn 1 variable method. You can do like that in the examination. Something like simultaneous equation method in the sense, so debt is to equity, right? So how many number of shares that are to be bought back? So as to maintain equity is equal to half of debt. అలా మెయింటైన్ చేసేలాగా నువ్వు పర్చేస్ చేయాలి. సో ఫర్ దిస్ థింగ్, సే ఫర్ ఎగ్జాంపుల్ ఎగ్జిస్టింగ్ డెట్ ఈస్ 1000 lakhs. సో హౌ మచ్ ఈక్విటీ యూ హ్యావ్ టు మెయింటైన్ అమ్మా? హాఫ్ ఆఫ్ డెట్, దట్ ఈస్ 1000 lakhs, విచ్ కమ్స్ టు 500 lakhs. నౌ very very important, check out how much is the present equity. How much is the present equity? In the sense, equity share capital plus preference share capital plus free reserves plus securities premium. All the 4 things will be included. Check out, say for example, present equity is 750 lakhs. So how much you can utilize amma? 250 lakhs. Am I correct or wrong? So reason, you have to maintain 500 lakhs after buyback. Present equity is 750 lakhs and you have to maintain, you can utilize 250 lakhs after buyback. Hey, listen my statement very carefully. You can utilize 250 lakhs after buyback. Then before buyback, how many shares I can purchase, sir? Very very simple. Funds that can be utilized divided by, did you remember rate by 100 plus rate for liquidators remuneration we have done? Itself is serving for 2 purposes. Rate by 100 plus rate. Even here also 250 lakhs is serving for 2 purposes. Number 1, you have to create CRR out of this. Number 2, even you have to check out the buyback price also. Likewise, how many number of shares will be purchased? Annadi kuda check cheyali kadandi. So it will be something for buyback price. So funds available as per test number 3 divided by, for CRR you have to transfer which value amma? Face value or nominal value. So divided by face value plus buyback price. Coming to buyback price, how much ever given in the question, you have to consider that one. Clear everybody? Funds available as per test number 3 divided by face value plus buyback price. Because this 250 lakhs is serving for two purposes. Number 1 is for CRR. For CRR you have to transfer face value. Number 2 is for the purpose of buyback. For buyback you have to use buyback price. Clear, Amma? So this is what? Single variable method. No sir, I strictly want equations itself. That is obviously time waste, but I'll just tell you. Check out. How much are the funds that you can utilize? First of all, like present equity 750 lakhs minus minimum equity you have to maintain 250 lakhs minus some portion has to be transferred to CRR. Am I correct or wrong? After transferring some portion to CRR, you will get the maximum funds that can be utilized for the purpose of buyback. Did you get what am I telling? Something like, check out, present equity minus minimum equity to be maintained minus CRR. You know present equity 750 lakhs, minimum equity 500 lakhs. You don't know CRR, let it be X is equal to, you will get maximum funds that can be utilized for the purpose of buyback, which will become Y. Clear everybody? Now Y is equal to maximum number of shares or maximum funds that can be utilized for the buyback is all about, check out how much is the total CRR that you are having. Am I correct or wrong? So total CRR, how much you have to transfer? Divided by face value multiplied by buyback price. Total CRR available divided by face value multiplied by buyback price will be giving you the total funds that are being available. So I strictly recommend to happily go with the normal method, that is like check out once. Number 1, you have to consider existing debt minus, afterwards you have to do with minimum equity that is to be maintained. How much is the minimum equity you have to maintain? Half of debt. And after that you have to check with present equity. Minimum equity, that's present equity 750 lakhs and ultimately you are going to get 250 lakhs. This can be utilized after buyback. So 250 lakhs divided by, serving for two purposes. What is purpose number 1? CRR, for which you have to go with face value plus buyback kuda deentlone, for which you have to utilize buyback price. That's it. Clear everybody? That's the end of buyback. But you're having some technical things where I have to tell that. And yes, one more thing, differential equity rights, which is variedly testing in the examination for 5 marks now. Buyback నుండి అడిగితే ఒక 10 marks ఇది అయితే 5 marks is with differential equity shares, differential equity rights. So listen, a preference share cannot be issued with differential voting rights. I mean to tell DVRs, differential voting rights or differential dividend rights. మనకి అప్లికబుల్ డిఫరెన్షియల్ రైట్స్ అంటారు. స్పెషల్లీ డిఫరెన్షియల్ ఓటింగ్ రైట్స్ మీదనే ఎక్కువ కాన్సన్ట్రేషన్ ఉంటుంది. It's not possible to issue a preference share with differential voting rights. Of course, whereas an equity share can be issued with differential voting rights. Generally, 1 share, 1 vote. Differential voting right in the sense 1 share, 2 votes avvachu, 2 shares, 1 vote avvachu. The rights of differencing, the rights of differentiation might be either increasing rights or decreasing the rights. It may either dilute the rights or it may either increase the rights. So now, remember. Sir, generally do the preference shareholders have the voting rights? No, preference shareholders will not be having voting rights. But remember my dear children, they will be getting the voting rights. They will be getting the voting rights when their rights are affected. What are the rights that will be affecting, sir? Dividend payments okati. Next is all about repayment of capital okati. Repayment of capital, when generally to preference shareholders we will be repaying at the time of liquidation or winding up. We are having one style of question where at the time of liquidation both equity will be there, preference will be there. How much is the ratio of voting to both equity and preference. That is what given in the question. He will be giving the total paid up capital, and total paid up capital share has to be divided between preference and equity. Equity lo A, B, C, D antaru, preference lo X, Y, Z antaru. What is the ratio for each and every person? If A, B, C, D is having 20%, 20%, 40%, 40% in equity shares. If X, Y, Z is having 30%, 30% and 40% share in preference share. Clear everybody? I mean, question చూస్తే మీకు ఇంకా క్లారిటీగా ఐడియా వస్తుంది, but this is what the style of questioning is all about. I'll be showing it. First point that you need to be very careful is with the word. Look here with the word. Buyback is 25% of the paid up capital. ఇలా క్వశ్చన్ లో ఇస్తాడు. Now, this is what the total capital you are having, right? Tell me how many number of shares you have to buy back. 25% of 60 lakhs or 25% of 50 lakhs? 25% of 50 lakhs. Please don't confuse. Here paid up capital. Always in the question, if he express anything is paid up capital, it is not on the total capital, just on the equity capital. Be careful with this point. Generally 25% of capital ante paid up ante we'll think that all the things, but take care, it is only equity. That is what the first point you have to be careful. Next. One more point like this you are having. See here, simultaneous equation method. Present equity minus face value that is to be transferred to CRR minus minimum equity to be maintained is maximum permissible buyback. And ultimately maximum permissible buyback divided by offer price multiplied by nominal value. That's what the second equation. I mean to tell 1000 lakhs minus CRR minus minimum equity to be maintained. Okay, 750 అనుకున్నామా? అదే కదా మనం అనుకున్నది. Present equity is 750 lakhs. Minimum equity to be maintained is 500 lakhs minus some amount should be transferred to CRR is equal to the total maximum permissible buyback of equity. That we don't know. So let it call be Y and let it call be X. And equation number 2, maximum buyback enta chudandi. I mean like, so face value that is to be transferred to CRR, X is equal to, how much is to be transferred to CRR? Sir, I have told you in a reverse case. Like maximum buyback తీసుకుంటూ నేను మీకు చెప్పాను, అందుకే CRR divided by face value multiplied by buyback price వచ్చింది. Here he is giving with maximum buyback. Did you get my point? So maximum buyback that is like Y. ఇప్పుడు CRR అంటే like X is equal to, CRR is equal to total funds that we can utilize, అంతే కదా, divided by buyback price, then you are going to get number of shares multiplied by face value or nominal value. I have given ఇందాక మీకు ఇచ్చింది something like reverse working. Maximum funds తీసుకుని చెప్పా. Maximum funds is equal to CRR divided by face value multiplied by buyback price. I have told that equation, and in the books this equation is there. Another teacher will be telling a different style of equation. It is just something like playing with X and Y, nothing great than that. So my sincere request, just you forget this thing and you can simply solve. ఇప్పుడు ఇక్కడ చూడండి, how much is the funds that are available amma? Minimum ratio to be maintained is 600 lakhs and present fund is 750 lakhs. So how much is maximum available for us? 150 lakhs divided by both buyback price plus face value. Face value given in the question is 10 rupees. Buyback price is 30 anta. So totally it comes to 40. 150 divided by 40. That is what 3.75. No need to take too much of pain. Did you get my point? Difference 150 divided by face value 10 plus buyback price is all about 30. So 150 divided by 10 plus 30. Where you will get a direct answer. 3.75. Completed. Take care. Test 1, test 2, test 3. All the three tests should satisfy. In the sense, whichever is lower. Since all the three tests should satisfy, you have to consider whichever is lower. And one more thing I am finding out, koncham confusion untadi. Yes. Here. Look here. Sir, if the paid up capital of the company is 80 lakhs and preference share capital is 40 lakhs, don't think that total paid up capital is 80 lakhs, out of which preference is 40 and equity is 40. That is not the style of the questioning. For coming to buyback, for the chapter of buyback, in the question, if he means paid up capital, it is paid up equity capital only. Take care. Even in question number 1, I have shown the same. Even here also I am showing you the same. Paid up capital implies paid up ఈక్విటీ క్యాపిటల్. సార్ ఇవన్నీ నేను చేశాను సార్, నాకు గుర్తుంటాయి, ఇప్పుడు గుర్తుంటాయి. ఎగ్జామ్లో పేడప్ క్యాపిటల్ అప్పుడే స్ట్రైక్ అవుతుంది నీకు కన్ఫ్యూజన్. సో టేక్ కేర్, ఇట్స్ నాట్ లైక్ పేడప్ టోటల్ క్యాపిటల్, ఇట్స్ జస్ట్ పేడప్ ఈక్విటీ క్యాపిటల్. సో దిస్ ఈజ్ అనదర్ థింగ్ దట్ ఐ వుడ్ లైక్ టు టెల్ యూ. అండ్ ఫైనలీ దట్ ఈస్ ద ఎండ్ ఆఫ్ యువర్ buyback. And let's move on to the final chapter, partnership. నేను వాటర్ తాగుతా. Is revenue reserve taken in resource test? Of course will be taken amma. Resource test lo revenue reserve kuda తీసుకుంటారు. Free reserve, revenue reserve is nothing but a kind of free reserve, so it will be taken for sure amma. Okay, so shall I proceed further for the last topic, partnership. So again coming to partnership, you are having two things, basic and advanced. Coming to basic, I guess you can solve many questions of basics, but I'm having a clear-cut format with basics wherein I can go for advanced by basing on this. Once again, I'm telling, it's highly time constrained for partnership. So, ఇప్పటి వరకు చెప్పిన అన్ని టాపిక్స్ అంతా డీటెయిల్డ్ ఎక్స్ప్లెనేషన్ ఎక్స్పెక్ట్ చేయడమే కష్టం, బట్ టు ద ఎక్స్టెంట్ హౌ మచ్ ఐ కెన్ సర్వ్, ఐ విల్ సర్వ్ టు దట్ మచ్ ఎక్స్టెంట్. So, straight away coming to basics itself, I will not concentrate on all the steps or all the formats. Where do students confuse? I will just concentrate directly hitting those areas itself. Number 1, you will be knowing that generally if it is your balance sheet, again same what we have done for amalgamation. I told you I'll bring the format, right? Share capital, but here partners capital, reserves and surplus, outside liabilities, fixed assets, current assets, miscellaneous assets. The difference between amalgamation realization account and partnership realization account is that in amalgamation realization account, you are having purchase consideration that is being received from the new company. But here we are dissoluting directly. So there is no consideration of purchase at all. Mari em untundi sir? Sale of assets and settlement of liabilities. Sale of assets and settlement of, అక్కడ మనం ఏం చెప్పుకున్నాం, transfer all the assets and liabilities to realization account which are taken over by the new company, which are not taken over, sale of asset and settlement of liabilities. అదే లాజిక్ అప్లై చేసిన, no asset is taken over by anyone, no liability is also taken over by anyone, and hence directly you can do sale of assets and settlement of liabilities. Pakka everybody? Fine. So please take care. Here your realization account will be realization to assets and it is something like by liabilities. Remember, sale of asset. What is the entry you have to write? Cash or bank account debtor normally to asset, But now your asset is in which account, amma? Realization account. So it will be something like credit side by cash or bank account. It will be something like debit side to cash or bank account. Sale of assets and settlement of liabilities. Pakka everybody? This is the first difference with the realization account of amalgamation and partnership. Remaining all same. You are having realization expenses to cash or bank account. All those things are same. Now another thing. Sir, some assets will not be sold. Some assets will not be settled. Then what we will do, sir? That asset will be taken over by a partner. That liability will be taken over by a partner. Remember, two assets, book value, by liabilities, book value. To cash or bank and by cash or bank, sale of assets and settlement of liabilities is with sale value or realizable value, settlement value. If an asset is taken over by the partner, already you have transferred every asset to realization. Am I correct or wrong? Every asset already transferred to realization. So now what is another entry you will get if that partner is taking? Partner's capital account debtor to realization. Normally two asset travel, but there is no asset, only realization. So by partner's capital account, again same at agreed value. To partner's capital account for assuming a liability, here for takeover an asset. Clear everybody? This is what the first point. And moving on to the next one. Sir, I got everything. Likewise, assets and liabilities అన్ని ఇక్కడ వేయాలని చెప్పారు. So what about partners capital account, reserves and surplus and miscellaneous assets? Into whose account you have to book all these three things? Partners capital account. Biggest problem. Sir, partners current account కూడా ఉంది. ఏం చేయమంటారు సార్ మరి? Whatever the balance you are having in current account, transfer it to capital account and directly do all the adjustments in capital account. చేసేయచ్చు, ఎలాంటి ప్రాబ్లం లేదు. Do all the adjustments in current account, then final balance bring it to capital account. That's of your wish. Sorry, ఇది కూడా అయిపోయింది. Moving on to the next thing. Please be careful and look here. Now, every reserve has to be transferred to partner's capital account. కానీ మనకు ఒక చోట కనిపిస్తుంది జాయింట్ లైఫ్ పాలసీ రిజర్వ్. Then why it is not transferred to partner's capital account, sir? అవి మనకి రీజన్స్ తెలియకపోతే బట్టి పెడితే పని అయిపోతుంది, అంతే కదా? Fine, but the point here is that not only JLPR, any reserve which is being created for an external item has to be transferred to realization account only. అది జాయింట్ లైఫ్ పాలసీ రిజర్వే కాదు. If it is employees provident fund, if it is gratuity fund, all those things are belonging to employees. Workman compensation fund, even it is also belonging to employees. So it has to be transferred to realization account. Clear everybody? Thereby joint life policy reserve has to be transferred to realization account or partners capital account. Realization account. Clear with the first point? And moving on to the next thing. Sir, unrecorded asset sold. Unrecorded asset sold. What is the entry for unrecorded asset sold? Bank account debtor to realization account. As I already told you, if you don't know where to book it, realization account. If you don't know where to book it for reconstruction account. Because see, that asset was not recorded, right? That asset was not recorded in the books of accounts. See, if the asset was not recorded in books of accounts, then there will be no closing is required with that asset. Something like realization account debtor to asset account we have written for the recorded asset, but now that asset was not at all recorded, so no need to check it out. No need to check it out. No need to close unrecorded asset. But while selling unrecorded asset, you are getting cash. Total is profit for you. Credit realization. Unrecorded liability settled. What is the entry? Realization account debtor to bank account. Why? Total is like loss since it is unrecorded, but you are paying, and hence it will be automatically becoming loss. Ante kada? And hence debit it with realization account. So that is what another thing. Now listen very carefully. Next, another special item. Sir, recorded asset given over to a recorded liability. I mean to tell, asset is given away for a settlement of liability. Asset is given away for settlement of liability. What is the entry you have to write, sir? No entry. Because asset is given for settlement of liability. Already asset is closed and transferred to realization account. Already liability is closed and transferred to realization account. If you want to write the account, realization account debtor to realization account. Because asset is in realization account, liability is also in realization account. There is no entry for that. Fine. Now I have another point. If unrecorded asset is given for unrecorded liability, now what to do? Again no entry. Because for unrecorded asset we are using the word realization. For recorded liabilities or unrecorded liabilities we are using the word realization at the time of sale or settlement. So things recorded asset or unrecorded asset given away for recorded liabilities or unrecorded liabilities. 4 items: recorded asset, recorded liability, recorded asset, unrecorded liability, unrecorded asset, recorded liability, unrecorded asset, unrecorded liability. For any of the 4 things there will be no journal entry. No need to write realization account debtor to realization account. Clear? Fine. Another point where students generally face the problem. Partners loan account. One time it will be transferred to partners capital account. Another time it will be transferred to realization account. When and why? If it is balance sheet, you are having partners capital account at asset side, and you are having partners capital account at liability side. Sir, you are having partners capital account at asset side. I'm sorry, not partners capital. I have to tell it like loan, right? So let me modify that properly. Balance sheet, partners loan, asset side, partners loan, liability side, also partners capital. Partners capital is also there. Now think with common sense. Partners capital. So this is being dissolution. Am I correct or wrong? In the sense you have to sell the assets, you have to settle the liabilities, and balance has to be given to the partners. So ఇప్పుడు నా పాయింట్ ఏంటంటే partners capital who has to give to whom? Firm has to pay to partner, right? And now partners loan who has to pay to whom? Partner has to pay to firm. Set off is possible or not possible? And hence transfer this to partners capital account. Set off ki setting off ki possibility undi kabatti I have to give you 10,000, you have to give me 1,000. I have to give you 10,000. That was already there in partners capital account. You have to give me 10,000. I have to give you 1,000. Set off 9,000 is enough now. So if partners loan account is at asset side, transfer it to partners capital account. Sir, if partners loan is at liability side 1,000, where it should be transferred, sir? Realization. Why, sir? Because partners loan is a capacity of creditor. Partners capital is a capacity of capital. That is like owner. So capacity of creditor will be transferred to realization account since he is an outsider, whereas partners capital, since he is an owner, it will be in the partners capital account. So if partners loan is at asset side, it has to be transferred to partners capital. If partners loan is at liability side, it has to be transferred to realization account. Pakka everybody? Last and final special item, realization expenses. Likewise, how in amalgamation we have got 3 stages. In the same way, here you will get 4 things. Number 1, borne by firm and paid by firm. What is the entry? Yes, common thing. Borne by firm, paid by firm. What is the entry? Realization account debtor to cash or bank account. Second one, borne by firm but paid by partner. It is borne by whom? Firm. But paid by whom? So, actually you have to pay, but partner paid. So, you have to give to the partner. So, what is the entry? Realization account debtor to partner's capital account. Since it is your expense, realization has to be debited. Who is paying? Partner. So to partner's capital account. If you paid to cash or bank, but you are not paying, right? Clear everybody? Fine. Next one. Next two cases. All agreement lo raskunaru. Born by partner and paid by partner. What is the entry? No entry. Next one. Born by partner and paid by firm. What is the entry? Partner's capital account debtor to cash or bank account. Since firm is paying to cash or bank, who have to pay? Partner. So, but I have paid. So, I will collect the same from the partner. So, partner's capital to cash or bank. Pakka everybody? Fine. These are the things. And take care. Coming to dissolution, there will be no concept of goodwill at all. Coming to dissolution, I'm not speaking about advanced, basic. There will be no concept at all with respect to goodwill. But if goodwill is being appeared at the balance sheet side, asset side, then close and distribute it to the partners in profit sharing ratio. Clear everybody? If any goodwill is appearing at asset side of the balance sheet, close and transfer this goodwill to partners capital account in which ratio? Profit sharing ratio. Any doubts to anyone? There ends with the basic concept. Now moving on to the next one, Garner versus Murray rule. Sir, Garner versus Murray rule, theoretical kuda adugutunadu, take care. When it will not be utilized. Simple thing. When it will be utilized is exactly opposite. Ante kada. When GVM rule will be utilized, sir, minimum there should be one insolvent partners and minimum there should be two solvent partners. Two rules of Garner versus Murray are all about number one. Insolvent partners loss has to be borne by solvent partners in last agreed capital ratio or capital contribution ratio. Sir, solvent partner who are having credit balance. Last agreed capital ratio ante capital undi antene credit balance unnattu inka. It should not be highlighted once again. Loss arising from insolvency partner has to be borne by solvent partner who are having credit balances in which ratio? Last agreed capital ratio. What is LACR? If the capital method is fixed capital method, if the capital methods maintained by the partnership is fixed capital method, then the balances of, whatever is that, balances of which account? Partner's capital account is called as last agreed capital ratio. If it is fluctuating capital method, sir, if it is fluctuating capital method, you are not having two accounts, you are having only one account, that is partner's capital account. So now what you have to do in this sense, all the items till dissolution has to be adjusted. Opening Kadamma. All the items till dissolution has to be adjusted and all the items arising at the point of dissolution will not be adjusted. Till dissolution ante enti sir? Reserves and surplus, miscellaneous assets, goodwill, ivanni kuda close cheyalani cheppukunnam. Did you remember? So all these should be closed and transferred to partners capital account in their profit sharing ratio. After adjusting these things, you will get one ratio that is called as last agreed capital ratio. But remember, you should not adjust those items which are arising at the time of resolution. At the time of dissolution, in the sense, what items will be coming, sir? Realization, profit or loss, assets taken over, liabilities assumed, commissions paid, all these things will not be considered. Pakka everybody? This is rule number 1. And rule number 2, realization loss, if any is there, it has to be brought in cash by all the solvent partners. Not only the partner who is having credit balance, all the solvent partners has to bring realization loss in cash. Pakka everybody? So that is what your another rule of Garner versus Murray. And after that, whether under normal dissolution or GVM dissolution, ultimately you will be left with two accounts. Partners capital account okati, cash or bank account okati. We have told initially close each and every item and transfer it to realization except cash. Except cash. So two accounts will be left over at last. One is partner's capital account and the other is cash or bank account. Pakka everybody? So now ultimately you have to close these two accounts. How to close? Remember, don't close cash account first and transfer to partner's capital. There is no ratio called cash sharing ratio. First you have to close partner's capital account and then you will be getting some balances, then transfer those items to cash or bank account. Pakka everybody? That's it. I told you realization account, did you remember? Equity shareholders profit is 4.5 lakh, preference shareholder loss is 50,000. రెండు కలిపి ఒకేసారి చేస్తే సెట్ ఆఫ్ అయిపోయి వచ్చేస్తుంది, విచ్ ఇస్ నాట్ కరెక్ట్. ఇక్కడ కూడా అలాగే దేర్ మే బి పార్ట్నర్స్ ఏ బిసి. టు ఏ యూ హ్యావ్ టు పే 10 lakhs, బి 8 lakhs you have to pay. Totally you have to pay 18 lakhs. But C has to bring in 2 lakhs to the firm. C has to bring 2 lakhs to the firm. So existing cash will be something like 16 lakhs. After bringing C, it will become 2 lakhs and totally 18 lakhs. Now you have to dispose it to A and B. ఇవి మీకు ఎప్పుడు తెలుస్తాయి సార్? ఓన్లీ ఆఫ్టర్ డ్రాఫ్టింగ్ పార్ట్నర్స్ క్యాపిటల్ అకౌంట్, బట్ నాట్ ఆఫ్టర్ డ్రాఫ్టింగ్ క్యాష్ అకౌంట్. Clear everybody? So this is all about GVM rule and basic dissolution. And moving on to the next thing, all partners insolvency. There's nothing great under all partners insolvency. Sir, normally realization account, 2 assets by liabilities, 2 cash or bank by cash or bank. That is like sale of assets and settlement of liabilities. But remember my dear children, there is no concept of settlement of liabilities at all. Because you are not having enough cash, how can you settle all the liabilities? Yes or no? So you are having a liability, not having enough cash, so now you will pay only part of the amount and remaining part of the amount has to be transferred to deficiency account. Strictly speaking, that loss has to be borne by whom? Partners. If partners had brought the cash, that might have to be given to the liability holders and there ends with the matter. But the main problem is that all the partners have declared insolvency and hence they cannot bring the cash. So realization account, don't do settlement of liabilities, also don't transfer liabilities account. So you will be having only 2 assets, sale of assets account, that's it. For liabilities, what to do, sir? Open separate accounts, settle, and the loss will be transferred to which account? Deficiency account. Ultimately you have to open deficiency account. In deficiency account you will be having 2 things, cause, effect. Cause will be at debit side, effect will be at credit side. Who are the causing for the deficiency? Partner. Who are affected because of that? Outside liability holders. Clear everybody? So whatever the liabilities you are having, brought down balance 1000 but paid is only 500, remaining 500 will be transferred to deficiency account. Clear? And normally speaking we will be left with partners capital and cash account, but this time we are not having cash. Then what is there, sir? Deficiency account. So ultimately whatever the loss in partners capital account is there, it has to be transferred to deficiency and ultimately it will be closed. Again take care, after booking deficiency account, don't close deficiency account to partners. Also there is no such ratio like deficiency sharing ratio. So partners capital account nundi you have to close and transfer to the deficiency account. Pakka everybody? Fine. And next things are like maximum loss method and relative capital method. I'm sorry, I cannot concentrate on these things at all. Moreover, you people can do these things comfortably and take care. In relative capital method, one point is very different and our point to be careful. Something like in one of the questions he will be telling an adjustment like a partner had taken over an asset. 10,000 is valued for 12,000 or something like that he will be giving. ఆ ఏరియాలో మాత్రం చాలా కేర్ఫుల్గా ఉండండి, because once again you have to compute table for that. So once again second time also you have to compute higher relative capital method table for that. So that is the only area where you have to be very careful. Apart from that everything is very easy. This is what all about your basic dissolution. And last but not least, advanced. Again, don't expect very clear explanation from advanced. I will try to give my maximum thing, and later on let's look over to the different style of problems. It not different style of adjustments, or that will be like discussion of adjustment. Different style of problems. ఎలాంటి ప్రాబ్లమ్స్ ఉంటాయి, ఎలా సాల్వ్ చేయాలి అని మాత్రం I will be just telling you. More than that, I can't help you. Time constraint. I personally don't know how you felt. I have personally felt that the time is running very fast. And like initial nijam cheppali ante, initially morning whenever I have come by 8:30, 8:30 to 10:30, afterwards again 11 to 1, afterwards mala 3 to 5, 6 to 8. Isla 8 hours class etla aitadi ani I personally thought like that at the first hour. But 8:30 నుండి 10:30 కి వచ్చేసరికి liquidation అవ్వలేదు. Did you remember that one? And later on I have got so time అయితే మాత్రం చాలా ఫాస్ట్ గా అవుతుందని అక్కడే అర్థమైంది. And later on it has happened like that. అంతే. ఫైనల్లీ అడ్వాన్స్ పార్ట్నర్షిప్ కి వచ్చేసాం. సో లాస్ట్ అండ్ ఫైనల్ పార్ట్. ఐ హోప్ లాస్ట్ లో అడగాలనుకోండి, మళ్ళీ లాస్ట్ లో అడుగుతా, కానీ మధ్యలో లైక్ వైజ్ అంత మరీ బోరింగ్ సెషన్ లో అయితే ఏం లేదు కదా. లైక్ వైజ్ అండర్స్టాండింగ్ ఆర్ విత్ దిస్ యూ కెన్ సాల్వ్ ద ప్రాబ్లమ్ కొంచెమైనా చేయగలరేమో. ఓకే, డన్, ఫైన్. సో లెట్స్ ప్రొసీడ్ విత్ ద నెక్స్ట్ పార్ట్, దట్ ఈస్ లైక్ advanced. Sir, advanced concepts of partnership where you are having amalgamation, sale and conversion. Sale and conversion of the company are totally similar, but amalgamation is totally different. In one problem, he will be opening revaluation account. In another problem, he will be opening realization account. That is what literally happened. అయితే ఇంకో ప్రాబ్లం లో డైరెక్ట్ గా రీవాల్యుయేషన్ అకౌంట్ he did not open, but he will be giving it in columns. Did you remember? Likewise, he will be giving it in a tabular format. But in another problem, he has directly opened realization account. What to do? Sir, number one, it's my personal point to tell you whether to take or not. That is your choice. First one, if you are capable of remembering for what problem in which style he has done, then follow the same style. If you are capable of remembering for which problem he has done which style, because amalgamation of partnership you are having only two problems. So if you are capable of remembering, then you follow that style. But if you are not capable of being remembered with that thing, it's my personal point to tell you to open revaluation account but not realization account. Sir, why you are telling revaluation account? For your kind information, even if you observe in books also, for amalgamation of partnership, he will be telling revaluation account only in the theory. Sir, aslu enduku sir? Ante normally speaking, our companies are being dissoluted, right? Likewise, what is that? Amalgamation. One company is closed, another company is opened. For the closing company, you have opened realization account. Even dissolution of partnership from basics, realization account. Even for sale and conversion, also I am telling to open realization account. Then why only for amalgamation we are opening revaluation account, sir? Because I personally believe, and also the theory is strongly making us to believe that it is just a concept of reconstitution but not dissolution. If you think with common sense, you will get it. A, B and co. A and B are partners. C, D and co. C and D are partners. Two things were combined and started A, D and co, wherein A, B, C, D are partners now. For your kind information, two partnership firms are merging and opening a new partnership firm, right? Same assets, same assets, same liabilities, same liabilities. Purchase consideration, nothing great with purchase consideration. Whatever is the net assets is there, everybody is going to get the same share also. Clear everybody? Same business is also being continued. So So what the point is there here to tell that it is a kind of closing and opening? There's nothing like that, closing and opening. It is something like reconstitution of the firm. Did you remember reconstitution? Admission, retirement, gurtunda, death. In that cases what is being happened? Extra ga oka goodwill point add avutundi. Partners will be bringing in capital. So literal ga nenu ippudu ikkada em maatladtanante, in AD and Co, AB are coming, CD are coming with some capitals. That is nothing but with their business. Am I correct or wrong? Also, they are bringing their goodwill. వాళ్ళ goodwill ని ఈ కొత్త కంపెనీకి కూడా తెస్తున్నారు. So what is their new point here? It is obviously resembling your admission. And hence, I strongly believe to open revaluation account. So if you capable of being remember for one thing open realization and anything open revaluation, also in tabular format, just you also do like that. If you are not capable of being remembered, open revaluation account. Sir, మరి revaluation account వేస్తే ఆన్సర్ ఒకటే వస్తుందా? ఖచ్చితంగా వస్తుందమ్మా. Because in realization account, I'll be just telling you one simple thing. Look here. Realization account to asset by liabilities, right? And next, what is he writing? Something like for closing the books of accounts by transferee company. There we have written. But here what will you write? By new partnership form. Because it has to give consideration for us, right? And that consideration has to be given to whom, amma? Partners. Correct or wrong? Now, if you open revaluation account, you will be just booking the increase and decrease of the assets and liabilities. And whatever the profit or loss is there, it is transferred to partners. And then in partners capital account, you are going to transfer this profit or loss. You are going to book the purchase consideration directly in the partners capital accounts. Clear everybody? So for sure you will be getting the answer tallied whether either under realization account opening or even under revaluation account is being opened. Whichever account you open, the answer will be no different at all. Now coming to goodwill point. కొంచెం జాగ్రత్తగా వినండి. ఒక క్వశ్చన్లో ఏం చెప్తాడంటే గుడ్విల్ ఆఫ్ ఫస్ట్ పార్ట్నర్షిప్ ఫార్మ్ 10,000, గుడ్విల్ ఆఫ్ సెకండ్ పార్ట్నర్షిప్ ఫార్మ్ 15,000 and the same goodwills were being transferred to new company also అనేదో చెప్తాడు. అండ్ మళ్ళా ఇంకొక సమ్లో ఏం చెప్తాడంటే ఎవ్రీథింగ్ విల్ బి గివెన్ బట్ హీ విల్ వెరీ వెరీ క్లియర్లీ టెల్ దాట్ నో గుడ్విల్ అకౌంట్ షల్ బి ఓపెన్డ్. ఫస్ట్ దాంట్లో transfer to new company account and they have written off to they have decided to write off the goodwill account antadu. So that if you want you can open goodwill account and you can write off. But here in other question he will be telling no goodwill account has to be opened. Okay. So now for these things amma nenu okkati chepta. కొంతమంది టేబులర్ ఫామ్లో చెప్తారు. Likewise goodwill old form, goodwill old form and goodwill new form. They will be asking you to consider the difference between these things. మళ్ళా పక్కన డెబిట్లు క్రెడిట్లు పెట్టించి మొత్తం మీద చిన్న సార్ట్ ఆఫ్ కన్ఫ్యూజన్ వస్తుంది. ఐ విల్ టెల్ ఇట్ ఇన్ ఎ సింపుల్ వే. డిడ్ యూ రిమెంబర్ ఇన్ యువర్ జస్ట్ గుర్తుందో లేదో చెప్పండి, ఫౌండేషన్ ఆర్ సిపిటీలో యు ఆర్ హ్యావింగ్, అంటే మరీ అలా ఎక్స్ప్రెషన్లో పెట్టద్దు, యు ఆర్ హ్యావింగ్ సంథింగ్ లైక్ రైజింగ్ ఆఫ్ గుడ్విల్ అండ్ రైటింగ్ ఆఫ్ గుడ్విల్. What you have done? Step number 1, raise goodwill. Step number 2, write off goodwill. Raising goodwill in which ratio? Old ratio. Write off goodwill in which ratio? New ratio. Pass the journal entries immediately. ఈ క్వశ్చన్స్ కూడా చెప్తున్నా ఎలా చేయాలో. ఫర్ రైజింగ్ గుడ్విల్ వాట్ ఈస్ ఎ ఎంట్రీ? గుడ్విల్ అకౌంట్ డెటార్ టు ఓల్డ్ పార్ట్నర్స్ క్యాపిటల్ అకౌంట్ ఇన్ ఓల్డ్ రేషియో. అండ్ రైట్ ఆఫ్ గుడ్విల్ what is the journal entry? All partners capital account debtor to goodwill account in which ratio? New ratio. You do the same, you will get it again. ఇవి రెండు రాసిన తర్వాత for the first one write step 1, write step 2, write step. So now step 1 and step 2 goodwill account gets cancelled. If you book partners capital accounts, that difference will be automatically booked. కానీ ఇప్పుడు ఇంకొక క్వశ్చన్ ఉంది చూసారా, నో గుడ్విల్ అకౌంట్ హ్యాస్ టు బి ఓపెన్ అన్నాడు. Am I correct or wrong? సో అలాంటి వాడి కోసం ఇప్పుడు ఏం చేయాలి అంటే యూ హ్యావ్ టు రైట్ స్టెప్ నెంబర్ 3 అనదర్ జర్నల్ ఎంట్రీ, సెట్ ఆఫ్ దీస్ పార్ట్నర్స్ అకౌంట్ అండ్ రైట్ ఎన్ ఎంట్రీ అండ్ పోస్ట్ దాట్ ఎంట్రీ. ఇంకా డెబిట్ క్రెడిట్ టేబుల్ ఏమీ అవసరం లేదు. ఐఎమ్ టెల్లింగ్ ఇఫ్ యూ ఫాలో దిస్ థింగ్ యూ విల్ నెవర్ హ్యావ్ కన్ఫ్యూజన్ విత్ గుడ్ విల్. I'll give you an example so that it will be better for you. Say for example, A and B are the old firm people and B and C are the new firm, old firm people, and now in the new firm you are having A, B, C. Goodwill of the old firm 60,000 in the ratio 2:1. Goodwill of the old firm B for B and C, say for example 50,000 in 3:2 ratio. Now the new ratio for the partners is 3:2:1. First ఏం చేయాలి సార్? రైజ్ goodwill for A and B firm in 2:1 ratio. What is the entry? Goodwill account debtor to A's capital account, B's capital account 60,000, 40,000. I also write another entry for old firm of B and C. Goodwill account debtor 50,000 to B's capital account to C's capital account 30,000, 20,000. Raise అయిపోయిందిగా. Now write an entry of writing off. What is the writing off of journal entry? Will be done in which firm, amma? New firm. Raising is done in which firm? Old firm. Writing off is being done in which firm? New firm. So now you have to write off the goodwill. For whom? A, B, C. So A account debtor, B's capital account debtor, C's capital account debtor, to goodwill account. What is the total goodwill, sir? 1,10,000. So to goodwill 1,10,000 in the ratio 3:2:1. $18,333. Completed. Post all these entries. You'll get for sure. ఇప్పుడు ఇంకొక ప్రాబ్లమ్ వాడు చెప్తున్నాడుగా, గుడ్విల్ అకౌంట్ ఈజ్ నాట్ టు బి ఓపెన్డ్ అని. ఫర్ దాట్ ప్రాబ్లమ్ యూ హ్యావ్ టు రైట్ సెట్ ఆఫ్ జర్నల్ ఎంట్రీ. ఇవి రఫ్లో చేసుకోండి. అప్పుడు లేదా స్టెప్ 1 స్టెప్ 2 అనండి, రిక్వైర్డ్ జర్నల్ ఎంట్రీ అనండి. రైట్ ద రిక్వైర్డ్ జర్నల్ ఎంట్రీ బై సెట్టింగ్ ఆఫ్ గుడ్విల్. క్లియర్ ఎవ్రీబడి? సార్ నార్మలీ స్పీకింగ్ యూ హ్యావ్ టు రైజ్ ద గుడ్విల్ ఇన్ ఓల్డ్ ఫర్మ్, రైట్ ఆఫ్ ద గుడ్విల్ ఇన్ new firm, but where in the question he is giving no goodwill is to be opened. For that don't raise in new firm, don't raise in old firm, don't write off in new firm. Step 1 anandi, step 2 anandi. Don't raise goodwill, don't write off goodwill. Old firm lo raise cheyadam, new firm lo write off cheyadam. Forget that concept. For our convenience just write step 1 step 2. Those two journal entries will not be shown in books of accounts. In the sense, this entry will not be shown in books of accounts. This entry will not be shown in books of accounts. Even this entry will not be shown in books of accounts. Then what will be shown, sir? Set of entry. Chudandi, A credit 40,000, A debit 55,000. Set of A 15,000. Antena? B credit 20, B credit 30. Total is 50 credit. B debit 36,667. To B 13,333. C credit 20,000. C debit 18,333. Difference. Check out, you will get the same. Yes or no? Why to have too much confusion? Box will go to old ratio, new ratio. That's not needed at all. Write these things, you will get for sure. Remember, once again I'm telling, in one problem he will be telling old firm goodwill, new firm goodwill, like that he will be telling. He will not tell anything like don't open goodwill account. In such situation, open the goodwill in old firm, write off the goodwill in new firm. These two entries write and then post the entries. Completed. Em cheyaddu. But if it is such a kind of question where he has given don't open goodwill account or no goodwill account should be appeared in books of accounts ante, then don't raise goodwill in old firm, don't write off goodwill in new firm. You do it for your convenience. Step 1 step 2 and required journal entry, set off and write the entry, you'll get it. వితౌట్ ఎనీ కన్ఫ్యూజన్. అంటే ఏది డెబిట్, ఏది క్రెడిట్, ఏది ఏ రేషియో అన్న కన్ఫ్యూజన్ ఉండకుండా ఇట్ విల్ బి గివింగ్ యూ బెటర్ క్లారిటీ. క్లియర్ ఎవ్రీబడి? సో దట్ ఈస్ వాట్ ఆల్ అబౌట్ యువర్ గుడ్ విల్ పాయింట్. నెక్స్ట్ నౌ కమింగ్ టు సేల్ అండ్ కన్వర్షన్. సేల్ అండ్ కన్వర్షన్కి వచ్చేసరికి వాట్ ఎవర్ ద లాజిక్స్ దట్ యూ హ్యావ్ ఫాలోడ్ ఫర్ amalgamation, you can follow the same style of logics without any confusion. In the sense, realization account, two assets, buy liabilities, and then you have to get the consideration from the new firm or new company. Am I correct or wrong? Because you are either converting to a company or you are acquired by a company. So company has to give you some consideration. So company account or realization, something like buy new company account. Then you're going to get some profit or loss. It has to be transferred to partners capital account in their profit sharing ratio. Remember, asset and liabilities will have to be transferred only those assets and liabilities which are taken over by the new company. For those assets and liabilities which are not taken over by the new company, same style. Sale of asset, settlement of liability, profit or loss will be transferred to realization account. Clear everybody? Now, due entry is over. Receive the purchase consideration. Same. Purchase consideration account debtor to new company account. Same. What is the next one? New company. New company is already over. This purchase consideration has to be disbursed to the partners, right? Partners capital account debtor to purchase consideration. Biggest problem is here. How much is to be given to the partners? If nothing is given in the question, first you prepare partners capital account. Meeku idi cheppa gurtunda? Partners capital cash. There is no ratio called cash sharing ratio. First of all, you have to prepare partners capital account, then you will be getting balancing figures. You have to consider the same for cash account. Transfer from capital to cash but not from cash to capital. Here also same logic. First prepare partners capital account, then you are going to get some balancing figures which will be transferred along with purchase consideration. There ends with the matter. But remember, my dear children, your real problem starts if he is giving a ratio for you. The purchase consideration is to be distributed in one ratio and istadu vadu. At that time you write by distributing in one ratio, you will get balancing figures again. That balancing figure will become cash. Okay, oka problem untundi ilaga. For all the problems ila emi undadu. He will not tell anything. So we will be directly booking the balancing figures as purchase consideration. But in one problem, you will be having even purchase consideration has to be disbursed in the ratio. If it is to be disbursed in the ratio, then the balancing figures will automatically become cash. And ఏదైతే cash వస్తుందో, again that cash account also should has to be closed. Remember that one. Clear everybody? అర్థమైందా? Of course it will automatically close for sure. ఖచ్చితంగా close అవ్వే తీరుతుంది. ఓకేనా అమ్మా? సో దట్ ఈస్ విత్ దిస్ పాయింట్. అండ్ ఇంకొకటి కొంచెం జాగ్రత్తగా వినండి. ఇన్ వన్ ప్రాబ్లం పర్చేస్ కన్సిడరేషన్ ఈస్ డిజైన్డ్ ఇన్ దిస్ వే టు మెయింటైన్ సేమ్ ఇంట్రెస్ట్ partners were to be given consideration in a company or in the company like 50% so as to maintain the interest of the partners, and remaining 50% shall be depending on profit sharing ratio. Exact wordings kaadu, ఈ స్టైల్ ఆఫ్ థింగ్స్ ఉంటాయి. యునో లైక్ అడ్వాన్స్ పార్ట్నర్షిప్ లో ప్రాబ్లం అంతా పర్చేస్ కన్సిడరేషన్ డిస్బర్స్మెంట్ పర్చేస్ కన్సిడరేషన్ కంప్యూటేషన్ లోనే వస్తుంది. రిమైనింగ్ ఆల్ ఇస్ సేమ్. సో వాట్ టు డూ ఇన్ దిస్ సిచ్యువేషన్ టు మెయింటైన్ ద సేమ్ రైట్స్ ఆఫ్ ప్రిఫరెన్స్, సేమ్ రైట్స్ ఆఫ్ పార్ట్నర్స్ అని ఒకటి, టు మెయింటైన్ ద సేమ్ ఇంట్రెస్ట్ ఆర్ ద ఫిక్స్డ్ ఇంట్రెస్ట్ ఆఫ్ పార్ట్నర్స్ అని ఒకటి వస్తుంది. Whenever there is a concept of fixed interest or same interest, company has to issue preference share capital. Whenever you have got the same rights are to be maintained, then you have to go with equity share capital. Fixed rights, fixed interest ante how in a company, a person can get a fixed interest amma through preference share capital. Interest in the sense, don't concentrate on interest, fixed amount ani artham. So how an shareholder can get fixed income? It will be only through preference dividend. Did you remember interest on capital? Interest on capital. So normal ga interest on capital ఏదైతే పార్ట్నర్స్ కి మనం ఇస్తున్నామో, to maintain that income he shall be given with preference share capital. Why? Because interest on capital in partnership form is exactly similar to preference dividend in preference dividend in a company. Why, sir? Preference dividend will be declared only when profits are there. Interest on capital is an appropriation. It will be booked only when profits are there. Interest on capital is also fixed. Preference dividend is also fixed. Both things will be booked only when profits are there. Equity not fixed. Similarly, profit sharing ratio is fixed, but how much is the total profits? That is not fixed. ఏ ఇయర్ ఎంత ప్రాఫిట్స్ వస్తే ఆ ఇయర్ ఎంత ప్రాఫిట్స్ తీసుకుని ఎంజాయ్ చేస్తారు. Clear everybody? So in one question he will be giving the purchase consideration like, so as to maintain the fixed rights of the shareholders, they shall be given in the company. In the sense, what you have to check out amma, interest on capital. Interest on capital check chesi percentage of preference share capital em chepte adi. I mean to tell you, indaka same income to be maintained అని ఒక సమ్ చూసాం, గుర్తుందా? Same interest something, same income is to be maintained, 10% preference dividend to 12% preference dividend. In the same logic way, here also A, B, C or the partners compute interest on capital, something like 30,000, 45,000, 22,000 anukondi. Now question is giving, partners should be disbursed consideration in such a way to maintain their interests in the partnership form. Inkem cheppadu. Now you have to check out this interest on capital, and for this interest on capital, what is being giving in the company amma? Preference dividend. Say for example, preference dividend is 7%, then everybody has to get with 7% 30,000 income for A. So 30,000 divided by 7%, 4,28,000. 45,000 divided by 7%, around 6 lakhs. 22 by 7%, around 3,50,000, around 3 lakhs, whatever is that. So this has to be disbursed in preference share capital. Idi kaakunda you will be left with another balancing figure, right? At that time you have to consider it as equity share capital. Understood everybody? This is another style of questioning. Okay, oka question lo ilanti point untundi. Be careful with it. And I'm going to close with the last and final discussion. Sir, partnership form lo una major problem enti ante, he will not give a direct question on the direct date. Say for example, if at all a partnership form has to be converted on 31/3/2012, data వాడు ఎప్పటి నుండి ఇస్తాడు తెలుసా? 1/4/2010. But they have decided to convert on 31/3/2012. మళ్ళా వాడేం ఊరికే ఊరుకోడు. On 1/4/2010, generally A and B are the partners who are doing the business. C is admitted. So they have run the business up to 31/3/2010. 1 year. And after that, 1/4/2010, 31/3/2011. For after another 1 year, they have run the business and then they have decided to dissolute, or they have decided to convert it into a company. Mari em cheyali sir ipudu? First of all, revaluation account should be prepared. I mean to tell, you have to go with the cease admission. Revaluation account to goodwill, existing reserves and surplus distribution, ivanni cheyali. చేసిన తర్వాత you have to prepare final accounts for the year ending. ఫైనల్ అకౌంట్స్ ప్రిపేర్ చేయాలంటే మళ్ళీ నీకేం కావాలి? ట్రేడింగ్ P&L అకౌంట్ టు బ్యాలెన్స్ షీట్. ట్రేడింగ్ P&L అకౌంట్ ప్రిపేర్ చేయాలంటే యూ వాంట్, ఐ మీన్ టు టెల్, ఇన్కమ్ అండ్ ఎక్స్పెన్సెస్ డేటా. బట్ ప్రాబ్లం, ఇన్కమ్ అండ్ ఎక్స్పెన్స్ డేటా ఇవ్వడు. మార్నింగ్ లిక్విడేషన్ ఒక సమ్ చేసాం, గుర్తుందా? ఇఫ్ ఇన్కమ్ అండ్ ఎక్స్పెన్సెస్ ఈజ్ నాట్ దేర్, యూ కెన్ డైరెక్ట్లీ ప్రిపేర్ బ్యాలెన్స్ షీట్. బ్యాలెన్సింగ్ ఫిగర్ విల్ బికమ్ ప్రాఫిట్ ఆర్ లాస్. అలా చేయాలి. సో అంటే సీస్ అడ్మిషన్ తీసుకుని 1 year కి సంబంధించినటువంటి ఫైనల్ అకౌంట్స్ అన్ని వేసుకుని then you have to get the final accounts date of 31/3/2012 and the position of 31/3/2012 has to be converted into కంపెనీ. ఆ పొజిషన్ అబ్జర్వ్ చేసి కంపెనీలోకి కన్వర్ట్ చేయాలి. అడిగితే 20 మార్క్స్, చేస్తే 1 hour ఈజీగా పట్టే ప్రాబ్లం. సో ఓపెన్లీ ఐఎమ్ టెల్లింగ్, ఫర్ దీస్ కైండ్ ఆఫ్ క్వశ్చన్స్ యు ఆర్ సపోజ్ టు టేక్ ద చాయిస్. For these kind of questions, you are supposed to take the choice, no doubt at all. Even though, how much ever confident you are, time killing problems, not time savior problems. So take care. This is another kind of problem that is having in your partnership. And now, moving on to the last and final model. You know, like in partnership firm, especially coming to advanced, another kind of model is also there. Something like, here what we have seen, amma, 1 year business run chestaru, after that business is closed. In one problem you are having, did you remember, if I was not wrong, Mr. Sri Raman problem anukunta. Acquired a sole proprietor is being converted. Sole proprietor ki sale chestaru. Partnership firm is being sold to a sole proprietor. Such a horrible problem is that. నార్మల్గా ప్రాబ్లమ్స్ అన్నిట్లో మనం హ్యాపీగా చేయాల్సింది ఏంటి అంటే, క్లోజ్ ద బుక్స్ ఆఫ్ అకౌంట్స్ ఆఫ్ ద ఓల్డ్ ఫర్మ్, ఓపెన్ ద బుక్స్ ఆఫ్ అకౌంట్స్ ఆఫ్ ద న్యూ ఫర్మ్ ఆర్ న్యూ కంపెనీ ఆర్ న్యూ ప్రొప్రైటర్. బట్ హియర్ ద ప్రొప్రైటర్ ప్రాబ్లమ్ ఈస్ దట్ హీ విల్ కంటిన్యూ ద సేమ్ బుక్స్. So since he is continuing the same books, old company's books of accounts closing not required. Then what is required, sir? Opening is also not required. Elimination is required. అంటే నార్మల్గా ఇప్పుడు మనం ఏం చేస్తాం, సార్ ఇఫ్ అసెట్స్ ఆర్ నాట్ రిక్వైర్డ్ క్లోజ్ చేయాలంటే రియలైజేషన్ అకౌంట్ డెటార్ టు అసెట్స్ అకౌంట్ విచ్ ఆర్ ట్రాన్స్ఫర్డ్. am I correct or wrong? ఇప్పుడు సేమ్ బ్యాలెన్స్ షీట్, సేమ్ బుక్స్ ఆఫ్ అకౌంట్స్ ఆర్ బీయింగ్ కంటిన్యూడ్ అండ్ హెన్స్ యు నో వాట్ యూ హ్యావ్ టు డూ. సే ఫర్ ఎగ్జాంపుల్ 3 assets, plant and machinery, furniture and fixtures, debtors are there. If you are closing the books of accounts, realization account debtor to plant and machinery, realization to furniture and fixtures, realization to debtors. And new company has to acquire. Sir, it is acquiring only furniture and fixtures and debtors. So furniture and fixture account debtor, debtors account debtor to new company, I mean to old partners account. Like that it will write something. But the biggest problem here is that it is not opening the books of accounts at all. Same balance sheet is continued. మరి ఏం చేయాలి? I want furniture, I want debtors. So what I don't want, plant and machinery. So whatever I don't want, I have to close those things now. ఇప్పటి వరకు మనం ఏం చేసామంటే, వాట్ ఎవర్ ఆర్ ట్రాన్స్ఫర్ టు ద న్యూ బిజినెస్, దోస్ వర్ క్లోజ్డ్ అండ్ ట్రాన్స్ఫర్ టు రియలైజేషన్ అకౌంట్. But now what you have to do, since the same books are being continued, eliminate the items that you don't want. లాజిక్ అర్థమైందా? మళ్ళీ అదే ప్రాబ్లంలో గుడ్ విల్ ని మాత్రం డెబిట్ చేస్తాడు. ఆల్ ది అసెట్స్ దట్ వర్ నాట్ నీడెడ్ విల్ బి క్రెడిటెడ్, all the liabilities that were not needed will be debited. Hey, take care my dear children, in all the problems assets transferred will be credited and transferred to realization, liabilities transferred will be debited and transferred to realization, assets and liabilities which were not transferred, sale of asset and settlement of liability. కానీ ఈ ప్రాబ్లం లో చేసేది ఏంటంటే, సేమ్ బుక్స్ ఆర్ బీయింగ్ కంటిన్యూడ్. సిన్స్ సేమ్ బుక్స్ ఆర్ బీయింగ్ కంటిన్యూడ్, నో నీడ్ టు close each and everything. What has to be done, sir? Whatever are needed or not needed, ఇప్పటి వరకు నీడెడ్ ట్రాన్స్ఫర్డ్, బట్ ఇన్ దిస్ ప్రాబ్లం నాట్ నీడెడ్ విల్ బి ట్రాన్స్ఫర్డ్. గుడ్ విల్ ఈజ్ నాట్ దేర్ ఇన్ ద బుక్స్ ఆఫ్ అకౌంట్స్. సో నవ్ యూ హ్యావ్ టు రైజ్ ద గుడ్ విల్ అండ్ హెన్స్ గుడ్ విల్ అకౌంట్ విల్ బి డెబిటెడ్. మనం ఏం చెప్పాం? వాట్ ఎవర్ ఆర్ నాట్ నీడెడ్ విల్ నాట్ బి కన్సిడర్, సారీ, వాట్ ఎవర్ ఆర్ నీడెడ్ విల్ నాట్ బి కన్సిడర్డ్, నాట్ నీడెడ్ విల్ హ్యావ్ టు బి ఎలిమినేటెడ్. కానీ గుడ్ విల్ నీడెడ్ but not there in books of accounts, so raise that. Clear everybody? So this is what your business purchase account. ఆ ప్రాబ్లంలో మీకు ఉండే అకౌంట్ రియలైజేషన్ అని పేరు ఉండదు, బిజినెస్ పర్చేజ్ అని పేరు ఉంటుంది. సో ప్లీజ్ బీ వెరీ వెరీ కేర్ఫుల్. మై సిన్సియర్ అడ్వైస్, ఆఫ్టర్ ప్రిపేరింగ్ ఈచ్ అండ్ ఎవ్రీ టాపిక్ very very clearly, including amalgamation and consolidation, if you are having ample time, come to partnership. అడ్వాన్స్డ్ బేసిక్ ప్రిపేర్ అయిపోండి, ఇట్స్ వెరీ వెరీ ఈజీ. అడ్వాన్స్కి అప్పుడు మాత్రమే రండి, టిల్ దెన్ డోంట్ కమ్ టు అడ్వాన్స్. ఐఎమ్ నాట్ టెలింగ్ అడ్వాన్స్ ఈస్ డిఫికల్ట్, అడ్వాన్స్ ఈస్ టైమ్ కన్స్యూమింగ్. కొంచెం జాగ్రత్తగా ప్రతి క్వశ్చన్ ని హాఫ్ అన్ అవర్ 15 minutes తీసుకొని చూస్తే ఈజీలీ యుల్ గెట్ ఈచ్ అండ్ ఎవ్రీథింగ్. బట్ టూ మచ్ ఆఫ్ టైమ్ కన్స్యూమింగ్. సో దట్ ఈస్ వాట్ మై పాయింట్ అల్టిమేట్లీ. అండ్ ఫైన్ మై డియర్ చిల్డ్రన్, దట్ ఈస్ ద ఎండ్ ఆఫ్ ద సెషన్. టేక్ కేర్, ఆల్ ది బెస్ట్ ఫర్ యువర్ మెయిన్ ఎగ్జామినేషన్. సార్ నేను చెప్పే ఒక్క పాయింట్, అకౌంట్స్ అండ్ అడ్వాన్స్డ్ అకౌంట్స్ లో చాలా మంది చెప్పే ఒక పాయింట్ ఏంటి తెలుసా అమ్మ? టైమ్ ఈజ్ ఇన్సఫిషియంట్. Then what to do, sir, if time is insufficient? Manage the time. How to maintain and manage the time? Gurtu petkondi, even while writing in the examination also, for each and every Roman, keep 30 minutes to 35 minutes hard. 35 minutes లో ఆ ప్రాబ్లం 20 మార్క్స్ అవ్వకపోతే ఆ రోమన్ వదిలేసి నెక్స్ట్ క్వశ్చన్ కి వెళ్ళిపో. If it is a 15 marks problem or if it is a 10 marks problem, hardly you are having 15 minutes time. అదే పెట్టుకోండి. సార్ 10 marks problem, 15 minutes time, started the problem, 15 minutes completed, problem not completed, leave the problem. హార్డ్లీ ఇంకో 2 minutes లో అయిపోతుందంటే చేయండి, లేకపోతే మాత్రం చెయ్యొద్దు. లీవ్ ద గ్యాప్ అండ్ ప్లీజ్ స్టార్ట్ ద నెక్స్ట్ ప్రాబ్లం. ఇఫ్ యూ హ్యాబిట్యుయేట్ దిస్ వన్, ఆబ్వియస్లీ టైమ్ విల్ బి సఫిషియంట్ ఫర్ యూ. కొన్ని లెందీ ప్రాబ్లమ్స్ ఉంటాయి, మనకి తెలీదు. నేను బాగా ప్రాక్టీస్ చేసిన టాపికే కదా, నేను చేసేస్తా అన్న థాట్లో ఉంటారు. బట్ ఇట్ ఈస్ లెందీ అన్నది మనకి చివరి వరకు తెలీదండి. అండ్ లాస్ట్ బట్ నాట్ లీస్ట్, నెవర్ లీవ్ ద లాస్ట్ క్వశ్చన్. ఓకే, దట్ ఈస్ లైక్ 6th క్వశ్చన్. చాలా మంది అనుకునేది ఏంటి అంటే 6th క్వశ్చన్ వదిలేద్దామని. దేర్ ఆర్ మెజారిటీ ఆఫ్ ద పీపుల్ లైక్ దట్. బట్ 6th క్వశ్చన్ ఈస్ అ టైమ్ సేవియర్ క్వశ్చన్. ఫర్ 5 marks hardly you will get 1.5 pages, that's it. So all those things are time savior things. Anyways, hope you have enjoyed the session. మిమ్మల్ని మరీ ఎక్కువ హెడేక్ తెప్పియలేదు అనుకుంటున్నా. Of course, 2 to 3 people have slept very hardly in the classroom, undoubtedly, especially in the afternoon session. So anyways, so got clarity to each and everyone with today's session. So if you are having any doubts, you can please be in touch. Nothing great at all. Anyways, thank you. Session completed. All the best for your main examination. I hope and I pray that everybody of you should clear in this attempt at any cost, or at least getting exemption. Anyways, bye ma. All the best.